We're back.
Good morning, sir. Thursday.
Yeah.
Downslope.
All day.
And for me, this is a good time because Fridays, I love month-end trading. I know I talked to Ty, he's got nothing to do with anything. Month-end in the FX space is usually, it's like everything. It's like he looks at options expirations as big days. And we certainly had a big one on Friday.
Mm-hmm.
They're not always panaceas of movement, but I'd say 8 to 9 times out of 12,
there's
those monthly expirations, stuff to do.
Yeah.
So I'm excited to see where we go rolling into that. And it's too early to talk about setups for month-end plays, but
do you think there's any correlation between how volatile the month was and the volatility around the month-end flows? Because, I think I could anecdotally build a story around, February, and it was only 4 weeks. It was a very short month in terms of trading, 20 trading days. But it was probably one of the most volatile months that we've seen, not only for Forex, but for pretty much every asset class in the last several months. Does something like that catch large institutions and month-end flows a little bit off guard now that it's man, there's been so much tariff stuff, there's been so much crypto stuff, equity stories, is NVIDIA gonna, pick up this NASDAQ that's not crashing, but it's not picking up really off of its lows for the last 2 weeks of trading. And now it is, to your point, we have essentially 36 hours left.
Right, and these flows are driven by a lot of different participants. And a lot of times, sir, if the market, again, they're rebalancing. Mm-hmm. So I ran a fund for a number of years. You have to be very specific in your methodology. Mm-hmm. And if you don't follow your methodology, whether that be I buy on Wednesdays when the sun is up, or I rebalance at the end of the month.
Sure.
If you don't do that, you're violating your fiduciary agreement with your customers, and then they can sue you for better or worse. Mm-hmm. So they're compelled to use these times to rebalance their portfolio. Now, because of the movement, now we've seen a lot of strength in the dollar, then some weakness come through.
Yeah.
So what do they have to do? Are they light on their dollar euro, or are they short? I don't know.
That we have no clue.
No,
yet.
And this is where it gets to be a little bit of a dance. The markets are a little bit thinner, so if the flows are substantial, they'll have a little bit more elasticity to them. And you'll see, starting at 8:30 our time, you'll get a little spurt, and then it's faded. And you can see market makers and other players are kind of feeling out, okay, what's in the book to be done. And the guys who have to execute these orders are not idiots. They're chief dealers at the banks. So they know, they're going to set the table as best they can to get their business done, but they're compelled to do it around certain time frames. So that 10 o'clock window in our time, 10:30 window, 11 o'clock window.
This is all central. This is pretty
central
much,
time.
And I don't think
so
any
it's
coincidence.
this game of chicken where they don't want to turn their cards over. Mm-hmm. They actually want to even get the market thinking possibly the other way and catch those guys off guard. Because I did this, and it's all a game of cat and mouse. And sometimes you're right, and other times it's like, shit, I'm behind. Now I just got to go bang them out. And then you'll see, dollar yen really start to move. It's like, God, they're eating through offers like they're going out of stuff. Yeah, he's got to get something done, and it's got to get done by 10:30. So it's just things to watch. Whether you're trying, the harder part is trying to guess what's the flow going to be. Is it going to be buying yen for those 2 hours? That's a tough guess. Looking at where the market maybe gets to a point that's fadeable is interesting.
Yeah, and
so you look at a market like this, and now J.P. Morgan came out. There's dollar buying that needs to be taken. And J.P. Morgan does an analysis, and they've already said in Euro, in Kiwi, and Aussie, there's dollar buying that needs to be, AKA there's currency selling that needs to take place for month-end purposes, for rebalancing purposes for funds. You listen to that. I've never gone back and seen how many times I've been right or wrong. It's just an interesting takeaway, and you'll watch to see how the market shapes up. Now, unfortunately, you would think these guys, well, let me just do it 2 days ahead of time and I'm done. And nobody knows it's coming. That violates, again, the terms of the way you raise the funds. So you can't do that. You're obliged to do that around the London close, the London fix, they called it, which is at 10:30. So it is just a little bit of a game of back and forth. If we see selling come in here, and it really, and I should know this, but they did have an opinion on dollar yen. I'm not sure what it was. You'll start to see that play through a little bit. Now, sometimes, like last month, we went through it, and there was barely anything that went through between 10:30 and 11. Sometimes there's no rebalancing to be done. For me, trying to guess it ahead of time, like jumping out, oh, well, Morgan says there should be sellers, so I'm going to get short, that's a tough game. I look to it more for, are we getting extensions out of ranges that are driven by price-insensitive players? What I mean is, guy doesn't care what the price is. He's just got to get a certain amount done. And does that provide an extreme that gives me an opportunity to contra-trade a little bit?
Yeah. And
So hopefully not too tangential an explanation, but kind of looking at where and what you'll see is, even if we look at this chart, all of a sudden we get a sell-off down to the low 148s, right at 11.15. For me, I'm buying that. And I'm buying a little bit more. So is every other chucklehead like me. And if that doesn't start to pay, in other words, that market doesn't get that bid back, we're all in the same boat. That trade will get stale, and when it rolls over through 148, there'll be more to do, and you'll have to get out. So there is no risk-free trading. This is not risk-free trading. It's just looking at another angle. You talk to Tom, he's like, you're a complete idiot. None of this makes any sense.
Sure, and it'll be especially interesting because the last several weeks there's been so much volatility in these markets, and we'll look at dollar CAD in just a second because that's been another one that has been super different than this yen piece, super uncorrelated. Obviously, CAD and yen are almost always pretty uncorrelated, but just like the difference in the movement has been wild over the course of February. But my point being, going into something like month end, where there usually can be some volatility, like you say, Pete, around the end of the London session, where the U.S. and Europe kind of overlaps in that 7 a.m. to maybe 10, 11 a.m. Central Time window. I wonder if volatility will beget volatility here, and we get, instead of 20, 30-point moves around the month-end flows, it's double or something like that.
I always put on a kicker, and this is one of the weird times where I always talk to people, don't use time as your guidance for a trade. Price should determine whether or not you stay in or get out. None of us are smart enough to know when the market will move. This is a time-based trade. You take the extreme. If the extreme doesn't capitulate, in other words, they marked it up with this price-sensitive buyers, and the dealers mark it down, then you've got something. But if it sits there, you and every other boy genius that have tried to fade this move are all in the same position, that you've got on for basically one reason, and it's a race then to get out.
Yeah, and we'll actually do a nice piece in just a second about, you might be saying, how does Pete know if it's up or down or sideways, if you're buying or selling or whatever? We don't know where any of these markets are going to go. It's the mechanics that you set around when they do move one way or the other. Because, yeah, I mean, you look at this market here in dollar CAD, and again, I mean, this is the hourly chart for February, and the amount of ground this market has covered throughout the month. And of course, you had the huge move to start the month all around the Canadian tariffs. They're coming in. Actually, they're not coming in. We're punting them down the line. But what's also interesting, Pete, is not just, oh, they get up to 148 for the first time in more than a decade, but they bring the market all the way back. They get down to 142, and they've bounced all the way back to 143 half. In any given month, a 200, 300 point range like we've seen outside of that big outlier is a big range for this market. And so we're going into the end of the month here in a market like dollar CAD, not just like kind of, drifting lower. It would be one thing if they went up, they printed, 147, got close to 148, came back down to 143, and just kind of drifted between 143 and 142. They got all the way down under 142 and now bounced back to what were some highs going into all that tariff event around 143 half. And so now everything is on the table from 144 plus to 143 minus, and being equipped to be on either side of that trade around month end is what we're talking about. From your standpoint, just to wrap up that timing piece of it, if the trade is between 7 and 10, 11 a.m. Central Time, when is it like, okay, for better or worse, I don't really want this. Let's say this dollar CAD market moves down to 142.75. You get long if you're a contrarian, or you get short if you're a trend follower, and the market kind of stays around there, and now it's noon Central Time, and now it's 1, and the market's closing in 4 hours.
So between 8:30 and 9, you'll start to see a little bit of wiggle. When the order flows really, again, they've got to tie and justify against these time lines. So they'll do usually some of the business at 10, a big chunk at 10:30, and some at 11, trying to spread it out a little bit so they get better fills. You'll start to see, if there's stuff to do, you'll start to see the market move, because these guys will start to lay it out a little bit into the marketplace. How far, how fast it moves depends on how much they have to do. So I'd like to give myself that window of, okay, if I'm starting to see all of a sudden dollar Canada is, 50 bid, 52 bid, 60 bid. All right, you're starting to see it, and it's 9:45. That's telling me something. Somebody's out there got something by. If it continues up, then you start to think about, okay, you'll see a batch of it, usually at 10 o'clock, see a little spurt, peak, and it will hold. You'll see another peak at 10:30, and a final one at 11. That's one you probably want to look at, and if it turns, great. You catch that for 20, 30 pips of downside move. If you're sitting on that at 12:30, you've got a problem.
Yeah.
Because you're not the only guy sitting on that, and you put that trade on for one reason. Nothing to do with relative values, nothing to do with anything. This was just a kind of a month end, somebody's got to do something. I'm trying to game it a little bit system, and you just don't hold on to it. You dispense with it.
And especially
because that doesn't, the problem is the extreme is interesting. Is it an artificial extreme? No, it was driven by a different set of participants. But I've seen it more often than not. If the extreme sticks, you see it trade higher towards the end of the day, and Sunday night it opens even higher. Don't let that become something different than it is. That's not your core position. That's not your core idea. That was just a funds-driven opportunity. Move on.
Let's move on to a segment now over in our PowerPoint, and we'll talk about something that I think is super relevant. How to trade volatility in Forex. Pete, you've been doing this for a number of years, but every year it seems like probably since you've started, you've gained more and more tools to how you actually are measuring what it is you're doing in these markets. Because at the end of the day, going back to your first days of trading currency futures or whatever, you're trading price, you are trading volatility at the end of the day, no matter what your function is. Because if the price was one price and there was no volatility, there was no deviation of prices in the Forex market between euro and dollar and Canadian dollar, there'd be nothing to do there, right? And so going back to your earlier days, you're always trading volatility, but today we're putting some new tools around it.
And again, we had little point and figure charts we actually did manually in the pit, and you did see guys starting to come in with looking at running volatility reports, not just the price options on underlyings, but looking at that. smart guys are figuring out again. Let the statistical edge come from the performance of the product. And what I mean by it, the attribution, the dynamic nature or volatility of the product at that time.
Yeah.
Those guys were early adopters of what we look at as essential tools to do anything for clarity.
And now it's interesting because you have so many. It's funny because I wonder, just as a quick aside, if back in that time, since there were so few people in that market, even global, Forex, huge global market, but even globally, I mean, we're maybe talking about thousands of people,
Maybe.
like across tens or 100 institutions. And now, obviously, it's bigger. Everything is bigger, more people, yada, yada, yada. I would imagine at that time, so many people were using relatively similar, the same tools, that certain prices would kind of hold until they didn't, obviously, and there were huge crashes. Now, there are so many. I mean, every platform has 30 technical indicators. Everybody is selling, you know, I've got this AI bot that is doing this, and so there's so many
once.
the AI agents in crypto that you love. There's so many different tools now that, if anything, it might be, one, it's a more liquid space, and two, maybe there's even more edge because not everybody is using the same stuff. But I do want to get to something that is really core to almost anything, because, again, volatility is the name of the game. We talked about the most volatile pairs in an earlier episode, but I just wanted to bring this back just to show the most classic way that everybody universally measures volatility is with a historical volatility number, the percentages that you're seeing here, or an implied volatility number, percentages that are derived from options markets. And what this number essentially tells you is, you're looking at dollar peso up there at 17.3%, is given historical prices, this market is expected to move 17.3% on an annual basis, plus or minus, in the next year, given historical prices. But that comes with a 68% confidence interval. And so it's saying essentially, okay, let's look at the last 30 days of data. And the last 30 days of data would tell us that there's about a 68% chance that dollar peso in the year moving forward is within a plus or minus 17.3% range. Now, of course, there's a range outside of that. There's potential range outside of that, and so on. And all of these things look like this standard distribution here. At the end of the day, you have 2 sigma moves. This is what people are talking about. 3 sigma moves. A market that crashes either up or down outside of that 68% interval. But for you and me, Pete, we use that 1 standard deviation. A lot of options traders use it. Scalpers. Again, it's so core to so many Bollinger Bands, all these different things.
What's great about this as a trader, especially a product indifferent trader like we are at Tasty, how can I take, I'm a euro dollar trader, euro FX trader. 35 pips is my range. It works for me. That's where I look for my extremes. I go to another product that has either lower or higher volatility. Do I take that 35 pip scalping strategy? Well, if you take that into a market that has twice the volatility, that's not going to be a very productive strategy. This is a tool that lets you normalize that comfort level around that 35 points to either a more volatile environment or a less volatile environment. It's a really powerful tool to give you that same input, but across any product you choose.
And I'm sure, again, you alluded to guys back in the trading pits that were
we figured this out the hard way.
But I was going to say, you would figure this out by, like, it would
by
be
getting run over for 3 days.
Well, but also years of experience of being like, that euro-dollar market moves around 10% every year. That Aussie dollar market moves around 15% per year. What does that mean on a daily basis? And then, when the market changes from this year to next year, you get run over day after day after day, or you don't trade for a week because you're out here and the market is actually less volatile. Whereas now all these things are computed in real time. Every platform has standard deviation functions and everything else. And we have the numbers here for you from one market to the other. Again, these are some of the most volatile markets in Forex for the last several months of trading here.
That's a great Canada number.
Yeah, and I wanted to dive into that dollar CAD number. And again, just really quickly, so what we did here is exactly what Pete just kind of highlighted, which is like, okay, the percentage number is great, but I'm not waiting. It's not like, oh, it's January 1st of 2025. I'm going to just watch this dollar CAD market, and the minute that it gets outside of 9% to the downside or the upside, I'm just going to go all in, and that's going to be my trade. We bring it down into the daily here. What is the daily standard deviation? And we did it in terms of points in these different markets. And yeah, to your point, Pete, I mean, dollar CAD, a lot of years can be one of the least volatile markets out there, moving right now about 80 points in a given day. And here I'll just lay it on top of the standard deviation chart here, the normal distribution, sorry. And so what we use with this 68%, this one standard deviation, and you can see here it's plus 80 points on a given day or minus 80 points. It's just a starting place, right? What's an example of how a trader like yourself uses these numbers?
Well, and that's a great question because, okay, 81 points. Do I go from the previous day's close? Because the markets have been trading for 9 hours.
Sure.
Or do I go from where we are right now before the event risk, whether it's unemployment or whatever?
Yeah.
Is there any right answer to that? No. I think you look at if you've centered up in the middle of the range, that answers your question for you. If you're 40, 50 points higher, it's a little bit different exercise. But for me, this is what I love about this is, okay, on a normal day, if we're getting Trump tariff or dollar weakness, bond strength, we get 80 pips on either side of a reasonable middle point from yesterday. There's some interest for me being a contrarian. If it's a binary event risk, non-farm payrolls, whatever.
Canadian unemployment.
Right.
Yeah.
Now, not the tariff stuff, because you don't know when that's coming out. I take that number, depends how aggressive I want to be, and maybe I'm looking for, I want to sell dollar Canada because it's had such a run up. I may take 1.5 times that number, but I'll use 2 times that number on the downside.
Of course, yeah.
And it's as easy as that. So you've got the core number, how you tweak it, rather than thinking, okay, where do I even start? And then the proclivity is to go back and draw lines on the chart. And I'll tell you, if lines work,
hard.
use it.
It's really hard.
This is far better mechanics.
Well, for day trading and for scalping, this is a great place to start.
Absolutely. And we will continue to deliver more and more. This is, and I need to be careful when I say that, this is actionable trading intelligence. Me drawing a line, a cup and a handle, a doji star, or any of the other stuff. And I'm not bad wrapping technicians. This is useful as a trader.
Well, you have to give in at some point to the fact that all these markets are truly random, and all you can hope to do is be informed about them and go from there.
Yeah, this is telling me 20, almost a third of the time I'm going to be wrong.
Yeah.
It's going to continue to go.
Yeah, exactly.
But if the world lives on 50-50 bets,
it's a nice piece of edge.
That's a nice piece of edge.
And the last thing that I'll say is that it also is the great equalizer, to Pete's point. Not only if I want to trade multiple markets within an asset class, but outside of asset classes, but also right now, you've got a commodity currency market. Let's take a look at that. Aussie only moving around 30 points. Kiwi only moving around 30 points. And their commodity currency brother, Canada, moving double, almost triple that. And so you got to stay tuned to these things because, to your earliest point, Pete, every market is not the same. Every market from week to week is not the same. And so it really is the great equalizer to let you know, okay, euro dollar, the opportunity's around 40, 50 points. But for, Japanese yen, it's closer to 100 points. So it's interesting.
You look at this, the New Zealand and Aussie numbers at 30 basis points. There's not a lot to do with that. There is, if you have an opinion and you want to buy us, continues to be on sale, irrespective of what's going on, which is a little problematic from a tape action. It really hasn't been able to hold on to a good bottom. But if you want to pick it up cheap, and month-end flows give you a 60 pip downdraft, 2 times the standard daily range, still a tight range, but you can use it for that.
It's abnormal. It's an outlier. It's something to look at. But yeah, that'll do it for today's episode. Tom, Tony, and Vanetta coming up next. Thanks so much for watching. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, can you feel it?
you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Friday to you both.
Hello, we made it.
We did. Sosnoff, you're looking fine this morning.
It's going to be 50, so I got the guns out.
I could see that. That's just what we need on a Friday to get us going.
Yeah.
Into the weekend.
Tom, I have been lifting weights. I do strength training like 3 times a week now. Do you want me to get you on my muscle mommy plan?
Muscle mommy.
Yeah, you want to become a muscle mommy?
Oh, my God. You could be the leader of the muscle mommy gang.
I like muscle mommies, but no, I don't want to be a muscle mommy.
I don't either, to be fair. I just want to get, toned and in shape. But shout out to the women that are like legit muscle mommies, though.
I like it. Can we come and watch?
You want to come to the Planet Fitness on the South Side? Yeah, come on.
I would pay.
I don't go to a fancy gym. Like it's not that exciting.
I would pay to see Tony at Planet Fitness on the South Side.
You can find me at any Planet Fitness, anywhere, especially on the South Side. I'm not there of my own free will.
Hey, we might have to take a road trip to Lem's because it did get the James Beard Award. And
Lem's Barbecue, historic location. I believe it's on 75th Street here in Chicago. My parents always stop on the way out of town when they come and visit me.
Do you know that I've only been there once, and it was about we were in where's that? Bridgeport. No, not Bridgeport.
Yes.
Beverly.
Okay, those are 2 different neighborhoods.
I know. We were playing golf at Beverly, and then we took a drive down to Lem's, and it's been there forever.
It has.
Yeah.
75th Street. You're 100% correct.
Yeah.
Yeah, no, I've been there.
But we're gonna have to take a drive.
1954, Sosnoff.
Yeah.
1954.
I don't know if Leon's is still around, but I used to love.
That I don't.
I used to love Leon's, and they had one on the north side on Clark Street, and then they opened it up on Ashland, and then they both shut down. But
yeah,
Leon's Barbecue is still around, I believe.
Well, it's not on the north.
three locations. They're all on the south side: Wabash, Archer, 63rd Street.
Yeah, but I used to love Leon's, but it was the first time I ever had rib tips. Was Leon's
rib tips? Yeah, I gotta get you some rib tips on the white bread with extra sauce.
They don't do rib tips like Carson's doesn't do rib tips anymore. They used to do it by the bucket. They were great. They don't do them anymore.
By the bucket?
By the bucket. Yeah.
I don't remember Carson's having rib tips.
Oh yeah, they used to do them by the bucket. We used to pick them up, bring them down to our office down at the SIBO, and it was sloppy. It was ugly. It was
I think the first time I ever had rib tips was Leon's, and it was because of the what was it, the Navy Pier or whatever that's called. What was it called? Taste of Chicago.
Oh, Taste of Chicago. Oh yeah.
And Leon's won the barbecue competition or something like that. I forget what year.
I don't know, but they used to have they pour the barbecue sauce over the white bread with the rib tips. It was pretty damn good. They got me.
Yeah, it's also why you have your cardiologist on speed dial now.
They had me at hello back then. But I haven't been to Lem's. It's probably been, I have to say, it had to be in the 90s, so 30 years ago.
Yeah. Come on down to the South Side. Let's go.
That's a long time ago.
Yeah. I don't get to 75th Street too often.
I mean, you play Harbor Side. It's right there.
No, Harborside's
13th.
Yeah, like
113th,
right.
Yeah. Well, you got to go past 75 to get to 113. You know what? No, okay.
Yeah, but you getting off on 75th Street and going west is not exactly
it's fine.
We got to take Tony's car when we do that.
Oh, it's fine.
Yeah, you're going to have to take the pickup truck for sure.
You got to take the pickup truck. Yeah.
Well, you're going out for dinner tomorrow, Tom. Where are you going? What kind of food?
I don't know yet. I don't know.
Oh, okay.
Wait a minute. You're going out to dinner tomorrow too without me?
I'm not. No, I'm not. I'm not going with the boys.
Oh, okay. Oof. Thankfully. Oh, yeah. Well, tonight you're babysitting, right?
I'm babysitting tonight. Yeah.
Ugh.
Very.
But you're just in charge of the food. You're not in charge of like the child care.
I'm in charge of the food, the dogs, and security.
Oh, you're security now? Let me see those guns.
Too funny.
Yes, I have food, dog duty, and security roles.
Oh, you're good.
Would you take like a infant first aid class? Like you should take training, like, heaven forbid, but you should take a class is what I'm saying.
No, I'm not going to take a class. I took a class like 30 some odd years ago. I'm not taking another class.
What?
That's it?
I mean,
that's where you draw the line?
You know everything there's to know about babies? You're basically Dr. Spock?
No, but I don't know. I don't feel like I'll be in that situation.
Okay. Well, no one feels like they're going to ever be in that situation, but
Ain't
an
it
ounce
the
of
truth?
prevention is worth a pound of cure.
That's right. That's right.
I know more.
I remember my kids were first born. I went through all the CPR crap and this and that, blah, blah, blah. I did what every other parent did. I just stuck my finger in their mouth and pulled it out.
No, you got to tip them down and then.
It doesn't work in that moment. In that moment, you stick your finger right in their mouth, you're pulling it right out.
They're not a dog.
Have you met Nick?
Oh, poor Nicky. Your son is sick right now. What are you doing for him?
I know he is. I think he gave me his cold maybe a little bit. I don't know.
You got to send him some food or something.
Oh. Mm-hmm. He got 2 legs. He's fine.
Poor Nicky getting the shaft. Like you were meanwhile online looking at Camaros to buy Vinny, and your son is on his deathbed, and you won't even. Come on, man.
Oh my God, you're savage sometime. I forgot how you could be. Oh, that hurts so bad.
I am offended on behalf of Nicky.
I usually send the girls something when they're sick. You're right. I should send something to Nick. He gets forgotten. You're right.
Yeah.
Okay. You shamed me into it.
He's a good kid, and you should take care of him.
Yep. I mean, I would think you'd have somebody else to take care of him, but that's a story for a different day. I'm not going there. Mm-mm.
Okay, well. Tom, do you have a webinar last night? You have a podcast? How'd that go?
No, I do today.
Oh, okay.
Today and tonight. Yeah, I got a crazy schedule today. But no, nothing public last night. We were just hanging out, relaxing.
Well, to be fair, you boomers cut out early, so you guys pieced out right after lunch, and you're like boomers out, and you like skipped out of the office together holding hands. Meanwhile, the rest of us are like, "What the hell just happened?"
What'd you call Tom when he just comes for lunch and then leaves?
Oh yeah, you're a lunch badger.
Lunch badger. That's it. That's what we were.
Hey. I'm the only one here.
Yeah, you're gonna be there for an hour and then you're gonna leave. Big whoop.
I got to be honest with you. Being a lunch badger yesterday wasn't worth it.
No.
I liked the banh mi. It was actually it wasn't bad.
It was okay. It was okay. It was better than I thought it was going to be.
Can I tell you the real gag of the century? Because, I'm whole like exercising, trying to get macros and protein and fat and carb, whatever. So I have like a little app on my phone. And so they had some sweet green salads. But believe it or not, the salad that they had was more unhealthy than just eating the banh mi. So I just ate the banh mi. So I was like, that's weird.
Yeah, that's always how it is. And Sadnov, I got to tell you something. There are some people right now in production that are about to walk out because they're there too, and they're there every freaking day, Sadnov. If that's right, I'm talking about James, I'm talking about John, and he has to do not resuscitate. Beth, I'm talking about all the crew there. They're there every day too. So why don't you give them a shout out?
Who?
Thanks, Tom.
Oh, John. Oh, John.
Just turn off his camera now. That's all you have to do.
Huh?
Make it real easy.
No, just get real close.
Yeah, I was gonna
Just
say,
zoom
better
in.
yet, zoom in on. There you go. There you go. There you go. There you go.
Oh, I like this. Tasty after dark. Yes.
Now turn the camera on and zoom real close in on him or something like that.
I kind of like this tasty after dark thing.
This is an upgrade.
Now zoom in. There you go.
Yeah,
Get real
enhance.
close. There you go. There you go.
You remember when we were going to do tasty after dark and we just never pulled it off?
Yeah, the Ocho channel.
Because the stories that the devs tell about their nocturnal activities was disturbing.
I agree. I don't think I need to hear Chris I tell his story about whatever he's going to tell a story about.
Oh,
Right.
come on. It would have been good. I like the idea. I really do.
Well, they're busy now. We're even busier than ever. So,
I think we could still do it.
it's kind of humorous, but.
Okay.
What's on deck for you this weekend? You driving to Joliet?
No, but we do have three games this weekend. Mount Prospect, Highland Park for 2. So yeah, we got
Is this the last weekend? Is it over after this?
I think it's over the middle of next week. I think we have another game or 2 the middle of next week, and then we're done. Like these are tournaments that we're playing. Yeah.
Okay.
Yep.
Well,
Then it's
good
all
luck
gone.
good luck to the Stars. Stars, right?
The stars, and then spring hockey starts like in the middle of March. Sometime
Okay, no,
like
I'm
that.
already done with this.
Yeah, I'm already done with this. I don't need any more spring hockey.
Sad enough, they'd like you to be a sponsor of the jerseys. Hope that you'll be able
No,
to do that
thanks.
this year. I know your check came in late last year. That's why we couldn't get the Sosnoff name on the jersey, but we're hoping to get in early this year.
I do like that today, like the end of the month is on a Friday, because I think the year started like on a Monday. And then like that was like nice. And then I like that this month ends. I like it when it all lines up. I don't know.
I agree with you. I like when the end of the month is on a Friday.
Yeah. And I like when the start of the month is on a Monday. I like it. It's all just like makes my brain happy.
Yeah, it makes all people with ADD happy.
I don't have ADD.
I know, but it does make all people with ADD happy.
I think you mean OCD.
OCD, yes, OCD. ADD, OCD, all the things that we've created over the last couple of years.
Just real fast, I have a funny story because I forgot to tell you this. So when me and my parents, we flew out to Salt Lake City last week, obviously flew out of O'Hare, and I was going through the TSA line, TSA pre, holler at your girl, and 2 of the agents were arguing with each other, just like in a jovial way. And the guy was not yelling, but he was like talking to his female coworker, and he was like, "I cannot believe you have never seen John Wick." And he's like, that's so stupid. And I knew instantly why she hadn't, because I have the same reason. So when I got through the little metal thing, I gently tapped her. I was like, "Excuse me, ma'am." I was like, "I also have never seen John Wick." And I'm like, "Is your reason because you will not watch a movie where the dog dies?" And she's like, "Yes." And I'm like, "I got you, girl." She's like, see?
Oh, now you spoiled it for everybody else.
So I have never seen John Wick because I will not ever watch a movie where the dog dies.
Let's just say he gets his revenge.
Yeah, I
Yeah, it
know,
sure
like
does.
1,000 people later, but I can't sit for that trauma.
Well, they don't really show
I'm
it.
still, even just thinking about it now, I'm going to cry my eye makeup off.
Yeah. I mean, the first John Wick is the best by far. And
Okay.
the first,
How many are there now?
I don't know, there's a lot, like 3 or 4.
Okay.
Well, I think there's more than that. Maybe.
But
I'll find out.
I think there's 4. The first one's the best. But and
Okay.
You're right. There are 4.
the second one's good too. The third one gets a little worse. The fourth one's not good. But
I guess that's why. That's why the 4th one was called John Wick Chapter 4.
But the first one and the first half hour of the first one is the best of every part of it.
Okay, I'm still not gonna watch it.
You should.
I'll watch documentaries and shows about people getting murdered all day long. That's like my hobby for me. But I can't when a dog. Nope.
I mean, the first half hour of the first John Wick is one of the great, cinematic achievements. I'll put it that way.
Okay, well, me and Leticia, the TSA agent, agree. We are simpatico.
All right.
Anyway.
Oh, that's funny.
Well,
you don't get to see the Baba Yayo. You don't get to see that part.
I will not be watching John Wick this weekend. Anyway, hey, we got a great show for you today. No one dies. At the top of the 8 o'clock hour, we got the weekend stocks. Jamal is in recapping this crazy week. Market meltdown accelerates. We had NVIDIA earnings. We had a lot of down days in a row. We had an expansion of volatility. Jamal is going to recap it all at 8 o'clock, and at 8:40, we got Fast Market. This is where viewers write in with their trade ideas. And Tom yelled at everyone yesterday, make sure it's liquid.
He was a little uppity. Mm-hmm.
Yes. Viewer submitted trades. That's going to be Fast Market at 8:40. Then 9 o'clock, Market Measure, exploring BPR. Exploring BPR volatility in different puts. What does that mean?
On the Market Measure?
Mm-hmm.
Oh, it's actually a really good one. It's the research team put it together because Julia's on the road working on our software. She's in Krakow. So they put it together.
Wow.
Yeah. So they put it together. It's a pretty in-depth volatility discussion. I think you're gonna like it.
Okay. That's cool. How come I don't get to go to Poland?
If you build software for us, you can go to Poland.
Hooray! All right, then finally, my personal favorite around 9:30, live from the trade desk, big boy Scotty S. Scott Sheridan, counting down all the top trending tickers over at Tasty Trade, and I believe taking your questions today.
Absolutely, yes? 100%.
Yes, yeah. If you have questions on the brokerage side of the business, we would love to hear from you. That's at around the 9:30 time slot. But hey, in the meantime, in the between time, I got a crap ton of news. You want your daily dose?
Sure.
Beautiful, sure.
Yeah. All right, hit me with my theme music. Let's go.
Our leading story. Breaking news. Across the wire. Leading story. Top story. Just in. Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's February the 28th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
First of all, you know I watched Last Call. I heard you talking some smack about me, like, oh, Vanetta's going to come in with some headline about this, oh, we're in a bear market. I can hear you, you jamoke.
That's
the wolves have ears.
That's exactly what I said. I go, Vanetta's going to come in tomorrow with some crappy headline about, oh, man, we're in a bear market, you know.
Death cross.
Yeah. Some crazy, dumbass article. Yeah.
Well, let's put it on the board. Yes, no, extremely fearful stock market sentiment shows investors scare easily right now. Fear has set into the collective mood. I don't care about this BS headline, but I do care about the expansion and volatility and what you guys are doing or adjusting that reflects that. Let's talk about that specifically.
Yeah, volatility certainly creeped up. 1945, it's up 22 cents today. This is about as high as it's been. We have seen early levels like this in January that quickly came back, but not yet.
Tom, volatility?
I mean, it's up there. Would you like me to say that? It's finally we're at.
But what adjustments does this cause you to make in your core positions, if any?
What adjustments? None.
Yeah, but if vol expands this much, like you got to do something, right?
Well, I put on some more positions.
Okay, then. Like in what?
Everything has high implied volatility. A lot of stocks that you wouldn't even think would have high implied volatility, like Apple, have an IV rank of 50.
Ooh,
Tesla's
Apple.
IV rank is probably closer to 80. So you've got a lot of stocks out there.
Real fast, what are you doing in bonds?
Nothing right now. We're hoping they go a little bit lower, so I'd like to buy some in the 115 handle. At 117, almost 118, I'm flat.
They traded over 118 this morning. 118.10 is the high. They're about 12, 13 ticks off of that.
Shifting gears to currency, dollar firms as Trump's sheriffs loom, yen set for a monthly gain. The dollar drew safe haven support on Friday, and the yen was set to end the month with a gain of more than 3.6%, its best since last July, on heightened bets of more Bank of Japan rate hikes this year. Let's talk dollar, let's talk yen, let's talk euro, let's talk zen.
I mean, it's actually the dollar's actually down today a little bit against most currencies, small, and it's up a little bit versus the yen. So it's actually the opposite of what you have up here, but it's not a big deal.
Well, no, the yen is still set for a monthly gain, and the dollar is still
the yen
firm.
is set for a monthly gain.
So where am I wrong again?
It's amazing. The yen is set for a monthly gain.
I know, that's great. What about like your euro, or you're doing anything in Canada, Mexico?
Yeah.
Pound.
Yeah, we're doing something in all of them. They're all higher for the month. The dollar's been pretty weak, but I assume I'm staying short the dollar. I don't care what this headline says. I'm bullish on the yen and I'm bearish on the dollar.
This is pretty much the first time in recent history, I'm talking about the last 6 months or so, where you've had that kind of move where the dollar's lower over the month than the euro and the dollar. So maybe it's day one, Sadnov, or month one?
I mean, maybe month two. I mean, the whole year's been good so far. For people that are short dollars like we are, it's been a good year so far. I mean, last year was kind of crappy, and the year before was kind of crappy, but this year's been good. I mean, we're committed to that position. I'm not flipping the cards over.
Commodities, kind of a crapshoot yesterday, but oil seemed relatively steady as investors assess fallout from U.S. sheriff threats. Oil did hold the bulk of its largest daily gain in more than 6 weeks. What are you doing in crude oil?
We're short a bunch of strangles, and not I shouldn't say a bunch. We're short some strangles, and we're just kind of hoping it. What's it doing today? It's not down 90 cents.
It's down. That's a 1.25% move.
Yeah, it's right in our range. We're right there.
Okay. All right. Hold. Hey, in other news. Oh no, pop-up ad. Hold on. One email can change my crypto life. Okay. Bitcoin ETFs record over 3.6 billion in outflows over just the past 2 weeks. The market has witnessed massive outflows. Investors have consistently withdrawn their funds amid minimal or negative price movements for Bitcoin. The ETFs, like I said, saw 3.6 billion in outflows. Cause for concern or just sort of recalibration of assets?
I mean, I don't have it. I mean, on this network, we've been saying that we thought Bitcoin was going to get into the mid 70s, low 80s to mid 70s for about the last 2 months. I think we're probably the only people in the world that have been bearish on Bitcoin, to get to those levels. I thought down 25 or 30% was in the cards, and it's actually happened. It traded down to about 78 last night.
It's 78.6. You are 100% correct.
You have been chirping around the 70s for a while.
I've been chirping this for a long time. Low 80s, mid 70s. I think people everybody's long Bitcoin. I don't know. It just seemed like it was too crowded. How did they say
talked about how all the news was bullish. ETFs coming out, this coming out. Trump is a favor to Bitcoin.
The way we like to say this in the trading world is too many kids on the bus.
Yeah, buy the rumor, sell the news.
Yeah, too many kids on the bus. I also worry about Bitcoin as a single point of failure because of Michael Saylor and MicroStrategies. I worry about that more than anything else. That if MicroStrategies is squeezed somehow, I don't exactly know how, because I don't really know I really don't know or don't care about their entire model. But if MicroStrategies has to trade at parity and they have to lighten up on some of their Bitcoin because they're getting slapped or whatever it is, or because they're over leveraged, which I'm not even sure that they are, I worry about Bitcoin because MicroStrategies could start something really ugly in Bitcoin. I don't think it'll affect any of the other cryptocurrencies, but I mean they'll coattail it down a little bit. But like, I don't worry about ETH or anything like that. I worry about Bitcoin, and I worry about MicroStrategies taking down Bitcoin as a single point of failure.
MicroStrategy, in comparison to Bitcoin, which is down around 20%, just rounding, is down around 50%.
Yeah.
MicroStrategy.
Well, it should be. It should have double the beta of Bitcoin because it did to the upside. And it also trades, it was trading at one point at a 200% premium to Bitcoin. Now it's probably trading more like 100% premium. But MicroStrategies, to me, is the biggest risk to the Bitcoin market because MicroStrategies is a long-term capital management, when genius fails type thing situation, and nobody's really talking about it. I see when genius fails with MicroStrategies more than anything else. That's one of the reasons we haven't reloaded in Bitcoin.
Okay, that's interesting insight, and hopefully it doesn't prove to come to fruition because I think you're right. I think it could be really, really bad. Hey, in other crypto news, the SEC says most meme coins are not securities. They issued long-sought guidance on Thursday evening saying that they do not deem most meme coins securities under U.S. federal law. Meme coins typically have limited or no use or functionality, and most are akin to collectibles, according to the agency's Division of Corporation Finance.
Sure. Well, they got to protect their boss.
Got to protect the fart coin.
That's right. Got to get the fart coin going.
But at least this is regulatory clarity, right? So this is.
They're protecting Trump, but whatever. Who cares? Yeah, finally.
Finally, more meme coins for everyone.
Yeah, more meme coins. So now every idiot in the world can launch their own coin. We need a Batista coin. We need a Logan coin. For sure. I mean, everybody should have their own coin.
Yay!
It's going to be.
Have a double back.
It's going to be pretty soon. It's going to be like a business card. There's no more business cards, so you just give people your coin.
Okay.
Hey, here's my coin.
In other news, a booming stock market and robust savings rates boosted Americans' retirement accounts last year. Finally, a bright spot in financial news. According to the latest data from Fidelity, the number of 401k millionaires soared by 27%. That's people with at least 7 figures in their retirement accounts. I know you don't put a ton of stock in stuff like this, but I like to report good news when I see it.
Okay.
Bueller. No, that's it. That's the tweet. Moving on.
Yeah, I don't know what else to say.
Bueller.
Hey, in crappy news, the Consumer Financial Protection Bureau has announced under their new leadership that they dismissed at least 4 enforcement lawsuits undertaken by the previous administration. They had a dismissal of cases involving Capital One, Berkshire Hathaway-owned Vanderbilt Mortgage and Finance, and Rocket Homes. The Capital One case was particularly egregious. Capital One just didn't pay people the interest that they thought that they were promised on their accounts, and a lot of these other mortgage and home lending programs just blatant, manipulation and taking advantage of consumers. But these cases literally just got thrown out yesterday. I don't know who's going to bat for Capital One should have the freedom to fleece people, but this is where we are.
This is incredibly sad. This is one of the side effects of all the idiocy that's happening right now in Washington. When you get rid of everybody, you forget that, again, just getting rid of people does not mean you're getting rid of any waste. It just means you're getting rid of people. and the Consumer Financial Protection Bureau. I mean, you're basically saying here to Capital One, to Wells Fargo, to Citibank, to JP Morgan, to everybody else,
be as shady as you want to be.
Be as shady as you want. Just try not to get caught and embarrass us. I mean, this is, there's dropping the lawsuits against all these firms that clearly in the past they would be fined billions and billions and billions of dollars. It just sets the worst possible example. Like, what are you telling? What are you telling the street about the integrity of these financial institutions? Like, people don't trust.
They're not going to self-govern. They're not going to self-police or self-govern themselves.
People don't trust large financial institutions to start with. People don't trust Capital One. They don't trust credit card companies. They don't trust big insurance companies. And this just gives them this, you're basically just giving them, okay, hey, you get a free pass, you get a free pass, you get a free pass. I mean, can you imagine where Wells Fargo would be today if the regulators didn't step in to clean it up? I mean, this is so ridiculous. This is sad.
It is sad. Hey, moving on, a Stripe's valuation, the payment company that still has yet to IPO, they announced a tender offer for employees and shareholders that values the payments company at $91.5 billion. It's nearing its peak valuation of $95 billion from those halcyon days of 2021. What are your thoughts on just this juggernaut of a private company?
It is a huge number. I don't even know who uses Stripe.
I think lots of people do on the back end, right? Like it's just woven
I guess.
I don't know. Okay.
I don't know anybody that uses Stripe. I don't know. This is a monster valuation. I know a lot of people at Stripe are.
It's a payment.
Yeah, it's a payment. Right. I mean, they compete with like Square and all these other places and PayPal and everything else. I know they've lost a ton of management people. Like people have just been cashing out. But which I don't blame them. I have no clue. What this company's worth. I wouldn't buy it at $91 billion. That's for sure.
Okay. I'm missing a slide here, but just real fast, what did you do for Dell?
Oh,
not the singer.
I did good stuff in Dell.
Dell missed on sales but beat on earnings for the fourth quarter. They said they sold about 10 billion AI optimized servers in fiscal 2025, and they expect to sell 15 billion in AI systems in the current year. We
sold 2 calls and 1 put. As our ratio,
Dell's down about $7.
Yeah, when the number came out yesterday, it was up about 5. It was traded around up about 7. It traded 113, 114, and now it's down about 7. So it's had about a 14 handle range. I watched it when the number came out. Well, we sold Feb options, so they expire today. So we sold 1 put and 2 calls was our ratio, 95, 125, equidistant away. So I think it's going to be a home run.
Nice.
Yeah.
Huzzah.
Whoever's watching, at least it is, please.
Yeah, sorry. That's my fault. I just forgot to put that slide in there. Hey, I know you didn't trade it, but Duolingo also reported their earnings, and they forecasted annual revenue above Wall Street expectations, anticipating a stronger adoption of its subscription tier, which now features AI capabilities. The real reason I'm doing this story is that the Duolingo mascot got hit and killed by a Cybertruck, but he is now resurrected and gotten the attention of pop star Dua Lipa. Anyway, I'm following the whole thing on TikTok. It's very entertaining. DUOL BAT is the ticker.
Yeah, it's down $35 or so. We didn't trade it. Markets are just way too wide in there. I mean, they're multiple dollars wide. Not something that we would look at.
Tom, if you could learn any language right now, what would it be?
That's a great question. I don't think I'm capable of learning any language.
Well, this is a theoretical scenario anyway, so.
Right.
I can answer this. I'm going to apologize to Mr. Cioni. He was my Italian teacher for almost 3 years in junior high school, I believe. I've told the story. I learned chiude la porta because I was which is close the door, because I was the last person to walk into the room. I apologize. May you rest in peace, Mr. Cioni. I'm sorry. I was never able to learn the language of Italian.
Yeah, you should learn Italian. You should learn it, and then
they got those things now you can stick in your ear, and people talk, and you can just it translates it for you. I mean, come on.
Still learn a language.
I would like to learn another language. I don't think I'm capable.
If I learned the language of love when I was very young, and I think that's the only language that I need to teach you, my friend.
No.
But I don't know what language I would pick.
Okay, well, I don't know. Would it be like Spanish? Would it be like Japanese? You want to learn Mandarin?
No.
Like, this is theoretical. Like, if you could just instantly download a language and you could know it, like, what would you choose?
I think Russian would be cool. I think Chinese would be cool.
Because you want to be a Russian operative now? What are we doing?
You asked if I could pick a language. I think Chinese would be cool. I'd love to be able to speak Chinese.
Yeah, I mean, that takes like the longest to learn.
I know. I can't do it. I couldn't do it, but it'd be cool.
Yeah.
I don't know. I look at Kai. He knows Chinese. He doesn't look that happy. I don't think I want to do that.
Getting back to news, NVIDIA still on the move. It got bounced from the $3 trillion market cap club after shares fell more than 8% and then took the global economy with it. What's NVIDIA doing this morning, and what are some post-earnings opportunities in NVIDIA?
Even though you got the S&P's up and NASDAQ up, NVIDIA's a little bit lower, Tesla was a little bit lower, NVIDIA's down by about $2.
I think at 118, if you wanted to scoopy for like a little bit of a, let me see here, NVDA. Yeah, I think you could probably
118.20 and change right now.
What?
118 and 20 cents.
All right, I just bought some NVIDIA.
I'll say thank you, Vanetta.
Well, thank you when we get out of it.
I'll thank you. I'll thank you when I get out of it. Right. Right now, you just cost me 10 cents.
That didn't cost you anything, man.
Oh, see that?
Amazon touted its first quantum computing chip a week after Microsoft's unveiling. Our quantum computing expert is in Poland right now, but Amazon would like to eventually rent out access to quantum chips to third parties through its cloud division. I'm coupling this, John. Let's go to the next story. IonQ had earnings yesterday or the day before, and that hit the stock. And then all the quantum computing stocks were also pretty decently lower yesterday. I wanted to just talk about quantum computing real fast, about QUBT, RGTI, QBTS, all down like almost 10%.
I don't trade any of them, but
Amazon and Microsoft, since you named those two, they're both up small, about $1 or so after getting hit yesterday.
I think quantum computing stocks are going to be really interesting down the road. I mean, I don't know when you have to buy them. Maybe they get to a point of, what scares me is, like, on the one hand, I know we're a long way away, but I know the stocks are going to move way before that. On the other hand, I think of some of these quantum computing stocks, and I don't even know the symbols because I've never traded any of them, but I think of them like Lucid and Rivian and some of these EV stocks that had these, crazy moves. And, now they're trading for, $3 and $5. So I think of them kind of in the same way. I also think of some of these quantum computing stocks like we used to think of cannabis stocks, Like how could
that's a good example.
How could cannabis stocks go to $2? Like how's this stock? How's this possible to go from 300 to 2? And so I'm not ready to make any kind of commitment. I haven't traded any of these yet. I think at some point I will for sure. I'm not there yet.
Okay.
Yeah. Yeah.
In other news, Meta plans to release a standalone Meta AI app in its efforts to compete with OpenAI's ChatGPT. What do you think about that?
I think I think the competition among these AI apps is absolutely spectacular because nothing.
Not for the environment, but okay.
I mean, it's
good for the consumer.
It's spectacular for the consumer. It's spectacular for businesses because when Meta, Google, when all these OpenAI, when everybody goes and competes against each other, Microsoft, the consumer wins unless these guys all start colluding on cost and price. As long as this keeps forcing the prices lower,
Sure.
we all win. And
what is Meta doing this morning?
I have no idea.
Meta, that's where I come in, Vanetta. Meta is trading at 663, let's call it. It does look like it's up around $5 or so. But again, Meta's had a fall from grace here from around 700 and change down to 660 where it is right now.
Also, did CPI come out today? My bad. Something.
Yeah, it did. It boosted the even the S&Ps by about 10 handles, the Nasdaq by about 40 handles. Even the S&Ps up 20, Nasdaq up 37, Dow up 230. Only the Russell is unchanged.
Bonds sold off a couple ticks, but they're still up 8 or 9.
Yes, you are correct. Good catch.
Good catch. Skipping another story here, John. OpenAI is launching, because you like all these AI models, OpenAI is launching GPT 4.5. It's its next general purpose, large language model. ChatGPT, EDU, and enterprise subscribers will gain access the following week. It'll be rolled out first to those with ChatGPT Plus subscriptions. So, like you said, you already mentioned Microsoft. So just new OpenAI. Hey, in fun news, Katy Perry. Yes, that Katy Perry. Baby, I'm a firework. And Lauren Sanchez, who is Jeff Bezos' wife. They're married, right? Not just fiance, his wife.
I don't know.
And Oprah's BFF Gayle King are going to crew Jeff Bezos' next Blue Origin space flight. It is set to be part of a 6-person, all-female space flight. The New Shepard crewed mission is expected to take place this spring. It comes after Blue Origin successfully launched its New Glenn rocket for the first time last month. Congratulations, women in STEM, I guess. I don't know.
I guess. You win.
Just going to leave that right there. Hey, because Scott Sheridan is such a good influencer, Waymo has doubled its weekly robo-taxi rides in less than a year. Waymo is logging more than 200,000 paid rides every week. That's all because of Scott Sheridan and his viral video.
I think he does have a profound effect on people like that. I think you're right.
I think, yeah, right, 100%.
Yeah, 100%.
Those are facts. Those check out.
Yep.
Tom, I pulled this for you. Doritos is putting a twist on the popular sriracha hot sauce with a new snack. Golden sriracha chips feature a tangy and sweet blend of flavors that lean on the heat-forward taste of red sriracha, but also contain notes of yellow and green sriracha. Do you want to try them?
Not really.
But you love spice.
I know, but that
I'm not a Dorito person either.
I'm not a Dorito. I'm not a Dorito person. A, I'm not a Dorito person, and B, yeah, that's kind of too gimmicky for me.
Okay. Well, I tried, everyone.
It was a good try. Not going to lie. Good try.
Hey, taking a page from Major League Baseball and their robot umpires, the NFL will now use technology first down measurement system for 2025, moving away from the chain gang. They will use Hawkeye virtual measurement to determine the line to gain, and it will be the primary method for measurements, so you can no longer complain that the Kansas City Chiefs are cheating. At least in this aspect of first down spots.
It's about time they did this. They're so overdue for that 10 yards. They don't need two guys standing there with weapons.
With a chain.
Yeah.
Yeah.
Weapons.
Yeah.
Yeah. Yeah. No, I agree. I think this is great. I don't know why it took so long, but they're going to do it for 2025. Also, Travis Kelce coming back for his 13th season. 13 is a magical number in the Swiftyverse. So congratulations, TK. Best to ever do it. So there you go.
Beautiful.
Finally, today for my viral video, look at me being on time. Tom, did you know? Do you know what Tuesday is?
What Tuesday is?
The 4th?
Yes. So
May
yes,
the 4th
it's
be
close
with you?
to your birthday. Yes, it's close to your birthday. But do you know what Tuesday is?
You mean?
It's a very important day to you.
Is it Jenny's birthday?
Oh yeah, maybe. I think hers is the 5th. I forgot about that. Yeah, but not. You don't really care about Jenny, but no, Tuesday is Fat Tuesday. It's a little later this year, and Fat Tuesday here in Chicago means the Polish tradition of punchkis. It's punchki day on Tuesday, Tom.
I've been seeing those in the grocery store.
Oh, I haven't.
Yes.
I haven't. Now that Dinkles is out of business, I don't know where you get pushkis.
It's punchki, not pushki. The best is a little it's a little bakery like at 31st and like Archer in Bridgeport. That's where I go. But I mean you do you. But you could also go to Chicago's very own JPG. That's right, JP Graziano's has a new Chicago style punchki, and that is my Will Tom Eat It video for this Friday. Roll that beautiful footage.
They better not put Jardinere in there.
Makes you wanna go.
It is actually flavored. The custard, vanilla and chocolate custard is flavored. You can see the flex there with JP Graziano Jardinere seasoning. So not actual peppers cut up, but the seasoning.
Put your hands together now.
They are available for pre-order at JP Graziano right now, unless they sold out yesterday. It looks good.
Put your hands together now. Sometimes it hits you.
They are
When you
making
least expect.
with Jardinella the Dolce. It looks good.
I can't get into it. I like the pushki, but I don't like the
But it's just
Jardinere.
it's just the spice. It's not like actually chopped up pepper. All right. Well, I tried. Anyway, Pat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000. at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's take a quick look at the market. Even the S&P is down 14 handles, Sadnov. They've had a decent range of about 45 handles top to bottom. They got up to 5,900, just a skosh away from where they are right now. Down to 58.58 last night. They're about 30 handles above that right now. NASDAQ up 19, Russell down 3, and the Dow up 197. Still doesn't feel like it has that velocity of the upside to me, with volatility up 12 cents at 19.35 going into the weekend. Bonds up 11 ticks, back near their, mid-price for the day, but the highest that we've seen since we've been on the show. Bonds did get over 118.10. I think I said down 14 handles on even the S&Ps. I meant up 14 handles. I apologize if I did. Bitcoin down $1,600 to 82,000 and change, about 4,000 off of its lows for the day. Sound enough, the lows that we've seen for what looks like about since November of last year or so. Oil down 91 cents to 69 and a half. Gold down $30 is a good-sized move for those that are short gold the last 3 days. Gold hasn't had a downtick, what seems like forever, except for these last couple of days. Silver down 41 cents, also a big move, a little over 1%, almost 1.25%. Nat gas is down 2%. Commodities down, Sadnov. Market a little bit weaker. Bitcoin lower, a little bit of an asset sell here.
It's not pretty.
Yeah, not pretty is right. Not pretty is right.
I mean, and we've been talking for a couple of days about how sick the market looks. It doesn't look good this morning so far.
No, it doesn't, even though it's higher by 13 handles. I agree.
Yeah. That's the worst 13 handle rally, which means it's probably going to rally today, just so you know.
Right.
Because that's the worst 13 handle rally I've seen. I'm Tom Sazanoff. He's Tony Batiste. It's 7:53 in the morning. We're in Chicago, so that's Central Time. That was Vanetta Logan. She's done with her piece for this morning. And let's do it. Confirm and send. Emails that came into us overnight. Mm-hmm. Of the thousands, we picked 6 lucky winners. Winner, chicken dinner. Your email got selected.
Yes.
February 28th, last day of Feb. Last day of Feb. It's supposed to be 50 degrees in Chicago today, but tomorrow they said 30 is the high. So right back.
Oh, boy.
If not for the underlying financial fundamentals of an asset and the wider macro economy, what do you believe determines the future trajectory of an asset? Because we like to say that, we don't follow fundamentals. We're not technical. This is, we don't follow macros. So what determines the future trajectory of an asset?
I really wish I knew this. I mean, more aggressive buyers than sellers. The market itself usually lifts stocks higher. It lifts all stocks higher. For me, my macro view is price. And if something has an expected move of $30 in a time frame of, let's just call it a month, 45 days, and it's outside of that being like an outlier move, that would be my time for like looking to nibble on the long side.
This is a very tasty specific question, because one of the things that we have from day one of building Tasty Trade and Tasty Live, we have really spent our entire careers trying to be different. Not necessarily trying to be different. It's just the way we were raised in this industry, and we are not part of the norm. And we have long said from day one on this show. Now we mix it up. We have Tim Knight, who does some technical stuff. We have Ilya and Chris and Victor, and to a certain extent Jamal, that do some macro stuff. But for the most part, most of the time on the network, we spend in quantitative mode. And what that means is we actually believe that, of course, financial fundamentals contribute to long-term positive drift and things like that. And I'm sure that wider macroeconomy contributes to long-term positive drift and to everything that, goes into making stocks go up or down and everything else. But we believe that when looking at things from a short-term perspective, everything is priced into the market. So there's nothing that you can tell me about financial fundamentals that's not already built into every single price you're looking at. There's nothing you can tell me about a wider macroeconomy that can give or forecast or tell me anything that the market doesn't already tell me. So what we believe determines the future trajectory of an asset is a very subjective view of what we think is price extreme. And then we look at implied volatility rank to determine what the potential ranges are. So it's basically just all stats and probabilistic outcomes. And then we pick a strategy in a number of days to expiration. So our approach to opportunity is very different from everybody else. We think it's a numbers game. And that's it. So it's not that we don't believe that companies have fundamentals. We don't believe that there's an economy or macroeconomy view. We just think that if you want to study that stuff, fine, but it's not going to help you trade.
Yep.
Let's go to the next slide. So let's say you have a 16 delta strangle and you also sell a 30 delta strangle in a different underlying. Are you as quick to adjust the 16 delta strangle as you are the 30 delta strangle?
If I'm staying mechanical, yeah, I am. I'm just as quick. Remember, the 16 delta strangle will probably move a little bit faster, meaning your deltas will grow a little bit faster. Well, no, they're going to grow about the same. Never mind. Yeah, I'm the same on each one.
Yeah, I think this is a very good question to ask, because it does seem like you might adjust the, like if you sold a straddle, are you quicker to adjust a straddle? The answer is, yeah, you are quicker to adjust a straddle. But when you talk about a 30 delta strangle, 20, 25 delta, or just a 16 delta strangle, I think you're, just like Tony said, I think you're probably going to adjust them at about the same pace. You might be a little bit slower on the 16 delta, but don't start thinking like that. It gives you more range, but I think you're still going to adjust. Let's go next slide. I lost a lot of my short delta today, this person writes, but my buying power usage is low. How would you go about adding some short delta back in, or would you not right now?
Well, good on you for having some short delta to begin with. I mean, the great call on the market being a little bit weaker, and your buying power is low and volatility is high now. How would I look to be adding some back? I don't know if I'd be adding some back, but I'd definitely be looking some premium selling strategies. Maybe something like a 16, if you still want to lean a little bit short, 16 delta put, 30 delta call, kind of thing in like an SPY or a Qs or something like that. That would give you direct access to deltas that are in the market if you're beta weighting your portfolio. Just because volatility is high, we've gone down so much. I mean, I don't know what your assumption is on the market.
So, I mean, we have a similar situation. We lost a lot of our short delta yesterday. 100-point down move will do that for you in the S&Ps. We lost a lot of our short delta. Our buying power usage is low. How would we go about adding some back in? Well, I've been rolling down S&P calls nonstop for about like all afternoon. I'm actually being a little more patient here because I think that today, I was kind of hoping that today we open lower and rally a little bit. It looks like we're opening a little higher. I'm pretty sure we'll sell off at some point this morning. But after they sell off this morning, I think you might get a little bounce. So maybe you wait for a bounce, but I'd add the short deltas back in on any bounce. I mean, this is a pretty sick looking market. Let's go.
Agreed.
Let's go to the next slide. If you buy 150 delta call in, say, IWM in the 1DT options, does that offset one short micro Russell future? Am I getting the size right?
A micro point is $5, just to throw that in there.
The answer is yes.
Yeah, you got it right. Yeah.
It's not perfect because the 1DT option
at that time that you put it on, that delta is 50 on the future. It is 50 on the call. But when markets move, I mean, your delta is going to change.
Yeah,
It's like a current call.
I mean, it's as close as you can get. It's you know, because the future expires a couple months. Yeah, it's the same thing. Basically, it's close enough. Like we're picking pennies at this point. But you're getting the size right. That's 100. You're correct 100%.
Yep.
Let's go next slide. Is there any reason or any logic behind rolling a broken wing butterfly at 21 DTE?
Is there any logic? If you could roll for a credit and you're doing the same strikes, that would be, and you want to extend time. Obviously, this is something that's probably going wrong for you because it's going right. You're going to have to change the strikes to get the credit that you're going to want. You extending duration. That's what you want to do. Sure. Yeah. Extending duration works for me.
Is there any reason or logic behind rolling a broken wing butterfly at 21 DTE? So what are you saying? Yes?
I mean, the logic behind it is if you want to extend duration. I mean, if you can roll for a credit and you want to extend duration, I'm assuming it's a trade that's gone bad and you're collecting a little bit more credit, sure, give yourself a little bit more time to be right.
And just so you know, Tony is the broken wing butterfly expert based on our tours from 2024. I'm
going to become a new expert or something else in 2025.
According to ChatGPT, he is a broken wing butterfly expert.
You love that, don't you?
He could be called to testify as a witness for the state, as an expert witness for the state, if that was ever the case.
Yeah.
The answer is Tony's right, and you could roll it forward. I would not roll a broken butterfly forward necessarily.
I probably wouldn't either, but you extend duration.
You could to extend duration. The problem is that you can't actually roll a broken wing butterfly. Like that would be, we don't support 6 legs. We only support 4 legs. So, and that's just to save space on the platform because most people don't roll 6 or 8 legs. So you'd have to do it. You have to break it up to do it, but you could do it.
Yep.
You have to make it as 2 separate trades. All right, let's go to the next slide.
You do.
And the last one. I saw this morning when you were talking about...
Or you can close it all, Sadnov, and open the new one.
You can close it all and open the new one. Right.
I mean that takes probably pretty much most of the risk out of the new opening trade.
If the underlying is liquid, there's not too much to worry about. I saw this morning when you were talking about your NVIDIA earnings trade, and I wanted to ask you if you usually set up your closing trade before the opening bell for those earnings trades. And if so, how do you determine the price that you'll buy those options back at?
Oh, your NVIDIA earnings trade. I want to ask if you just set up the closing trade. I mean, listen, we do a show here. We're talking to people when the market opens. We are live on the show. So sometimes Tom will put the strikes in well below or above where he thinks he's going to get filled just to have it in so he can cancel and replace it when the market opens and the market on the options are a little bit tighter. So do you put in, before the market opens? Yeah, but well away from where you expect to be filled. And how do you determine those prices? I mean, you just try to extrapolate out. I mean, there's no real good math to this. You could look at the same strikes with the stock $10 away, meaning if the stock is 100 and it opens at 90, you could look at like the 80 puts and the 100 call just to see what the $20 strangle would have been where it was trading, and then go in lower than that. But really, it's just a guesstimate.
Yeah, I mean, here, Tony's right. First of all, we probably would enter less orders before the opening if we weren't doing live show at 8:30 in the morning. And what we don't want to do is go through all our positions at 8:30 in the morning. So what I do is I go through my positions that I have to close on the opening because I did an earnings trade or something, and I'll do it like at about 5 or 6 in the morning, and then enter the orders. Like in Dell, I sold some premium in Dell. And I put, when you say, how do you know what to put the options in? Well, they expire today. So I put the options in at 1 or 2 cents. So it's not like there's nothing to think about. It's just a no-brainer. But like yesterday in NVIDIA, I had a bunch of March strangles on, and I put them in where let's say about 30 or 40 cents below where I thought they would open based on, I've been doing this for a long time. So we have a pretty good idea of where things will open. And I put it at 30 or 40 cents below that. And since I already had the orders in and working, as soon as the market opened, I just adjusted my price up, and I was probably about maybe 10 or 15 cents off or 20 cents off. And I was low, and I just raised it up 20 cents and filled all the orders. Mm-hmm. It speeds up on air, so you don't have to watch us fumbling around and looking for our positions.
Hey, we fumble enough.
Yeah, we fumble enough. So we try to keep everything moving. So the simple answer is, 1, it's for the show, but 2, we're also pretty good at putting in orders early below the market, or putting in orders where we should get filled. And the other thing with that by doing that, what's good about it is, if you did something for like earnings, but the next morning you just you can't remember all the stuff that you wanted to do, by having the order working in there, you kind of it's easy to see, and then you can make adjustments during the day. One of the things we don't do is we don't put orders in to get filled at the opening price in the option world. Like I bought some NVIDIA stock this morning, and I'll do things like that. But I'm not like, if I'm trying to sell, let's say, a strangle in like Apple this morning, I'm not putting an order in to open pre-market.
To be competitive to what I think is with the market. I'm going to see what the market is.
I'm going to see where everything opens
competitive
first.
From there at mid-price.
Yep, exactly.
Right. Good job. Good job out of you, Sadno. We're going to take a quick 90-second break. We're going to come back. We got Jamal coming in this week in stocks. We'll be back in 90 seconds with Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool.
Yeah. Oh, nice. You are pretty flexible. Let's see, get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring Zero DTE. We promised you we would take a look, and here we go.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with my friend Jamal this week in stocks. What's up, Jamal?
What's going on, man? How you guys doing, man? We lost the big one yesterday. Gene Hackman is out of here, man. Sucks. But I like to reflect on the positivity. Give me your Gene Hackman movies. What's your favorite roles? What's going on?
We talked about this yesterday. I mean, it's got to be it's the French Connection.
Got to be French Connection.
Yeah, French Connection is. I remember when I first finally sat down to watch that. I mean, again, that movie a little predates me, but I remember when I first sat down to watch it, I was like, this is incredible. That and The Conversation. I don't know if you guys ever saw that one. That's a good one.
I don't remember that one.
No, you never saw that one?
I don't think so.
It was like a couple of years later. It's like French Connection is what, 71? I feel like Conversation is 1974. It's filmed in San Fran. There's a lot of scenes done in Union Square area, which obviously looks a lot the same. It's a great movie. You know, I'm surprised you've never seen it.
Very cool. Check it out.
Yeah.
I learned something today.
Yeah. You know, that's what I do here. That's what I do.
I know that. You don't tell me.
Let's pull up some slides. Let's talk about the week that we had in stocks. Market meltdown accelerates. Let's move to the next slide. Things were kind of quiet yesterday, and then all of a sudden we just slid down.
Yeah.
Dow, NASDAQ, S&P, Russell facing 2-week losses. Matter of fact, the only one of those four that's positive on the year right now is the Dow. Every one of the other three are in the red. So Trump administration is going to enact 25% tariffs on Canada and Mexico. Originally, it was going to be April 1st, moved up to March 4th, and a lot of people feel like that's what contributed to this slide over the last couple of days as it's coming ahead. I mean, what do I want to say? What's the fear do you feel? I mean, what's the real fear in the air here as far as everything's going? I mean, everybody feels like we've seen this a lot of times, right? Like the market moves one way because they think something's going to happen. It's the uncertainty, right? And then eventually market gets a little more clarity and things change. So, I mean, is that how you're approaching this, or you feel like, oh, this is really bad and we're in trouble here?
Yeah, I think it's a buy the rumor, sell the news kind of thing. I think the market is moving lower on the fear of everything that's going to change. And I think once it comes out, now I don't know where we're going to be. I don't know if even the S&Ps are going to be, 5,900 where they are now. They're going to be 5,600 when everything comes out, or they're going to be 6,100. I mean, I have no idea. But when it comes out and it's done, usually you get a little bit of a move in the opposite direction. It kind of gets overdone. Seems to be to the downside right now. And that's what we're kind of looking at for a little bit of a nibble in the market.
I think Tony's right. I think that it was the stock market. There was too much complacency. It was too crowded a trade. Everybody was in on the same 7 or 8 stocks. There was too much, election euphoria, all this kind of stuff. I think reality is starting to show right now, and there's a lot of pushback to this new administration's policies. There's a lot of pushback to the fact that everybody might be a little bit overdone in digital currencies. Everybody might be a little too long the same 7, 8, 9, 10 stocks. We might have got a little too far ahead of ourselves in the Palantirs of the world, and we might have got a little too far ahead of ourselves, with AI and everything else. I think, and we might get a little too excited about, the state of the economy, and I don't think, everything that's being done in Washington right now is giving anybody any more confidence. So I think the market's probably telling us there's a message in here, and maybe it is that we need to wash out a little bit. Maybe a little bit. I agree with Tony. I think maybe 5,600 is the number. Maybe 50. We're almost, we're 5,800 is the first stopping point, and maybe 5,600, to scare them a little bit. If you look at the bond market, we got to levels that bond traders didn't think we were going to get to. Stock traders didn't really care, but bond traders never thought we'd get there. There's no reason the stock market can't get to levels that the stock traders don't think we can get to.
Sure.
Yeah.
And we usually do.
And we usually do, is right.
Right.
Yeah, we usually do. And then there's a washout and then things change.
Yeah.
For this week's cherry on top, I heard 2 things in there, and I feel like it should be, probably just repeated again and again. I think Tony is right. I think I heard that twice, but I'm just saying. I was just pointing that out. The good, not great showing for NVIDIA this week in earnings it was a good day for the vol sellers and NVIDIA earnings in there. It just really didn't. It looked like it was going to bounce in the after hours and coming into after earnings on Thursday. But ended up being, I wouldn't say a non-event. It just ended up being kind of falling flat. You mentioned crowding. Bitcoin below 90K for the first time since December, and Ether at 6-month lows. So both are about 25% and 45% off their highs, respectively. And then you got VIX that closed above 20 for the first time since the December Fed meeting. And VVIX is at the highest close since January 10th. So, yeah, we've had quite a change in markets here over the last couple of days. Let's move to the next slide.
Did ETH get under 2,000, Tony? I don't know. I don't think so.
I don't think so. I just saw this morning it's like 2040 something, 2046, something like that.
Okay. I didn't know if it got under 2,000.
The cash got under 2,000 by $4, Sadna.
Okay.
The futures did not.
Got it.
Yeah. This is the way I always love to look at vol, the difference between VIX and historical vol. And right now, probably about a 10-tick difference between them. It's fairly elevated from what we've seen so far, obviously meaning there's some good vol selling opportunities out there. Anytime you see SPX or SPYs, IVR in the 30s, those are some good selling opportunities, quite honest. You just got to be a little careful, a little choosy. And again, you don't want to, this is where you're really paying attention to capital levels, right? Because like Tony said, we don't know, none of us know where the market's going from here. So just be a little
That's right. That's right. That's the key there. Nobody knows where the market's going. We've said that at nauseam. Nobody knows where the market's going. But it's certainly, if you're a little bit of a bull, it's a better price today than it was yesterday, a better price than it was 2 weeks ago. So pick your poison. More importantly, pick the best strategy to fit your assumption where you have a high probability of success.
Yep. I've started layering into different put spreads. If there's anything that I do today, there's at a point now where I might start looking at certain upside, so call spreads to start selling just in case. You know what I mean?
Mm-hmm.
Let's move to the next slide. As Tom mentioned it, a little overcrowding. This is just since this year. This is Dow, Nasdaq, S&P, IWM, and MAGS, which is a ETF that signifies the Magnificent Seven. You can see that that's leading the way. Those stocks have gotten crushed. I would say it started around earnings, right? Like some of those didn't necessarily perform well on earnings, similar to what we saw in NVIDIA, and I think that was the clue. So I typically have played a lot of the Mag 7 names on earnings, sometimes to the upside based on my calendar call spreads. I didn't want to in Nvidia because I just didn't see it doing anything positive, honestly. Just because a lot of those names hadn't performed well on earnings, and this is your proof in the pudding right here, basically.
And Nvidia a little bit weaker since you just mentioned it, down by about $3 this morning, 117.5 on the offer.
Yeah, 117.5. Whoa.
Yep.
Where did it close yesterday? Like 123 or no?
120.
No, 120 and change. Down
okay.
$3.
Okay.
Yep.
Let's move to the next slide. Rolling bond correlation is all over the place, man. Of course, in typical years, this would be a negative correlation, right? We've seen it moving all over. Anything close to 0.5 correlation obviously is meaningful. And we saw that a lot of last year. Coming into this year, it started to change, but then it went back positive, and now it's dipping. So, it's all over the place when you're looking at correlation between bond and stocks right now. And who knows where it's going to go next. I mean, again, I would like to see it back to what we're used to seeing with this negative correlation. It could be heading back there, but this is just to signify it's kind of turning the corner a little bit.
Yeah, we've been taking a look at bonds. We've been trading bonds, kind of light on bonds right now. We were long them as they went down a little bit, caught the nice up move, and pretty much flat here, right?
Yeah, we're flat.
Pretty much. Yeah. Let's move to the last slide.
Not really looking to get short bonds. You know what I mean?
Yeah, no.
It's almost like a commodity. You'd rather be long it on the way down.
Yeah, I don't want to get short them here.
I mean, look, we're in like a 50-month drawdown in bonds, and honestly, this is the first time where it seems as though something that's happening might contribute to bonds possibly continuing a run. I mean, with both pullbacks here and there, of course, but so yeah, I'm long bonds. I'm looking to stay long them at this point. Feels like it's finally time, honestly.
Got it.
Meta announced that they have some experimental Gen 2 research glasses. They also plan to release a standalone Meta AI app to compete with ChatGPT. Speaking of ChatGPT, OpenAI is launching GPT 4.5, its next general purpose large language model. Damn, that's a mouthful. Amazon AWS unveils their prototype quantum computing chip. So that seems to be, it's funny. What was that? Beginning of the year, NVIDIA guy said we're about 30 years away from quantum stuff, but now everybody's starting to sort of at least dabble in that area, sort of like what we were seeing with AI a couple of years ago. Everybody's starting to feel like they need to dabble in it a little bit, it seems. Stripe, the unicorn payment startup, valuation climbs to $91.5 billion. They're in the secondary stock offer, currently fourth. Currently they're number 4. This is a little fun exercise. A couple of unicorn companies. Who do you think is number 1? What, I told you Stripe is number 4. Okay. OpenAI is number 3. Do you have any idea who number 1 and number 2 are as far as largest unicorn companies?
Largest unicorn companies?
Unicorn companies. Yeah. So the first one is a outer space company. What would that be? Unicorn company that's over $1 billion that's not public yet.
Oh, you're talking about SpaceX?
Yes. Yeah, SpaceX is number 1. And number 2, what do you think that could be? Largest unicorn company that's not public yet. I'll give you a hint. TikTok.
Oh, seriously?
That's what's the company that owns TikTok?
Is it ByteDance?
ByteDance? ByteDance.
Yeah.
ByteDance is the one. So that's the top 4. The top and the top 5 is a clothing company. Number 5 is a clothing company. It's a Chinese clothing company, for lack of time.
Temu?
Not Temu. Cheap clothes.
Never heard of it.
Shein.
Yes, you have. There you go. Shein. Yeah, that's number 5.
That's where Sadnov gets his shirts now that we don't give them to him anymore.
I could believe that. Yeah, absolutely. February non-farm payrolls coming up next week on Friday, and research this week. OJ, volatility of volatility. Check that out.
Beautiful. Good job out of you. Let's take a quick 90-second break. We'll catch the opening bell here. Markets look basically unchanged. Even the S&P's up 9, NASDAQ down 8, and the Dow up 100, Russell down 6. Mixed bag of tricks out. I know you've been nibbling on some NVIDIA. We'll be back in 90 seconds. We got more Tasty Live at the opening bell next.
Yeah, just a trade. Just a scalpy.
Scalpy.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology
was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With the opening bell here, Sosnoff, in less than a minute. E-mini S&Ps, they're about as low as they've been since we've been on the show. Certainly well off of their lows of 58.58. They're 58.81, up 5 handles. NASDAQ up 19. You've been nibbling a little bit on the long side to NVIDIA. NVIDIA trading 118.03. You were buying it in the 117 handle, Sosnoff. You got yourself a point right now.
I bought some at 118. I bought some at 117.12. I bought kind of the low. Let's see. But I'm not Phil. So.
She gone. E-mini S&Ps are
there's
down.
There's the gains gone.
down $1, and Nasdaq and Nvidia is trading just about 117.40 or so. It's all over the place. Let's see what's moving this market right now. On the downside,
filled Nvidia.
You just sold it at 118.12. Dell down $7.50 for earnings. Baba, Chinese stocks down 5. Palantir down 4 and change. Coin down 3 and change. Meta down 3 and change. Tesla can't buy itself an uptick, down 4 and change. SMCI down 3. Downside looks weak. Sadnov. To the upside, you got Costco up 11. It was down yesterday. Home Depot up 3, and JP Morgan up $1 and change. Netflix up $1 and change. Sadnov, we got a big tug of war going on here with volatility up 32 cents, 1950 and change. Doesn't look like it's done yet.
Yeah, the sickest puppy out there is. The sickest is I'm going to say Palantir.
It's certainly one of the sicker ones, no doubt about that. Palantir down $5 now. It was just a little bit lower a moment ago. Palantir going from 120 and change. Volatility was in the 100 level or more in these back month options. They're now in the 60s. Palantir's volatility has collapsed by about 50% or more.
Yeah. So
Dell, you just bought back some puts.
I just took off my Dell trade.
Mm-hmm.
It was nice while it lasted, as they say.
And it was nice while it lasted. It was a good one for earnings, no doubt about that.
Yeah, its earnings have been very good to the good kids, that's for sure. That's the only thing I did.
Earnings been good. Scalping's been good.
Scalping's been okay. I mean, this morning we're trying to figure out where are the problem children. They're kind of scattered all over the place. Coinbase is catching me a little bit, but some of these stocks, they're hitting them pretty good. Baidu's back down to $85.
Nvidia under 117 again to 116.70. Sadnov. I don't know what was better, your buy or your sale. I think your sale was the better right now.
No question that I'm going to buy a little more Nvidia down here. I don't know why
16.65.
I don't know why I'm buying it. I just feel like
it's certainly giving you opportunity.
It's certainly giving you a chance, no question about that.
Right. Right.
I mean, it's a good scalping vehicle. These things are like, I just bought it at, well, I shouldn't. I was going to say I just about to take $1 out of it, but not quite.
It's almost like you got to put your bid in, almost got to put your offer in, just figure out what's going on, right?
It's like old school.
This is old school.
The old
stocks moving around $1 at a clip.
Old school scalping.
Mm-hmm. They're scalping Nvidia like they're even the S&Ps.
Yeah, it's kind of crazy. But whatever, we'll see. Hang on, let's just put offers in. Yeah, we'll see what happens. All right. Thank you, Nvidia.
Mm-hmm.
It's definitely a scalping vehicle today. S&P's down 12 every single day. Every day that they open higher, they have been a sale.
Yeah, and that's a little bit sign of a market that's kind of changing here. Now you're going to get your news-driven event when he cancels the tariffs or does something else or adds more, whatever. You're going to get those movements in the market one way or the other. But when stocks open higher, making it feel like you missed the whole move and then go lower, that's the sign of a market changing. We talked about it for the last week and a half or so, that this market's lost a little bit of its oomph to the upside. It certainly looks like that.
That is very much bear market tape activity, as they like to say. Very much bear market tape activity. Yeah, this is not a good looking tape right now.
No sirree, Bob.
Yeah, I thought you'd have a little bit of time here this morning to sell.
I thought you did too. You would too.
I thought I'd have a little bit of time to sell some Delta. I was wrong.
I was wrong too.
Yeah. I'm going to have to make some adjustments in a couple seconds. This is they're taking some stocks out to the old woodshed.
Microsoft down almost $5. I mean, everything is basically lower.
Yeah, I'm not going to go crazy here and adjust because I think they're going to be up in 15 minutes. But I don't know what's going to take them to the upside. I mean, Nvidia is making a new high for the day, so that might be the stock that takes them to the upside.
Yeah, you just bought it at 116, sold it at 117.
It just rallied $2 off the low.
Yeah, now Nvidia's almost 119.
Well, and the futures rallied, 20 points.
Yep, they certainly did.
Yeah, I think they're going to be up on the day. I think they needed a down opening to get them higher. So I think they're going to rally.
Volatility just almost traded 1995, 1970 right now. Key on volatility. You start seeing that go a little bit lower. Maybe you get a bid in the market.
Yeah, I actually think that I think you needed a little down swoosh this morning to scare the children and then to make the market have an opportunity to go a little bit higher, which is exactly, I mean, I can't believe I didn't buy more Nvidia. That was a kind of a gift, but easy to say in hindsight. Yeah, we've only made a couple of trades so far this morning. I'm kind of like, now they're up on the day, the S&Ps. There you go.
Yep.
It does not surprise me. I thought that was kind of like the early morning sell-off that you kind of needed to buy.
You were nibbling. You put your money where your mouth is. That was a good one.
Yeah. Well, many years of selling rallies and buying dips.
Better to be lucky than good, for sure. A 500,000 Nvidia options have traded already right out of the chute, Sadnov.
Doesn't surprise me. I mean, the best trade we had on was Dell because that was the easiest trade. We didn't have to do anything.
Yeah.
And I take earnings trades off, even though Dell's expiring today, and I didn't need to buy those short puts back because they're $5 out of the money. I just I don't want to look at it again today. Just like I didn't want to look at Nvidia yesterday. You make your trade, you move on.
Yep.
Trade's done. One of the things that we try to just to pound home to tasty traders is don't fall in love with this crap. Like,
right.
Like, big deal. I made a trade in Dell yesterday, so I covered. Now Dell it's left my mind.
Probably dead to you. Probably never look at it again.
I won't look at Dell. I won't look at Dell again for 3 months.
Yeah, right.
But I'll have a good memory in my head. Hey, it worked last time. That's it. Like, I don't have to overthink this stuff at all. Dow's up 120, S&P's up 2, Nasdaq's only down 30, the Russell's down 5. Yeah, I don't know. We'll see. Kind of looked to me like they made a little bit of a short-term low with Nvidia, this morning. We'll see what happens.
You certainly don't have some. You certainly don't have some of the other stocks leading the way. Like Apple is down $1 and change.
It's all over. It's all over. But the crying for the ex-leaders, they're done.
Yeah, Tesla down $1.70. I know it traded all the way down $7 or $8 lower than that, but it's still lower.
Yeah, I wouldn't be surprised if Tesla rallies here at all. I'm I'm a few deltas long Tesla, but I think Tesla.
I am too. Not at good prices.
I think Tesla has a risk that some of these other stocks don't have. Like the risk in Microsoft is not that shareholders revolt. The risk in Palantir is not that shareholders revolt if it goes lower. The risk in Tesla is that
you get paid for that. You get paid for that. Microsoft volatility is under 30. Tesla volatility is approaching 80.
Yeah, well, it should be
70.
Because Tesla has a risk that we talked about like MicroStrategy risk before, because I feel like the structure of that company has risk. They're the way they raise capital, the way that they priced everything against, they have debt risk to me. I feel like Tesla definitely has single point of failure risk with Musk, but they also have shareholder revolt risk because, if you're a Tesla shareholder, you can't be happy.
Right. No, I mean, down $80 in 10 days. No, you can't be happy. I'm not happy if I'm not a Tesla shareholder, if I'm just a trader and I was looking to
but
maybe
what I mean is
catch a falling.
This is self-inflicted.
Well, I mean, it was self-inflicted to the upside too. I mean, we're just below where he was for the election, right?
Yeah, that's true.
Yeah. Everybody's looking for this Trump tweet. That's what everybody's looking for right now.
That is the stupidest thing. It's got to stop.
I agree with you. I don't think you get that up move, the magnitude of the move that you've gotten in the past. That too, just like everything else, gets a little muted, don't you?
Oh my God! Yes, it's worthless. He's going to start to backfire. Right. When he starts to tweet in the future, it'll be negative. So you got to stop. Right. You got to stop worrying about these stupid tweets.
You just got to trade what's in front of you.
100%.
You like ABC stock? It's got some put skew. Go for it. All right, you ready to take a quick 90-second break?
Sure.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got next, Saz? Fast market. That's right. We're going to find 10 trades. I got confidence in you. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
More Tasty Live. That's right, with Fast Market.
I'm ready.
That's right, Saz. Fast Market.
I'm ready. A little fast market this morning. 8:45 in the morning. That's Central Time. Tasty's located in Chicago, right in the Midwest.
Yeah.
And thanks for spending your Friday with us. It's going to be, don't forget, we do a show on Sunday night. It should be a fun one this Sunday night. Victor and I go at it on Sunday nights along with Ilya and Pete Momat. So it's a little bit different of a team on Sunday nights. Everybody goes about 10 minutes. But Victor Jones and myself host it, and then Ilya and Pete come on, throw in their 2 cents. It's a fun show. It starts at 4:55 Sunday nights. We've been doing it since before the pandemic. The reason we do a Sunday night show at 4:55 is because the market's open at 5 o'clock. So we have a couple of minutes to just introduce ourselves, and then boom, off we go. It goes for about 40, 45 minutes, sometimes 50 minutes to an hour. It depends on what's going on, and kick the week off. Then every day, don't forget, we start at 1:30 in the morning. We have a team in London. Rich McDonald and Angie Young start at 1:30 a.m. And they have special guests. Dylan Radigan was a guest yesterday. We have a lot of others. There's Angie and Rich. They're awesome.
Yeah.
Both of them. They're in our London office, and they start the show at 1:30 in the morning, which is 7:30 in the morning UK time. And Angie's been around the world, working for different networks, and she's a total pro. And she spent some time in Singapore, some time in UK, some time in America, some time in where else was she? She was some other country. I can't remember where she was.
She's really been a veteran of the scene for a long time.
Yeah, she's a veteran, but I think Singapore, maybe Japan, maybe Tokyo too. But she's smart as hell. She's really good. And Rich has been, again, all around the world. He comes from a trading background, a trading firm, and he is traded all around the world. I did a tour of Europe with him. He's amazing. He's awesome. He's got great stories. He's a very fun individual. He's fun to listen to. If you can handle a Scottish accent, you're in business.
Yes.
Yeah. But if you can handle the Scottish accent, like I said, his is not bad. His is easy. So, Rich. And Rich studied in the U.S. too. Rich was, he was a runner, and he also went to school at USC. So very familiar with U.S. markets and U.S. trading. And so those guys start at 1:30 in the morning. And then after they're done, we play some of yesterday's shows for a little bit. And then we started at 6:30 in the morning with Pete and Frank. And they do something called Forex Focus. And Pete's been a trader. Well, Pete's third generation trader. His grandfather was one of the first guys on the floor of the Merc. Then his dad was a trader on the floor of the Merc. And Pete was a trader on the floor of the Merc. Pete traded for about 25 years in euro dollars and a bunch of other CME futures and futures options. And then came over, was running education for the CME, came over and joined Tasty pretty close when we first started. And so Pete's our future savant. He truly is a future savant. I mean, Tony and I, every question we have on futures, we go to Pete. Period. There's no other person.
Always.
He's our default. And then after that, Tony and I start with Vanetta at 7 a.m. and we go all the way till 6:30 at night with Victor Jones on the price of truth. So you get very different people, from Pete Momak and Frank Caberna in the morning at 6:30 to Victor Jones at 6:30 at night, 12 hours later, who brings a very different perspective than Frank and Pete do for sure. But Victor, myself, and Peter on Sunday nights. Anyway, we hope you join us. Tasty is trying to go 24 hours a day. Sometime in the future, we will be. And it's very exciting. Largest digital financial network in the world. And we kind of started this trend. I mean, we didn't kind of start this trend. Tony and I were the first in 2011. The idea of a financial network on the internet, digital financial network, it didn't occur to anybody. We started the trend in 2011, and we've been growing the business ever since. So thank you. Now Tasty is owned by IG. We are a multinational corporation. We trade on the London Stock Exchange. We're about a $4 billion company. All right. You ready?
I love it. Yep, I'm ready.
Fast market. First trade.
Bring it.
CRM. Carlos, they kind of whacked it yesterday. Not crazy, but it's up $3 today. Wow, it's back to 298. I saw it at 281. Somewhat bullish on CRM as a bullish trend. He wants to do a strangle in there. IV rank is still okay. It's just under 30 today. We can do this. Carlos, I don't love this stock as far as liquidity goes. I think it's fair.
This is about as low as it's gotten, Sadnov. I mean, the low is around 292 or so, just to let you know.
I know, but after the number came out, traded 280.
Maybe pre-market. Yeah.
Yeah, it traded 280. I'm going to do the you have it up here. 270, 330. Fine. 270, 330. It's going to be a tough one to fill. Carlos, it's not the greatest. Well, I take that back. Filled it right in mid-price. 690.
Everything's going to get filled at mid-price or close enough, Sad. The volatility is nice and high.
694. We'll take it. All right, Carlos, thanks. We did exactly your trade. DSZ. We're going to say Rancho Santa Fe, California. That's our best guess.
Okay. I'll go with you there.
Okay. LEJ5. The executive branch loves cheap fast food burgers, yet tariffs drive cattle costs up. Let's be short volatility. Graze on a 35-day 190-202 strangle in Moo. Obviously, this is live cattle, which we don't trade very often.
No, we don't. Live cattle's been going sideways.
What does he want to do here? 35 days to expiration. There's a tiny little bit of volume. Let's see what we can do here. 190. Last time I traded this, I don't think I could get out. 190. And 202. Actually, if we're going to, because the markets have moved a little bit today. So what you're going to...
Well, it's live count down a little.
Yeah. What we're going to do, actually, DSZ, we're going to go 188.202. That's kind of like just a little under $2. I don't know how much money. Yeah, it's $750, $740. Mid price is 1.850. Let's leave it in and we'll test it and see if we can how much we have to adjust. You know what? Let's not. Let's just say we moved it one tick. 1.825. I don't know.
That is correct.
IV rank is 40. We're okay with this.
Yeah, that's about $730 worth of premium.
I gave up one
tick.
tick.
Perspective.
Yep. Let's go next slide. Marvell, haven't traded this in a while. Topo Chico, you're back. All right, man. Let's go to MRVL. I haven't traded it. Tony has.
Good to see you again, Topo.
You hate Marvell. I know.
I hate it. I love Carvel, hate Marvell.
That's a good one. Sell the vanilla 70 put. When are earnings in here? March 5th.
You are correct. After the market closes. So that's next week, Sadnov.
Stock has
forever,
been,
but that's next week.
Stock has been myrtleized, as they say. What does he want to do here? He wants to sell the 70 put. It's about 85 cents, but I like to sell a junky call with it just because I like selling junky calls with crappy puts because that doesn't, no harm, no foul. Let's see, maybe the 114, I don't know. Marvell's not, this is not the greatest trading vehicle.
No, it is not.
I sold the 114 with the 70 puts, the 114 calls. I'll cover the puts before earnings. I'll cover the calls before earnings. But right now, I might as well keep it a little more delta neutral. All right, Topo Chico, I put that trade on. We did it small. 163. Let's go next slide.
163.
Yeah, I just don't feel like selling naked puts today. The market looks like crap still.
Even the S&Ps were just higher. Now they're unchanged, down $1.
Yeah. What's NVIDIA doing? Down $1.90. It hasn't moved much. Okay. Google. We don't have much on in there. We have an April strangle, 155, 190. It's a little bit long. What does he want to do here? He wants to sell the 155.60 of March. Well, we're rolling today. It's 21 days, Charles. So we're rolling. So if you want to sell a put spread, if I want to sell a put spread in there, I'm going to sell April.
April, right.
But see, I can't, the one you want to do, I'm already short the 155 puts. I don't want to cover, I'm going to strangle with those. So let's sell the one. You know what? Let's just sell the 155 puts. You want to get long? I'd rather do it by selling some 155 puts. All right, let's see if we get filled. Google's not doing anything, right?
Oh, it's been going down. It's unchanged today, but yeah.
270. We just traded it small. We sold some naked puts. It just adds, we're short a skewed strangle now. Let's go to the next slide. Yes, way, Jose from Orlando, Florida. Good to see you back, Jose. Iron Condor or Strangle in Procter & Gamble. Why do I think we have a Procter & Gamble position on? Because we don't. We have a Philip Morris position on.
Philip Morris. You messed that up. It's the best bump that we've made in quite some time.
Yeah, this is. What do you want to do here? I guess I'd rather do an Iron Condor in here because I don't really like. Oh, you can't do an Iron Condor in here. IV rank is 20. There's no premium. This is a tough one. Yes, way, Jose. 165, 180. That's about all you can do. And I'm telling you right now, yes, way, Jose, you're going to have to keep this one super small. I just don't love this trade. All right, let's see what happens. Yes, way, Jose. Working it,
Yes,
dude.
way,
318.
Jose.
Let's see. All right, Tony, next one. Nothing done in Procter & Gamble yet. Kevin from Madison, Wisconsin. Oh, you want to go into the dark side, Kevin. Tesla. Oops. TSLA.
Tesla was just down a couple of dollars, and now it looks like it's unchanged, right?
Yeah, we're short. We are short put spreads in Tesla. We're short the 75.65 put spread in there. Pretty good size. What do you want to sell? He wants to sell
Tesla volatility IV rank with nothing earnings looming April 22nd. So they're well after April expiration, has gone up from around 35 IV rank to about 83 where it sits right now.
Procter & Gamble filled at 217. Tesla filled at 159, which is mid-price.
Beautiful.
Okay, I sold your spread. I take that back, Kevin. Kevin. I sold April because we're rolling today.
Yeah, you can't do March. 21 days expiration. You're going to be rolling a lot of stuff here in a moment.
Yeah, I sold the 255, 250, Kevin, in April instead of March. I sold at 159.
Yep.
Let's go next slide. Worst price of the day, best price of the whole thing. Seraphin, Tom entered crypto. So for a change, I'd like to entice Litecoin. Sure. We haven't traded Litecoin in a while. I'm sorry, crypto. I got to go to my crypto page. Crypto. Tony, have you traded Litecoin?
No, I have not.
Litecoin. LTC. Litecoin. I do not have a Litecoin position on. All right, now I have a Litecoin position. I don't even follow this, but I'll trust you. Strongest bulk crypto, recent drop, closest thing to Bitcoin. All right, we just put our first Litecoin position on. We'll start following it. I bought some.
All right. Litecoin Cash, 124.85.
Yeah, 124.85. There's no commissions on that. That's why it's a little higher than where the cash is, but it's right there.
It all comes out in the wash.
Yes. 124.85. Let's go next slide. Ryan the Lion from Norfolk, Virginia. Amazon. Amazon's unchanged today. He wants to sell the 190, 230 table. April. 190. Amazon's up 30 cents. 190, 230, 540. Take a fill, 540. Let's go next one.
540 it is. Even the S&P is up 12, NASDAQ up 21. About as high as we've seen in some time this morning.
The pilots are back, and they're back with Adobe. ADBE. I suck at Photoshop. High IVR delta neutral, preparing for earnings. Adobe. We are currently in a March iron condor. Let's see, take a look. We are basically unchanged in there. Maybe down 2 cents. Nothing. We're unchanged.
Mm-hmm.
High IVR, when is earnings? March 12th?
Yep.
So he's challenging Adobe. Well, I only can pray that Adobe hurts us like NVIDIA hurt us because NVIDIA was the best earnings trade we've had all year. So yeah.
NVIDIA 118.75, sound off down $1.40.
So what does this mean here? 10 to 16 what?
10 to 16 neutral delta. I think he's looking at a strangle.
Okay, so what I'm going to do then is I have a position on in Adobe right now. It's and by the way, Adobe is not the greatest trading vehicle of the world. Just so you know, it's like you don't want to get lost in the sauce in Adobe. I just covered my iron condor and I don't like it anyway. And that was in March. So let's go into April now for these.
21 days to go. You just closed it, correct?
Yeah, there was nothing there. We weren't making any money. We weren't losing any money. It was nothing.
Got it.
So you're going to go to 10 to 16 deltas. Well, sure, we'll split the difference. We'll go 12 or 13. 12 deltas. 525 calls. How's this stock been? Getting killed? Not really. How about 365, 525? It looks pretty damn straightforward. All right, pilots, we are working this. We're working the 12, 13 delta strangle. Nothing done yet. It's hard to get filled in Adobe. Let's let them come to us. Let's go next slide. Jeff from Miami. AMD's trading at 100 with 38 IVR. I think it looks like a better value right now compared to NVIDIA. Let's buy the covered call. Jeff, have you lost your mind? AMD. We are currently long AMD, which I don't like.
AMD up a dollar, almost $1. AMD hasn't had an uptick until just right now today. So I don't know if they're coming for the pigs.
The 9115 strangle is what we currently have on. I will add to that, Jeff. Because I don't want to. Oh, we were already filled. Oh, no, we were filled in. What is that? Oh, we were filled in.
That's Adobe or Adobe Strangle got filled at your price.
Sometimes in Adobe, it's weird. They just leave the order in and they fill you. AMD filled.
756. AMD 399.
Yeah, that's the 9115, which we already had on, so we added to our position. So I think we did everything.
I think you did, Sosnoff.
Because, when volatility's pumped like it is today, John, I think, did we do everything? Is that it? Is that 10?
Yeah, hold on. Yes.
AMD is sold a strangle. Adobe is sold a strangle.
We got John in a fast market.
Yeah, you got them all.
We got John in a fast market. Yeah, Adobe's a
you
fill.
You sure do. Yeah.
So CRM, we sold a strangle. We didn't really skew it, but we sold a strangle. LE, which is live cattle. We don't trade that very often at all. We sold a strangle.
10 for 10 as per told, Sosnoff.
Our goal in live cattle, just so you know, like we collected 740 in premium, 730 in premium. Our goal is probably around 250 to 350 in that 35 to 50% range.
Yep.
Marvell, which we don't trade very often, we sold a strangle. In Google, we sold a naked put. We didn't sell a put spread. We just sold a naked put. In Procter & Gamble, we sold a strangle. We don't usually do that, but we did in there. In Tesla, we sold a put vertical spread in April. In Litecoin, we just bought some Litecoin. I don't really trade Litecoin, so what the hell. Amazon, we did not do a ratio spread. Amazon, we sold, hold on.
Holding on.
Amazon, we just sold a strangle, the 190, 230. In Adobe, we sold a strangle very small because it doesn't trade that much. And in AMD, we added to an existing position that we had on. So listen, on days when volatility is pumped and the market's on its butt, this is kind of the approach that you want to take, I think. You want to put some new positions on. You don't want to trade too big. Keep your size small. Put some new positions on. You can see we got filled on everything at good prices. I think we did.
Mm-hmm.
And because volatility's
by good
pumped.
price, you mean mid-price, which is elevated.
Yeah, mid-price, a penny off mid-price, but
right.
volatility's pumped. So we put some money to use. And no real deltas. And traded some things that we don't usually trade. CME, Live Cattle, Marvell, Procter & Gamble, Litecoin, Adobe. The other ones we kind of trade. All right, good. 10 out of 10. Move on.
Good job out of you. Good job out of you out there who came to bat for us with those trades. We love it. We'll see you again next week doing that. We got a market measure right now. Volatility basically unchanged. So I don't know if after being about 80 cents higher, we'll see what the market does. Even the S&P's up 11, NASDAQ up 15, and the Russell up 4, Dow up 256. We'll be back in 90 seconds. Let's take the live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday, when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and it's not, and there's no bounce.
How does Daddy do it?
Daddy does it good.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this market measure sponsored by the CBOE. Before we do, let's take a look at the market. Even the S&P is up 16 handles. That's about as high as they've been. The NASDAQ up 56 or so. Russell up 8 and the Dow up 256. By as high as I mean as high as they've been since we've been on the show. Volatility hanging out at unchanged 1925. Bonds up 18 ticks. They trade up to 118.10 to 118.02. Bitcoin caught itself a little bit of a bid too, back to 83.6. Was traded down to 78,600 last night. Oil down 90 some odd cents. Gold down big, 42 cents in gold. A couple other commodities lower too. Silver equally big move on a percentage basis, down almost 60 cents. Net gas down 3 cents. Corn, wheat, and soybeans all lower too. Some of the big movers from today, Sadnov, on the upside, you got Costco up almost 11, MSTR up 10.5, Netflix up 7, CRM up 6, UNH up 6, and Tesla just caught a bid up 5, but Tesla pre-market was down under, I think, 75 or so. I'm not sure what the low was pre-market. Anyway, to the downside, you got Lilly down 8 and change, Dell down 6. Some of the Chinese stocks like Baba and Baidu are down 4 apiece. Baidu down about $2 and Microsoft down $1.70. Let's see what Nvidia is doing, because you've been trading that all day. Nvidia is up $1.46 to 121. Apple unchanged, down 60 cents right now. That's all I got.
That was kind of a pretty good low in there in Nvidia this morning. I think at that 116 prints, you know.
Yep. 116, 117. Yeah, you did good.
Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. It's 9:15 in the morning, Central Time. Just a couple of quick announcements. A week from this weekend will be our last live show in Chicago with Mike, Nick, and Katie. If you haven't signed up, please do. tastylive.com/events. Also, if you want to sign up for the digital collectible that they're doing on Saturday, March 29th, tastylive.com/events. tastylive.com/events is where you can see all of our upcoming events. Although we haven't posted our 2025 schedule yet, we're waiting till after the March 9th show in Chicago. And then we'll post our entire road show schedule for 2025. So lots of cool stuff coming. And
beautiful.
That's it. Let's do it.
I'm ready.
We got kind of a long market measure here, so I got to give myself a little extra time because Mr. Sheridan has demanded his full 30 minutes today.
All right, let's go.
He's like,
that's right. We'll go to Scott's calls.
It's in my damn contract. Don't you guys cut me short.
That's right. Scott Sheridan will be answering questions live on air. You got a question, he'll answer it.
Yeah, but don't ask him anything too hard because he struggles with the tough stuff. So keep it really simple. Like, ask him questions about himself. Like, how did you get started? Why were you on Oprah once? You know, things like that. How did you smash your car up when you weren't even driving it? You know, all those kind of
Don't do that to him. How did you total a car when you weren't even driving?
How'd you total a car when you weren't driving it?
And how would you be responsible for that? Why would you be at fault?
Ask him why anybody would ever eat chopped brisket. Like, how's that even a thing? Like, all these are important questions that I want to know. Exploring buying power reduction and volatility in different puts. I'm sorry, exploring buying power reduction volatility in different puts, which means that if you were to go out, right, and you were to sell a put, for example, what is the volatility of that BPR from a certain put that you sell? What that means is, does it matter what strike you sell, or does it matter what duration you pick? And does it matter that you manage that trade as early as possible? You know, all that stuff is very relevant. And so I think I think this is a heavy piece, but I think it's going to make some sense. In the end, what it's going to say is that it's really important to manage short put trades, and you're unlikely to have any BPR volatility early in the trade, and you're likely to have BPR volatility late in the trade, which means, Tony, late in the trade, the amount of money you have to put up to hold the trade may change, but early on, it's probably not going to.
Okay.
We haven't really explored this before. It's a little bit, it's a little bit nuanced. It's a little bit tight, but let's take a look. BPR, buying power reduction, can fluctuate for undefined options throughout their life cycles. There are 3 factors that influence buying power reduction: stock price, further out of the money, obviously less BPR, out of the money distance, and option price. So how does BPR change as we move closer to expiration? Next slide, please. Today, we'll explore the fluctuations of BPR from a long-term perspective of different strategies. For our study, we're selling naked puts in the SPY, 45-day cycle, and we're analyzing the deltas at 10, 16, 30, and 50, and comparing BPR at order entry and again at expiration. We're not managing these trades. Let's go next slide. Just because we want to show you what happens from the beginning to the end. And so you can see here, first off, it's important to understand that in the money options require more BPR compared to at the money or out of the money options. Simply put, the further the short options are from the stock price, the lower the BPR. For example, opening a 16 delta put needs less initial BPR than a 50 delta put. We showed you right up here on this graph. This makes sense when you think about the risk involved.
Yep.
So the
it really is all about risk reward, right?
Yeah, sure.
Well, I mean, really, buying power is all about risk, no reward, because there's no reward for the brokerage.
BPR on a 16 delta is 4,500. BPR on a 50 delta is 6,000. Makes sense. Let's go next slide.
Yep.
So we notice similar patterns when looking at both the initial and ending BPR for all SPY out of the money puts. Typically, the ending BPR was lower than the initial BPR. This is mainly due, it makes sense, this is mainly due to the high success rate of selling puts, which results in large out of the money distance and zero premium at expiration. Both of these factors led to a decrease in BPR, which is a win for option traders since the reduced BPR can free up capital. All we're saying is when you put it on and when the trade ends, over time, it's usually less. And again, that's because puts are schmutz and the market tends to go higher. Let's go next slide. Another interesting point is that the initial BPR has a very strong correlation with the underlying price over time, about 0.9. So when you put an order in and you put the position on at 45 days, okay, your BPR is not going to change. It's basically going to stay the same. Right. But, go to the next slide, John. At expiration, that 0.99 correlation goes down to 0.78. So at expiration, the BPR looks quite different. The BPR shows a much wider range and its direction becomes less predictable. Correlation between stock price and ending BPR is down to 0.78. So you got about 20%. So people go, well, how much could this change? Here's the answer, 20%.
Mm-hmm. Yeah.
Let's go to the next slide.
It's definitely a concern for people, or it's something that they should, not play for, but expect if it happens.
And let's go to the next slide. Perfect. So this pattern
now if you stay mechanical the way we always preach to you, and you're not using all of your buying power, at least you have the luxury to not do that, and you've got 30, 40, 50, 60% on the sidelines. This is something you don't need to know. But if you're in a smaller account and you're pushing a little bit more and you're using more of your buying power, this is something you definitely have to do or have to know.
So the cool thing is that this is consistent. Remember this morning when somebody asked Tony if on the confirm and send, do you have to adjust more?
Yeah.
On a lower delta option, remember?
Versus the higher delta option. Yeah.
Here's a perfect example of how the correlation, regardless of the delta of the option, stays the same. So in each one of these, it declines by almost an equal amount. So the pattern is consistent across all delta options. The correlation order entry is extremely high, with larger delta options showing even a stronger correlation. By expiration, the correlation drops off, particularly with smaller delta options. That's because some of the smaller stuff gets cheap.
Yep.
Let's go to the next slide. If you manage at 21 days, you don't deal with any of this crap.
That's what I'm saying. If you stay mechanical, yep, totally agree.
So what does it tell us? At order entry, it's easier to predict and calculate BPR since the stock price has the dominant impact. But by expiration, they can vary a bit. Maybe it goes down 20% on naked puts. Maybe it goes up 20% for naked calls. So just be careful here, okay? Because it's gonna, what doesn't happen to it could go down on the call side too. But what I'm saying is just so you know, there's about 20% variance in there. Both the out of the money distance and the option price can differ significantly, which leads to notable variations in BPR. Next slide, John. So even though the BPR at order entry is generally higher than expiration, looking at the table below, we can see that volatility at expiration is at least 10% higher across all puts. indicating an increasing unpredictability of BPR as we near the end of the cycle. So this is the volatility of your buying power reduction, the volatility of it, which is interesting because this is another reason why we manage trades at 21 days and don't let them go to the end of the cycle. Yes, we have volatility of our P&L, volatility of our returns, volatility of our risk. But one of the things we've never looked at before was the volatility of our P&L. You can see we have 20 to 30% higher volatility of our of our BPR in this study today. So 20 to 30% higher volatility of our buying power reduction as we near the end of the cycle, which is another reason for closing trades early. Let's go to the last slide.
I love it.
The BPR for puts at order entry is strongly correlated with the stock price, but this correlation weakens by expiration. Even though BPR for puts at order entry is greater at entry, the BPR's volatility at expiration is higher, suggesting a wider range of buying power reduction movement as an option approaches expiration date. Well said. Exiting positions before expiration can be a smart management tool to mitigate the potential increase in BPR volatility as expiration approaches. That is the takeaway here. Safer at the beginning, more risk at the end.
Good job out of you. Good job out of the team.
And the
Mark
timing is perfect because today is 21 DTE.
That is correct. That is the day that we look to roll. And you know what else is perfect timing? We got Mr. Scott Sheridan coming in, who's going to take your questions. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. You know, Scott will try to answer the question. Tom will usually step on his answer. But we'll be back in 90 seconds. You'll get an answer from both of them.
If you missed the live show, here's our cherry on top weekly recap.
Sadnov, can you show him your Valentine's Day present? Please, this is the moment when Sadnov was happiest. There you go. That's Sadnov when he was eating his Barnaby's pizza. I made him a pillow.
Oh, nice. I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sadnov. That's soon to be in the store. Your wife wants you to bring it home for the grandson.
No,
Hand to God, that's what she. I have it here. I'll send. You want me to send you a screenshot? And I said, would you like me to take this home for you? And I said, no, not me, the pillow. And she's like, oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it. I go, I don't know if Case is going to enjoy it, but the baby will enjoy it. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap.
People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow.
Can you see this?
Yeah. What is it?
I made this. We went glass blowing over the weekend. I made this.
Oh my God.
Oh my God, are we at show and tell now? What am I, back in third grade?
Beth, thank you. See, I'm very proud of it. It sits on my desk.
You went glass blowing?
Yeah. When was the last time you did that, sir?
I would never do that.
Guarantee you, if the missus said to you, we're going to go glass blowing and then hang out, there you go. You're blowing glass left and right. What do you got? I love glass blowing. Okay?
You become the best glass blower this country's ever seen.
I think we are on the precipice of a new star emerging in the world of influencer culture. I'm talking about Mr. Scott Sheridan. And I'm like, Scott, if you do take a Waymo, I was like, can you film it for me and send me the clips so I can put them on social? Scott is so natural, so just giving commentary. Check this out.
We're in a driverless car, my first time ever. Not really excited about the prospect of nobody sitting behind the wheel, but I'm with people I love. And if this is the way it ends, so be it. Solid A+ for this experience. Shout out to Waymo and to Jaguar.
Thank you from our new Tasty Live correspondent.
How's it light out now?
I'm going to
say the word.
Nobody's showing the inside of the car.
I'm going to say the word. I'm going to say the word. I'm going to say it. I can't.
Don't say it. No.
Do you have a beeper? Beat me.
Don't
beat
say
me.
it.
You are so freaking sometimes. I mean, honest to God.
I just want to know how you went from darkness to light.
It wasn't me.
The light out is not him. That's just B-roll.
That's a woman. That's like stock.
That's like a stock photo.
Oh my God.
Why are you putting stock photos in there?
Oh gosh, Tom.
This is pathetic.
Stupid. He's so stupid. My Taiwanese sources told me that you sometimes like to watch hockey games with toe spreaders on. Did you have?
Oh, the best. No, but I've got them on now. I do have them on now. It's the greatest thing I've ever done for my back.
Why do you have a toe spreader?
It's just amazing what it has done for my back.
Do you tap dance when you have these toe spreaders on?
I haven't started the tap dancing yet. I'm a little upset about that. All right, I'm still working on that one. But no, I haven't done. But I do ride with toe spreaders on. Look at that. Those are good.
My toes are already webbed together.
He has his toes up in the air.
Yeah, your toes are webbed.
Yep.
Right. Do you have webbed toes?
Yeah.
All of them are webbed?
Yeah. So I can swim really good. Yeah, web toes. Yeah.
Yeah, I've seen you swim. Okay, so, right, we won't talk about that.
TMI!
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Enough out of you is what it means. That's right, Tasty Trade World Headquarters. Your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios that just got a phone installed. So we are going to be taking your phone calls, 855-238-2789 or 855-BE-TASTY. That's the phone number. Call. I got 4 or 5 lines open. I'd love to hear from you. You light them up. I'll keep these guys quiet. We'll go straight to your phone calls. Mr. Sheridan, welcome to the show.
Thank you. Good morning. Now, Tony, this is for you because Tom, this is out of his league. I don't know if you have NBA League Pass. I know you can't get the Bulls games. I know you can't watch those. So I don't know if you watch any games outside of the Bulls. I don't watch a lot of Golden State. I mean, I've seen obviously Steph over the years. I don't know if you saw highlights of his game last night.
I did not.
Well, Tom did for sure because it was on TikTok. He's just not saying anything. It's thick. I mean, it is unbelievable. The way, I mean, it reminds me of Tom back in the day, but his release, he just throws it up from anywhere and it just goes in. Here's my question for you. He had 56 points last night. I'll just throw that in there. He outscored Orlando single-handedly. He outscored them in the third. But how many 50-point games do you think Steph has in his career?
50-point games?
So I'm guessing 50. I'm guessing this is his 15th year. Call it 14, 15. I don't know what it is. 14th year, 15th year, something like that. How many 50-point games do you think he has in his career? Counting last night.
11.
Tony?
I got to go a little higher. 16, one a year or a little bit more.
Very good. 14. His high is 60, I think 62.
Unbelievable.
Does it remind you, like when you watch him, does it remind you of you back in the day? Just that quick?
Not really, because...
Yeah. Oh, no, 100%. But Tom's were from 2 feet. Like he had most 50-point games from 2 feet because he never had to run down the court. We would just flip him the ball because he'd be waiting.
It's not that he didn't have to run down the court. He couldn't.
he was like a veal. We didn't want him to get too...
I mean, I probably had the most double-digit games in our league over the years.
In the East Bay B League?
Yes. You couldn't really have...
I played more basketball with Mr. Sheridan than you have, Tom.
I doubt it.
No, 100% not.
We used to play a lot, Mr. Sheridan.
We did. We used to play at LaSalle Club. I know, but no. Tom and I legitimately were in a couple leagues for a few years with Steve, with Chucky. Oh, it was a star-studded team.
Oh, it sounds like the dream team right there.
Tom's going to say, what other losers were on the team? It was the two of us, Steve, Chucky. Who else was on that team? I can't remember who else was on
Okay,
the team.
you just named 3 people. If you had one phone call to make, you would not call.
Correct.
Nah, Steve, you would call. He would be the one you would call.
Here's the problem with Steve. Love Steve. Don't think he's watching, so I could say this. I would 100% call Steve. He's so slow.
Oh my God.
Oh my God.
Slow.
It would be days. Like he'd say, well, I didn't know you needed me to come bail you out now. I had to stop. I had to go to the pancake house, get some breakfast. I had to go swim some. He'd be there for sure with a smile on his face.
Steve was born in the wrong place. Like he should have been born in like the Bahamas, somewhere where life's a little slower. Yes. Like on a Caribbean island somewhere.
I never thought about that. That is spot on.
Yeah, he was born in the wrong place. Like he shouldn't. Steve's not a city boy. He should have been born on like a Caribbean island, somewhere where life's just a little bit slower. Some European country where they get off in the middle of the day.
Spot on.
Hey, Sadnov. I just got a quick DM from you know her. I'm not going to say last names, but she worked for you. You remember Mary Sue, right? She worked for you. She said, "Yeah, Sadnov, you were amazing. I was all of 5'2" and about 100 pounds, and you blocked my stuff out of there like it was nobody's business." Sadnov, is this true? Did you swat her stuff away?
Did she really write to you?
She really wrote to me. She goes, "Yeah, basketball famous at Toss." Yep.
You seriously, what is wrong with you?
Okay, it was.
You were in a game against Mary, and she maybe 5'2", 100 pounds, and that's the abuse.
In heels.
She's tall in heels. She's tall in heels. She looked me dead in the eye in heels.
She always wore heels. I got to give her that.
Yeah.
Seriously.
You're talking about her in like flats. In heels, she looked me right in the eye. We were about the same height.
I'm guessing her vertical in heels.
Oh my God! She said you slammed the ball right back into her face.
Not exactly. We just did.
Oh my God! You did.
I mean,
when you say not exactly, maybe by accident, Tony.
I mean, I was blocking a lot of shots that day, and I didn't realize it was hers. Like,
oh my God! Could you please explain for at least the two of us, but hopefully everybody, why were you in a game? I do remember playing in one game, a Thinkorswim game. It was a mixed game, okay? So, but I don't think you were there. It was the gym over by where Steve used to live, over on Damon. When were you ever playing basketball with Mary?
We were playing, it was a co-ed like 5-on-5 game. And
yeah, I got that. But for what? When?
I don't remember the year or the date. I don't know.
Why were you playing? Why were you playing a co-ed basketball game?
Because they needed my shooting.
If Mary, oh yeah, for sure. Like if Mary wasn't commenting on this right now, I'd go like this and say sold. Okay, but since she's commenting, I trust her.
No. It happened. It happened, but
the ball in her face, the block, everything else happens. You're not denying any of it.
If I remember correctly, I think she was chirping a little. I think she was chirping. I think she was like chirping at me.
Oh my God, Tony!
I might have got the wrong sister in the. I don't know. It might have messed it up.
Has it been like this all day?
All day. I got two.
All week.
Wait. I got 2 phone calls waiting for us. Let's go to your. I got you.
Well, let's get
in Toronto. I'll get the rest of you. If you call in. Let's get to your list. I can't take this. I'm embarrassed by you, Sadnov. I am absolutely appalled and embarrassed. I cannot apologize enough to her.
And at that time, she's 100 pounds. You were almost 3x her size.
That's what's so impressive about it.
Yeah, you were 3x. You were close to 300 libbies.
No,
you were right there.
No. I was a little bigger than her.
When you were laying on the couch for 2 weeks, you were right there.
You were a box of Dinkles away.
Oh my God, no. Anyway, I had to,
Tony. God is my witness.
Oh my God, I can't listen to you guys. I can't listen.
When he took the 2-week trip, you know what I mean?
Yeah.
He was
that time.
away.
Right. Oh, forgetting the chirping. All right. Top 15 someone's going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15. iBit at a 41 for everybody else. NVIDIA at a 46. Tesla at an 83. PLTR at a 78. Apple at a 51. GLD at a 40. Meta at a 31. Amazon at a 44. Microsoft at a 48. AMD at a 35. Google with an L at a 46, SMCI at a 39, Dell at a 29, MSTR at a 37, TQQQ at a 58, and number 15 for Tom iBit at a 41, rounding out the next 10, AVGO at an 81, Intel at a 68, TSM at a 52, Netflix at a 39, UAL at an 87, Oracle at 100, RKLB at a 50, TLT at a 47, and SMH at a 38.
What do you have to say about that?
By the way, speaking of donuts, did you get any food today you complained about?
Did I what?
Get any food today? Like, was somebody generous enough to stop and pick you up food like Beth did with donuts yesterday where you got to complain? Did you complain about anything today?
No, today is one of the best. Today's probably the best lunch we get.
Oof, that's got to be Fantano's. Or you're saying it's the best? I'm going with Fantano's. Leave it at that.
Gigi's Chicken.
Oh, no, you told me you said Gigi's Chicken. Oh, you did say that yesterday. Gigi's. What sides do they bring?
They do a broccoli coleslaw.
Look at him. He's so excited.
He's so happy. He's so happy. Look at him.
A broccoli coleslaw. Because this is a little out of your shuffle zone. It's shuffle worthy, but it's a little far for you. Because from your place, mile and a quarter, mile?
No, less than a half a mile.
It's a mile.
Half a mile.
Oh my God, half a mile. Let's go over this, okay, Mr. Genius. How many blocks? How many blocks in a mile?
Oh no, I'm not going over this. I'm just telling you, it's around a half a mile.
Okay, I'll take a mile. You can have a half a mile. Whoever's closer. What number you want to put on it?
It's under a mile.
Give me a number. You just said it's a half a mile. I'll take closer to a mile. You can have closer to a half. What do you?
I forgot. It's a couple blocks. I get. It's probably 3/4 of a mile.
Oh my God, it's a solid mile. You're 5 blocks from my house, and I'm 5 blocks from there. That's 10 blocks. It's over a mile. But continue. Go ahead. That's out of your shuffle zone.
No, it's not out of my shuffle zone. I've walked there before.
Okay. Broccoli, cauliflower, what? Coleslaw, what else?
A little mac and cheese, like some...
nice. They have mashed potatoes, don't they?
What?
Don't they do mashed?
Mashed. Everything.
Yeah, there you go. Is your finger ready to go into the mashed? Do you lick it before or after or both? See? The scoop. Zorro had the Z. Tom's got the mashed potato scoop. Okay, let's go to phone calls.
Let's do it, my friend. Let's do it. Let's do it right. Let's do it right now. Our first caller is going to be Texas. I got Eddie. Eddie in Texas. What's up?
Hey, what's up, Tasty? I'm glad to see that Tom's aggressiveness in the market also translates to basketball against small women. I got a question for buying power allocation. So I know as the book covers as IV or the base increases, traders can generally put on more buying power, but does that solely depend on the VIX, or if I'm only entering the single stocks that have a high IVR, could I use a higher buying power reduction? Or sorry, allocate more of my portfolio capital?
I didn't get the question. Did you guys?
Hey, John.
Eddie, are you still there?
Eddie.
Yeah.
I think he's on speakerphone.
Yeah, could you just put on regular phone? That speakerphone made it so we couldn't hear you.
Hear you.
I'm not on speaker.
Okay, could you say it again then?
better.
Try it one more time. Then.
That's better.
Couldn't hear it.
Okay, I'm sorry. Let me say it real quick. So buying power allocation can change based on the VIX, right? And we can allocate more based on the VIX. But if we only enter...
Here, Eddie, I think your mouth is too close. I think your mouth
Yeah,
is too close
hey,
to
hey,
your
Eddie,
phone. Just back away a little bit. It's really hard to hear you.
We just can't hear you. We, for some reason, it's coming in weird. We can't hear you what you're saying.
Okay, so buying power allocation can increase based on the IVR.
Buying power, you'll increase your buying power allocation based on IVR.
Okay.
Okay, but say we only enter single stocks or ETFs that have IVRs that are very high. Could we sort of stray away from the general rule that if the VIX is high, we can, or if the VIX is too low, we can allocate less capital?
No, we don't ever vary from our mechanics, but I will agree with you that when individual buying powers are high, it does make for more attractive, more diverse and more attractive opportunities that we may stray away from.
Not buying power.
What?
You said buying power, individual. You're saying IVR.
Yeah, when individual IVRs are high, we will go to a more diverse group of underlyings, including more individual equities, but we won't. But we'll still stick to kind of like what we call. There's three levels of that, VIX chart that we use with respect to capital allocation. There's like a conservative approach. There's a moderate approach. There's an aggressive approach. Right now we're still in that like moderate range. Like we won't get really aggressive unless there's a real pop involved from here and we go, on a sharply lower down move. So yes, we will look at more individual underlyings, and yes, no matter what, we'll stick to our mechanics.
Awesome. Okay, thank you, guys.
Thanks. Sorry about that. I just had trouble here.
Thank you. Sorry about that problems. Yeah. 855-238-2789 or 855-BE-TASTY. Phone lines are open. I got 4 or 5 lines open. Give us a buzz. I'm going to go to Toronto. Carlos in Toronto.
Good morning, gentlemen.
Hey, Carlos.
Good morning.
Morning.
Just the question we all dread in Canada, if there is any update.
I should have an update for you next Friday. So we just had a team up in Canada this week with the clearing firm, and we have a all hands on deck meeting Monday. So next Friday, I will be able to give you a much better update.
And we apologize. We apologize for the delay. There's no reason we don't want to be in Canada. No matter what administration is there or what you want to call it. This has been a fumble by us and everybody that we have partnered with. So I apologize.
Appreciate it very much and keeping our fingers crossed.
Yeah. Thank you so much for your
Thanks,
support.
Carlos.
Yeah. I'm going to go to New York City. I got Mohammed in New York City.
Hi, guys. Good morning. How are you?
Hey, Mohammed. What's going on, man?
Yeah, I'm the guy who writes to Tom and with Tony on Twitter. I'm a truck driver, actually. I'm all over. So I take Tasty all over the U.S. on the road with you guys. And from morning to evening, Tasty is on the truck, on the YouTube, and I'm trading while I'm driving. So my question to you guys is that I'm trying to follow the Tasty mechanics with a very small account. And it's hard to find a premium with a very small account because, as I see by the market measures, the iron condors are out. All I can do is spreads. I can sell spreads. And with that, I have to be directional, and I cannot control my delta that way. What's the best strategy for a small trader like me?
Hey, Mohammed, and thanks for calling in. I think maybe if you widen this, I think Tony and I will both say the same thing here, which is since you have to do spreads, can you go a little bit wider? I know that sometimes that small traders get a little more nervous when they go wider. I'm not saying go to like a full synthetic strangle, like the cheapest option you can buy, against whatever you're selling, but go a little wider. Can you try just going a little bit wider than you're currently going? I think that's what would be my recommendation. Tony?
I'd be in the same boat as Tom. I mean, if you're doing, $3 or $5 wide spreads, even if they're directional on one side or the other, try to go to a $5 to $7 to $10 wide spread.
Yeah.
Don't increase your contracts.
Don't increase your contracts, Mohammed. Just go wider on the spreads.
I got it. Thank you guys, and thank you for being who you are. I love you guys, and I take you everywhere on the truck with me.
Thank you, man. Appreciate it.
We're going to send Tony out next year. You drive Tony across the country. We'll send him out with you in the truck.
Oh, I'd love that.
Hey, if you see a Swift truck on the road with a blonde-haired guy driving it, that's my brother-in-law. Say hi to Sam for me.
I'll say hi to Sam. I'll wave at every Swift truck that I cross now.
Fantastic, man. Thank you so much for your time. We're going to go to Connecticut. I got Jack in Connecticut.
Hey, how are you? Thanks for the call. I got a quick question. I'm new at this, and when looking at the credit to receive with an iron contour, I'm a little confused. The 1/3, the width of the spread, are you combining, both verticals, or is this for the total credit? I don't know if that was clear or not.
No, I got it. 1/3 the width of the strikes is really simple. Keep it simple. That's all we're trying to do. A $10 wide spread. We're talking about the credit received. You'd be looking around $3.33 would be 1/3 the width of the strikes. So you get around $3, you get around $4. Those types of spreads would meet all of our criteria: high implied volatility, IV rank. That's what we're looking at.
I think he's asking though if you do a $10, it's not 20. It's not 20. If you do 10 and 10, you're only looking for a third of a 10 because you can't be at both places. I think
it's the combined. So to answer your question, it's the combined credit.
The width of only one of the spreads.
That's correct. Okay. I'm sorry. I was giving an example of one spread. Yep.
Right.
Okay, I think
so if you're doing 10, yeah.
Yep. Yeah, and a $10 wide iron condor, we'd be looking around $3 credit.
And you're just looking at whether it's on the put side or the call side. If that is what you're talking about.
Correct. You don't add the two together. So if you're doing 2 10-point, it's still 10. You don't look at a 20-point and try to get a third of 20 because that would be close to $7 on a 10, which isn't. You're going to be so close. That's not going to work. Yeah. Just take one, whatever. Put side, call side, doesn't matter. Now, I guess the next question would be if you guys don't have even, what do you do? I assume you go to the bigger. So if you're doing a $3 wide and a $5 wide,
it's going to be even, Scott. $5. We only do it for even. Yeah.
Yep.
Okay.
Okay. Thank you very much.
Sure.
It. You got it, man. Good luck to you out there. We're going to go to Jackson, Mississippi. We got Bobby. Bobby, thank you. Welcome to the show.
Hey, how you guys doing? Love the show.
Thank you so much, Bobby.
I was just wondering, what are you guys' favorite trades for next week?
The good ones.
Why? What's next week?
Well, since today Friday and, end of the trading week, I was just wondering, what do you think would be some good trades for next week?
Well, we definitely have a lot of stuff on for next week. There's no question about it. We've been putting some trades on this week because of the huge movement. So, I can't give you a specific trade because that's not kind of what we do. But, if you watched us today, we were buying the opening. We're not doing anything now. We're going to be rolling. We're going to be rolling a lot of our trades for the rest of the day. But we were pretty aggressive this morning. Buying the down opening today. I can't tell you about next week, but I think more of the same chop. would be my call right now for next week. More of the same chop, maybe a little upward bias until we resume the down. I don't think we're going straight back up from here. So little upside chop until we maybe kick it over one more time. Does that help? I don't know.
Tend to agree.
Okay. Thank you, guys.
Hey, man, take care.
Thank you,
Thanks.
Bobby. Appreciate your time. Mr. Sheridan, I'll give you the parting words here before we say to everybody, have a great weekend. Are you okay? Are your clubs clean? Everything all right?
Wow, after him. Worst case scenario is I hang up on him.
Well, I hope you don't do that.
I didn't say anything. I didn't say anything.
You're about to, though.
No, I'm not. I'm in a good mood. I'm gonna, don't worry, guys. I got this.
You're gonna listen to what Scott has to say, and you're gonna take it as excellent feedback. We're gonna take a quick 90-second break and come back. We got more
I listen
Tasty Live
and I
after-
don't judge.
That's right. You listen and you don't judge. We're gonna be back.
See, that was a good video.
I
Right.
listen and I don't judge.
We'll be back in 90 seconds. We got more Tasty Live with Liz and Jenny next. I hope you stay on so I can listen and not judge too. Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and we made it to Friday.
Oh my gosh, what a week. We made it. And I am in my maroon. I am ready for JD's basketball game tonight. Got my tickets, ready to go.
Wait, why are you in maroon?
Isn't that your school color?
No. Not at all. I think it's the opposing team school color.
What's your color? I've got to change.
Blue and white. It's navy and white.
Oh, that's easier. I have a lot more navy and white than maroon. This is the only thing I could find maroon in my closet.
Don't you wonder why I've never worn maroon?
I don't even remember what you wear on your game days.
You're looking at it. This is my zip-up Lululemon jacket. I've worn it every game.
Okay, navy and white.
Yeah, navy and white. Navy and white. It's actually, well, their uniforms are white and navy and gold. So if you want to wear gold, you can. If you want to come dazzled in gold, we'd love to have you.
Maybe that's what I was. I should have remembered the picture of JD in the white and navy. Oh. Anyway, you ready for the big game?
Yeah, we're excited. It's going to be fun. Last home game ever.
Oh.
Yeah, it was a great run. Honestly, it was super cool. It's been like a real joy sitting next to my brother through this whole process. And it's been fun because like we sit in the front row. It's a lot of fun. So yeah, it's going to be.
Yeah, your brother's the #1 fan. He's like their mascot.
He is like their mascot. It's the end of an era, but it's been fun. You know what else is finally fun today, Jenny Andrews? The market. Can we pop into the platform, John? SPOO's up 36.
Yeah, SPOO's up 36. Finally an up day, and we have had up mornings. Is this going to be a Groundhog Day where we're up, but by the end of the day we're down 70? I don't know. I don't think I could take another one of those.
You know what I'm doing right now while we're talking? I know we're up 36, but I'm doing it.
I did the Jejune right before our show. I told Liz since we said we're going to start doing the Jejune. Usually we finish the show and then I put in my Jejune trade, but I did. All right, you're in. Put in your GTC to close it. We had a question yesterday. What is the Jejune trade? We buy a debit spread wrapped around where SPX is trading, $5 wide, pay about half, then put in an order to take $50 out of it. This will be our second trade, SPX trade of the day, because this morning we tried to do a Jack Tucker, did $25 wide iron condor for a pretty big hefty credit. But I got out of my way too fast.
We cannot call it the Jack Tucker because he's got diamond hands. We have paper hands because we're both out of ours for a very small profit.
Hey, but and we did one and he does tranches. But I'm going to wide iron condor or $25 wide, big collection. I think I got 880 or something like that. I'm going to call it the Jack Tucker, but I only did one. And I got out way too soon.
I mean, you know how we say like a baby jade lizard? You got to call it a baby Jack Tucker.
All right, so I did the baby Jack Tucker. And I got out soon because I'm like hopeful, wishful thinking that we're up 70 by the end of the day and make back yesterday's move.
Yesterday was a real humdinger at the end of the day. I will tell you that.
It was. Today was one of those days where I was afraid to look when I woke up.
Oh yeah. You know, it has had a big turnaround. Take a look at this. Archer Aviation. It was down. Now it's up 10%. But when they had earnings, it was down to 6 something.
Yesterday at the end of the day, Liz and I were talking about how we both had a lot of Archer, and we were like, "Is there anything we should do?" And I said, "Maybe we should buy those weekly 7 puts for." They were 12 cents.
Get to 7.
Yeah, maybe we should buy those weekly 7 puts for 12 cents, and just in case. And Liz is like, "No way, it's not getting to 7." And this morning it was like 6 something.
Its low is 664.
Oh, for the day, but earlier, early pre-market. I don't know. Does that?
No, I mean 664 is pretty low. Like I think that's the low.
I know, because I woke up and I thought, damn, I wish I bought those 7 puts.
But so we had the weekly puts. We had the 8.5. I'm gonna close these for 5 cents.
Close those and just sell some puts. Now, you probably in the monthly because to get anything.
Well, I'm going to the 21 monthly instead of farther out in time because we can get 70 cents for the 8.5. Yeah. If we want to get 50 cents, we can take it down a little bit if we wanted to get 44 cents for the 8.
I'm fine with the 8.5. I want to give you read you a little story. This is the problem or the risk, or if you're trading the weeklies, because I like the weekly. I'm a big weekly fan. And this is the risk that you have, or the problem that you could run into when you're trading the weeklies. This morning, I woke up to this email. Dear Jennifer, your account has been exercised. It has exercised and or been assigned on the following options: IBIT, DKNG, DDOG, AEO. Like the list went on and on and
Isn't it weird on a Thursday? Did they have dividends? Because I didn't get assigned on anything.
I think it's just the market and the move. No, I was assigned on all puts. It had nothing to do with dividends. I was assigned on all puts.
Oh.
I think it's just their weeklies and the market and the pandemonium. I don't know, but there's a scrolling email of assignments today.
Well, what we got assigned on would be IBIT. Take a look at this. Yeah. So in this account, we have IBIT right here. So we are long 100 shares at 53.5. We know that's the strike. And we had a 53.5 50 put spread in.
Right. So that's holding up buying power. Close that whole thing. And we know.
Here's what's interesting. We know. Never mind. We're long the put. Technically, this is a married put, right?
I mean, technically, we're long the call. Essentially, we're long the 50 call.
No. We are long the 50 put, period. But we're long the stock and you buy the put. Technically, it's supposed to give us back all that capital.
And maybe, and it's only using like 800. It's not using as much as a naked put would. So it is giving us a lot of capital back. But
no, it should only be holding up. I guess that's right. From 50 to where the stock is trading. It should be holding up $3.
No, it should only hold up the distance. Right.
The distance between. Yeah.
And we know that this doesn't work for everything. When people talk about, if I'm long the stock, can I buy a put? Will it release the capital? Maybe, sometimes.
That's just right. We remember I went storming in and talking to the guys, and Tom's like, "Oh, let him have it, Liz." And I was like, "Let's try this one. Let's try this one. Let's try this one." It turns out if it's like a very liquid ETF, which you would think this is liquid, it works, but it really didn't.
It's not always, and it's not everything, and it's not always the exact. So I don't think you can count on that for everything. But I will say, let's sell some puts. Let's keep the IBIT puts going. I don't mind staying in the IBIT puts. There's premium even in the 7-day.
There really is. So let's take a look. Now we had the 53.5 up here. We're obviously going to pick a different strike. So let's just go.
Or let me. You know what? Let me just give you bring this up. Caution, Will Robinson. Before we sell any 7-day options, I'm gone and you have TP. So maybe we go out.
Oh, I'm not scared.
No, because I know when you have TP on, you don't often get in to manage our positions.
I know, but I've got them for a week, so I've got to be able to.
Okay.
You know what I'm saying?
But it's your first day. Next Friday is going to be TP's first day on.
I'm okay. I'm cool with it.
Okay. So here, No, we never have sold naked puts in IBIT because it does use so much buying power. That used $1,800 in buying power. We always have spread it off because.
Just sold the put. Now watch what we can do. So we've got the 46.5. I'm going to buy the 43.5.
Sure. Yeah. It's giving you back $1,500.
Yep.
So we usually do spreads in IBIT because now looking at these options and the premium, I had the same strike puts. I was assigned on some, not all.
Really? That's interesting.
Yeah. So I was assigned on some, not all. So I think I might, because the buying power in there is pretty high on a naked put anyway. I was thinking I might just keep my stack because there's so much premium on both sides and just sell strangles around my stack. That's what I wouldn't have gone out and bought IBIT, but since I was assigned, I might just keep that stack and sell strangles around it.
And just keep in mind that's double premium, because when you're selling strangles, it's that stock holds up 50%, and then the options hold up quite a bit.
What does the stock hold up? Because we saw those naked puts were holding up close to 2,000. What does the stock hold up? It's almost the same. The naked put and the stock almost hold up the same.
Yeah, so you're going to have if you have the stock, you're going to have double if you sell the put with it.
If I sell strangles around it. Well, but I wasn't assigned on all my puts. So when I roll my other puts, then I can add calls because I have the stock and I don't have to worry about upside risk like I used to worry about in IBIT.
Got it. Okay. SPX, the Jajun trade. We're in there. I want to see if there's anything else that we need to be managing.
If you hit the closed, I want to talk about oil. If you like the closed tab on the top, we don't see it because we closed it. I wanted to let everyone know about that oil position.
Okay.
So we closed it this morning. Our oil position was almost a full win. We sold it for $160 and we had to separate it to get filled. I bought the put spread back for a penny, which is a dime, which is $10, and I bought the call spread back for 2 pennies, which is $20. So we made $130 on this, 2-day oil trade.
Now, I would like to state for the record, and we looked at this when we were putting it on, and actually, you know what? I'm not going to put it on, Johnny. I just want to show something. I'm just going to grab some strikes here. This is the 3-day. I want to show this because it does grow teeth. Okay. Now, Jenny, how much buying power is this? I'm asking only because, I have you right to the buying power and I can't move you today. So 1,700. So keep in mind, this has an $820 max loss, but it holds up more than that. And actually, our CL position this morning, because span margining does not like as you get nearer and nearer to expiration, was holding up close to $2,000.
Right. It was holding up a lot of buying power and we were assigned, our buying power this morning was a hot mess because we were assigned in coin, right?
I'll talk on the side. I'm going to show you what we did today, all symbols today.
We did a lot because we were assigned and we needed to free up buying power because coin was holding up a lot of buying power. The IBIT was holding up anything you get assigned in is going to change your buying power.
Yes. So here we closed our coin. We got assigned a coin, closed it, make sure we got that buying power back. Norwegian Cruise Line, this was the extra short that we just left there for the day, but we were freeing up buying power anyway, so we bought it for a penny. CCJ, we switched a naked put to an in the money call just because it freed up a lot of buying power. Here's our Jajun trade. And then there's Archer and IBIT. So that's what we've done a lot. We've done a lot already today.
Right. And so that just the naked put in CCJ, it was so far in the money, like $12, $13 in the money. We bought back the naked put and bought an in the money call. So essentially we were a long stack in CCJ. We're still essentially long stack in CCJ. We just have a long in the money call now instead of that deep short in the money put. And it keeps our buying power.
And I think what other people need to realize too is that, you have to keep an eye on that, on your buying power, because just because at order entrance it was one thing, it can change, and does change intra trade in the cycle because you get the loss or it gets nearer to the at the monies or something happens in the market and it starts to get a little bit scarier.
With the week we had, margin has blown up. I've seen it. And with the week we've had, margin has blown up in some areas. But
margin has blown up.
And maybe not everywhere, but it has. It has. You might notice that, maybe you used to have $50,000 in buying power and now you only have $40,000 in buying power. What happened? A lot of the margin has, I noticed and when we were talking about that LUNR, when we put that on, that only used a few $100s. And didn't you say it was holding up a lot of buying power?
It was holding up a ridiculous amount. Let me see what it gives us back. What does it say right there?
It says only 653, but this morning pre-market, it looked like it was holding up a lot more.
It was holding up $1,200 this morning, which is almost cash secured.
Yeah, right.
Which is almost cash secured. On any given day, you have to keep in mind. You have to keep an eye on these red in the money signs. Just real fun fact, mostly for the audience, not for you, Jenny. We did get an amazing market recap on the market measures from Kai, so we will be going into that later. But I want to make sure we get to this FUBU in the money because this was a FUBU TV. We sold the 15.
Oh my gosh!
Wait, hold on.
It's FUBU's down. It lost 50%. Oh,
it lost
16%.
16%. Yeah, 50 cents, 16%.
Oh, but like from our show to, it must have gone down a lot between our show and the end of the day too, because we sold the 4 put and it's trading in the 2 handle.
Yeah, it must have. So we lost $50 in it. I mean, let's see if we can give it one college try, right? Let's go to 40 million shares of trade.
Well, just buy the 2.5 for 50 cents. Buy the 2.5 call.
Yeah.
Yeah.
So this will be the college try, see if it bounces back at all. I'm going to pay a little bit more than that on it.
All right, and I'm pushing everything out. I don't like the Jajun trade. It's not.
No, we were up 30
something.
Yeah.
Oh, Liz, question. As I'm pushing everything out, everything we did early this morning, did you push any of that out?
I did not. No,
okay, I didn't. So I'm pushing, making sure that all gets out too.
Okay. While you're doing that, I'm going to pop into Twitter because, I mean, I'm a sad face too, Mikey. We missed our Polish Warrior's birthday on Friday. I can't even believe it. It's so I'm sorry. It was on Monday. It's Friday today. We missed our Polish Warrior's birthday on Monday. So we have a lot of making up to do because look at this. He does his annual underwater picture and says, hello, Liz and Jenny from the Rattan. Isn't that crazy? And we forgot their birthday.
Okay, Mikey, when you got back, we were all ready. We had birthday hats, happy birthday, Mikey shirts, happy birthday, Mikey mugs. We were ready, waiting for you to return from your underwater trip. It was going to be the biggest Liz and Jenny celebration the world has ever seen on your first day back live on Twitter. Return from under the sea.
But he found us out. Okay, so let's go. So then he comes in with, this was the Eagle Ray from day one. I love seeing those pictures. He's amazing. Him and his beautiful wife are amazing.
Oh, Mikey. We love Mikey. He knows we love him. Honestly, I forgot my anniversary and could have easily forgotten my husband's birthday. I forget a lot of things, Mikey. Don't take.
You know what? It's Jenny's birthday Monday, and I'm not even going to say happy birthday to her, Mikey. How about that?
Just forget about it. Just forget it.
I am. That's it, Jenny. It's over. I'm not even gonna say happy birthday to you. But Frank the Great comes in with all of this amazing stuff. We had the PCE and stuff this morning, and I think that's why the market was up. But this is what I really wanted to get to. Look at this.
There he is, Jack Tucker's nephew.
That's awesome. This kid's jacked. This is a high schooler?
This is high school. Yeah, right. This was high school. There he is. That's crazy that Jack Tucker, who we know and love, his nephew was my high school mascot. And we graduated the same time. So that's 1994. That was when he was a senior. He was Charlie Celtic.
I love it. That's super cool.
I know. And he was great. He was great.
Jack Tucker, you can tell, number one, that Jenny does know him, really, because yesterday her reaction was fantastic. But you can also tell that this is a picture of a picture.
Well, I didn't have it on my phone from 1994.
No, I know. You actually had like a hard copy picture. Is this the yearbook or is this?
I had to dig out the yearbook. Yeah.
Oh, I was thinking this was a personal photo of yours. This is in the yearbook. I was like, I kept a picture of him going like this.
You know what? I've got a little box right in my closet of all my favorite pictures. I just had to pull that out and find my picture of our old high school mascot.
I think that's awesome. And then, okay, we did a baby Jack Tucker. Here's the big Jack Tucker. Hold on. Whoa. Here we go. 3 tranches today. So he is in great shape. Let's see. 59, like 32 is the top and 58, 32. So you got, a 100-point range.
And where are we trading now?
So SPX, I'm just going to keep it on there. I'm going to look at SPX right now on this. SPX is 58.83. I mean, he's right here. It's perfect.
Oh, we're 58.83. We're right in the middle.
Yeah, Jack.
So I wonder, what time did he put it on? 9:17. Oh, not that long ago.
Nope.
We put ours on pretty early. Maybe it was like 8:40.
I think it's too early.
Well, we got out. We got out really. Again, we got out for very little. Very little.
Okay, Punish Pixels is coming in. Happy Friday. Would you consider putting on a put ratio, sell 2 buy 3 or sell 3 buy 4 at a low delta ranges 10 to 15 for a small credit at 45 days? In the case of an IV spike, the additional puts act as a hedge. It's not a bad.
Oh, wait, did he give a product?
No, but he's looking low delta, like 10 to 15. So let's just go to.
And you see he's buying more than he's selling.
I know. He's saying it's acting as a hedge. So watch this. I'm just going to go to IWM. Okay. Mm-hmm. So he was saying 45-day range. I'm going to go to 48 and 10 to 15 delta. So you're buying 4, right? Oh, no, you're selling.
He was selling 3, then buying 4.
Selling 3, the 10, selling 15.
Yeah, and then I think probably it's not going to cost him anything, right? It's taking in a little credit, and then you have 1 extra long.
It's not bad.
No, it's not a bad idea. You have that risk in between.
No, your max profit is to the downside. Keep that in mind. You're only making the 65 cents unless it goes down. I'm going to take a look at it on the curve page. Honestly. It's pretty. It's not the curve page. Curve.
You're getting a credit. You're not paying for it. If you have a massive move down, you have that extra long, and you just have. This kind of reminds me of, there was a TFM trade that was similar to this, where it had that dip, that valley of death, but then if it went too far, then it picked back up.
Yeah. This does look like that. It looks a lot like it.
Right. And what was that? I don't remember.
The 131 or 141. I'll get back to that when we do this. But it's not bad. I mean, Jenny, what's the buying power on this?
1,700.
Okay, the buying power is 1,700 and the max loss is 1,700. Okay, I don't know why you are right on the buying power today, and I cannot move your little face.
No, that's fine. I can see it.
But keep in mind, you're going to be holding up $1,700, which is fine. I'm okay with that if you have capital on the sides. It does give you a little bit of protection to the downside. There's a little bit of a valley of death that's only 10 points wide, and then it picks back up again.
Liz, can you go back to the trade page and make it as narrow as you can where you're not paying for it? Because that will decrease the buying power. If you move the 4 up, just move that up, you're long.
Oh, you want me to move my?
No.
Long?
Yeah. Move that whole long up to the point where you're not paying for it, because so now you've got 1,100 instead of 1,700, and it's the same thing. It's pretty much the same trade where you get that you're getting that extra long without paying for it.
And your valley of death is shorter. Yeah.
It's smaller. Yeah. You go from 1,700 to 1,100.
That's not bad.
So now, but it doesn't have to be so set on delta. You can kind of adjust.
This is not a high probability trade.
No, this is like, you're, instead of spending the money to buy a put, you're coming up with a creative way to get some downside protection without paying for it.
Yeah. Oh, and your max loss is this peak right here.
Mm-hmm.
I like it. I mean, I think it's pretty creative. Not bad.
Yeah, because you're not going to pay that max loss in the middle of that. If you're putting this on 45 days out and rolling at 21 days, you're never going to hit that 1,100 max loss.
You get a gold star. I like that.
Yeah, Punish Pixels. I like it. I'm going to go put some in after the show.
Gold star. Okay, Jack JT. Easy game. Okay, Dell. Initial stabilized at 105. Hedged approximate deltas there with short shares. I rolled the at the money for premium after the vol stabilized into the 21 DTE. The basis of 95 plus $1.80 per lot picked up the hedge on the pre-market roll. Okay, look at this. So that means Jack JT. Let's see what Dell did, because I didn't even look at Dell. We didn't do it, so I didn't look at it.
So remember, we got in and got out. We had the 100. We had the 100 put, and Dell, I think, was below it this morning. Yeah, if you look at the range today, but it was the 0 day. So
yeah, the 0 day. Right now it would have been fine, but here, let's take a look. 90. Oh, we would have been so mad.
It got low. So honestly, this morning when we were dealing with trying to get buying power back because we were assigned on a handful of things, we would have been sweating this Dell put.
We would have been totally sweating it because it would have been holding up. Hold on, let's do that right now. It would have been holding up. What is it? How much is it holding up?
$2,000.
Yeah, that's another $2,000. We would have been like, oh, we're going to take that loss because we would have had to.
I know. Well, yeah, wherever it was in the morning, it would have been. Now, before you scroll, can I ask you something? Because this has been on my mind for years. So years ago, I love SpongeBob. I love Patrick Star. There's somebody.
I will tell you, I watch a lot of movies. I've never really seen an episode of SpongeBob.
Okay.
I don't know if you're going to ask me something about this. This is something I've never really gotten into. My kids never got into. We never really watched SpongeBob SquarePants.
Well, one of our friends was dating someone, and I said, oh, he reminds me of Patrick Star. She's never gotten over that. She ended up marrying him. She's never gotten over that.
Oh my God, who is it?
She was so mad that I said her boyfriend reminded me of Patrick Star, and I don't think she's ever gotten over it.
Come on, just give me a clue. You don't have to say the name.
I'll tell you later.
Do we have a nickname for her?
I didn't think it was a negative because I love Patrick Star.
I can't figure out who looks like this from that.
No, not look like that, personality.
Oh, I don't know his personality. I don't know Patrick Starr's personality.
Not look. I wouldn't say like, oh yeah, your husband looks like Patrick Star.
That's why I was like, oh my God, Jenny, oh my God. Okay, now Cupcake comes in. I don't want to jinx the green today because all that changes real quick yesterday. It all changed so quick, Cupcake.
Cupcake, I did not see yesterday coming.
No.
Neither did Liz, because we got rid of our short positions. We had a handful of short positions. We got rid of them early on. By the end of the day, we were both not happy.
No, and SPOOs are only up 14 right now. Like things are, the times are changing. Cupcake.
Oh, what is the VIX doing?
Okay, let's look. The times there, the winds there are changing. VIX is down.
Yeah, down a little, but it's still almost 21.
Yeah. But I mean, look at this. That's nothing. Nothing. Okay, so let's
Cupcake, I was hoping by the end of the day we'd be up a lot. I'm hoping by the end of the day today we're up a lot.
Okay, Gary. Looks like a new tweeter. Short bonds yet? Mm-hmm.
I know there are a lot of people who are on the short bond side. Where's ZB right now? 118.
Yeah, maybe.
I mean, I heard Jamal saying he's long and staying long, but I see where you're coming from.
Yeah. Now ZB's big dog, so short bond. Sometimes you can do something like this.
At 91 though, then I look at bonds 118, and then you pull up TLT 91, 92. I don't know. I like to play it from the long side when it gets low, but I rarely just sell it unless TLT is closer to like the 100 handle.
This does not look shortable. ZB did.
No.
This does not.
No, yeah, because ZB you only see like a moment in time.
Yeah.
So, and I heard someone on the news on some station saying the yield curve was inverted. But if we go back and you look at the 2Y, 10Y, you can see yesterday when I looked, the 10-year was still slightly higher than the 2-year. So I don't know when that happened, if it happened. Oh yeah, that's good. Pull it up.
2YY, 2, 10YY.
10Y, just 10Y, just 1Y. And I believe the 2YY 10Y is 1-to-1. It's 1-to-1.
Oh, it is?
Uh-huh.
Oh, it's the ZBZ and that's what?
And usually if it were inverted, we would be doing the other way, buying the 10YY.
Yeah, I mean, it doesn't matter. You're looking at the chart. You can see if it's an extreme or not extreme.
Mm-hmm. Did it ever go negative?
No.
On that day, on that that lowest day, if you click on that lowest day.
I can't read that.
I can. Maybe not. I don't know.
That's out of my pay grade right there. I have no idea what that says. I don't think it's inverted yet, but what do I know? Oh my gosh.
No, I don't.
It's changed. Okay, but here's what, to your point, I want to show you this. So Gary says short bonds yet, right? And then you come in with Liz and Jenny forever. Happy Friday, ladies. Is VXX the best way to trade the VIX? For the last 5 years, VIX above 20 has been a buy the dip opportunity. That's true. For the last 5 years, it has. Extremely bullish bonds for so many reasons.
Okay.
TLT credit spreads paid diddly.
Yeah.
Would you use a zebra? Thanks for getting me out of my collar. So this is what I was going to say. I like what you said. I mean, it's true. But, you can go back and forth with this. Gary wants to short bonds. Liz and Jenny forever is bullish on bonds.
But when you talk about is there a best way to trade the VIX, if you think like VIX at 20 is a sign of the bottom, then getting long the market or, selling puts or putting on bullish diagonals or whatever, if you think this is a buy the dip point, just getting long deltas is a way to short the VIX, because if the market goes up, the VIX is going to sell off. And I think there's more profit potential in just getting long than selling the VIX.
I kind of agree with you. I do agree with you. But they did want to ask about getting long TLT. They said the credits. They said calls you don't get much for if you're.
I like zebras in TLT. I do like zebras in TLT. And if I trade TLT and want to get long, I do zebras, but not here.
But look how cheap these are. They're very cheap for zebras.
Yes. They're very cheap. If you want to get long TLT, a zebra. I like a zebra because 1 for 1, if TLT goes up $2, you make $200.
Yes.
For 1 for 1, you make money to the upside. Every dollar up, $100 on each zebra.
And you know what I love? I mean, I'm pretty sure Liz and Jenny forever just baits us into showing him a zebra because he knows how to do it.
So it's interesting. You've got Gary short bonds, Liz and Jenny forever long bonds. I think we'll take a pass and wait for some movement before we get in. Here are the blue and white. This is blue and white. And one more.
Oh my gosh, this made my day. Thank you so much, Uncle Beats.
That's really funny.
You're like, I'm in my maroon. I was like, we've been in this high school
Ready
for
for the
4 years. He's a senior.
I don't pay attention. Oh my gosh. That would have been me tonight. I'm
in my maroon. I was like, okay, great. What do you want me to do?
Oh my gosh, that's hilarious.
Uncle B2, you are making.
No, that's from Jack JT. This is from Jack JT.
Oh my God, Jack JT, this is the best. Thank you so much, Jack.
And I still couldn't see it.
Wait, live look into Jenny's history. Oh, JT, you crack me up. Okay, the capital market to money market. Thank you.
Oh, okay. I briefly heard it, and I was like, what? And then I quickly looked at the 2-year, 10-year, and I'm like, that's not inverted. But thank you for clarifying.
The 10-year, 3. Okay, thank you very, very much for all of these. They make me very happy.
They are funny.
They're funny.
Really funny. I'm getting my hair colored tomorrow. So.
Oh, stop. Looks good. For your big birthday celebration on Monday that I'm not even going to say happy birthday to you on.
Well, my birthday is getting overshadowed by the fact that I'm leaving for a Disney cruise next week.
Yes, you are.
First time on a Disney cruise since the last time I was on a Disney cruise was Logan was 15. Now he's 21.
He's not going with you though.
No, but that's how old he was.
How long ago it was.
So if he's 15 and he's 21, 6 years ago. That was the last time.
Yeah. It's a long time. I got to get on one soon because I got to keep my status.
You can come with me over Easter. I've got back-to-backers. I'm going over Easter too.
I know. I love it. I do need to keep my status. So what if you see me? I'm like, what are you doing here on Easter?
I can say this because my in-laws don't watch the show, but my in-laws were like, let's have a giant Easter party at your place on the lake, and we're gonna have everybody. And that's when I was like,
ooh, we're out of town.
Sorry. I'm on a cruise.
Ooh, we're out of town. Are they throwing the party at your place anyway?
Yes. I'll miss it.
I know.
You could you could either take your family, you could take your in-laws to their party on the lake, or you can join me on the Disney cruise.
Oh, so they're all still going to your house?
Yeah.
Oh, gotcha.
And I'm just getting as far away from as I can.
Okay, Jenny, it is that time in the day. What time is it? It is 10:34. Let's go to Kai, and then we're going to come back. I'm hoping.
Oh, that's a great idea.
Because the market is now rising like a phoenix from the ashes again. We're up almost 20. We need another 20 points for our Jajun trade.
Yeah, we do.
So let's go into the study from Kai. A big shout out to Kai. Why is it completely blank?
Maybe you ran through the whole thing. Maybe when you started it, you hit play.
No, I'm telling you, my computer is super bizarre. So John, do you have the slides to run?
Yes, I do.
Okay.
Oh, look at John. Johnny on the
spot. John to the rescue. And I will figure out what the problem is. Figure out what the problem here is, or we could stop sharing and I can bring it back down again, because you saw I had it up and now it is just, there we go, gone.
Well, John's running it. Thank you, John. And again, Liz gave a shout out to Kai. Everyone give a shout out to Kai. He's putting this together, what went on during the week, the market measures that we saw during the week. And if we missed it, if you missed it, here's the main, the study and the takeaways.
The study and the takeaways. And it's going to be, it's really good. And I love that he does this for us, because that's all we really want is just the small stuff. And they are up. Jenny, you're going to read these to me if that's okay. Because
I was going to say, if John can stop sharing, all I see now is the giant platform. So I don't think this will work, because I see it like this big and you see it that big. So I don't know that this is going to work without one of us sharing.
1 minute.
Give me a second. I'm going to see what I can do again.
No, John will fix it, where instead of us seeing the platform, we can see the slides. This is all like things going on in the back. Our production crew is very busy.
Well, and what people don't realize is we can't stop sharing. If I could stop sharing, I could probably pull it down again. I could try to do that right now.
No, but I think it's kind of cool for people who are watching to see the inner workings of what go on. So in order for John to share, he just has to change from us looking at your platform to us looking at those slides.
Yeah.
Which I think you can do. So we may pass on this today. Today, Jenny, because
I can read. Maybe I can read that. Wait, whoa. Hold on. I got an idea.
Oh, yeah.
Can everybody see them? Can everybody see them?
The viewers can,
no.
I'm sure.
Okay, perfect. If the viewers can see them, I can read it up here. I just cannot bring them down into one that I can share. I have no idea why. I'm going to bring this in somewhere. Did we get it on June?
No, it's on IBI.
Okay, so this is the weekly summary of the market measures. And then
and I'm pulling it up too, Liz, so I can read it too I'm pulling up the study on my phone. So
okay, and then it says this. Number one, the impact of delta and duration in market sell-offs. That's the title of it. That's all it is. The impact of delta and duration in market sell-offs. And then the next slide, John.
I've got it.
And then the next slide, John, goes, strangles, on average, perform very well in high IV environments. But how do they perform in sell-off of varying durations? Okay, so let me repeat this.
When you think about strangles and high IV, yes, but it's kind of why the Jade Lizard and Big Lizard were invented. Because when we get these huge sell-offs, and in the past when we've gotten these huge sell-offs, instead of selling strangles, I like Jade Lizards or Big Lizards, because if the market skyrockets back, you're not going to lose on your short call.
True. That is true. And that's why the Jade Lizards were invented. But this is different. They're saying, how do they perform in sell-offs of varying durations? Meaning they're looking at the deltas of it. So now let's go to the takeaways. The takeaways. Sell-offs don't always mean that your average short premium trade will be unprofitable. Okay.
And it is the velocity of the move that ultimately determines if the period will yield profits or losses to short premium trades.
Meaning if you get the massive down moves or the massive up, then that's how your short premium trades are going to lose. It's the velocity of the move. With higher delta strangles, you experience greater profits in the long term. That's interesting.
And we've seen this. Our studies have shown, like, when vol's high, bring it in. Instead of the 10 delta, 16 delta, bring it in to a higher delta.
And then the same is true in longer sell-offs, but there are larger losses in sharp sell-offs, such as 2020.
Well, 2020 was really a very bad time for premium sellers who were selling strangles, because they lost on the puts to the downside, rolled down their calls, and then the market skyrocketed back up through the calls.
Which is John. Hold on, John. We're on the takeaways slide. If you can go one more, because I'm watching what's on the live show, and he still has it on strangles.
Okay, and so finally at the end of the takeaways, lower delta strangles act similarly, but with less variability.
Yeah. And Jenny, to your point, I like that. This is, it kind of edifies what we talk about all the time. In higher implied volatilities, where you're supposed to bring your deltas in, and then the lower delta strangles, meaning farther out this way, act similar, but with less variability because you have a wider range. And you said something before this, before we even went into this, about how you like jade lizards, because then if it skyrockets back up, you don't get hit. And in a jade lizard, we typically are pretty far away on our puts too.
Well, and I was going to say, it doesn't, if the vol's high, it doesn't have to be a very cheap put or a 10 delta put or a 16 delta put. You can follow the mechanics of bring it in. It can be a 30 delta put, but I like the idea of, instead of having the naked call, creating a call spread so that if the market bounces back, which we've seen so many times, you don't get hit on that naked call. I just don't like having, when we're down, and vol's up, I don't like having that naked call in case we blow up through that call side, because it's happened so many times.
It has happened so many times. It's kind of crazy, right?
Mm-hmm. Mm-hmm.
No, I agree. Okay. So then, that was a good study, and I'm glad. I really like these doing this and kind of wrapping it up for us. Let's go to slide number 5, which is
the next study, which is best performing IVRs by year. So this will be interesting.
Best performing IVRs by year. I didn't read this. Did you read it, Jenny?
No.
I wonder if it's going to be. I wonder if it's going to be like what, like 2020 versus something else, or if it's going to be something different. So let's go to the next slide. Over a long span of research, which they have, we have repeatedly seen that short premium positions generally perform better in high IVR. Check.
Okay, because of this, many traders choose to only sell premium and underlyings when IVR is above a predetermined threshold.
Okay, check. These are all very much tasty mechanics so far.
Yeah.
Too high of an IVR threshold, however, and you will wind up placing hardly any trades. Wait. Oh, I see what you're saying. So a lot of times, when IV is high all around, we're like, oh, it's got to be, 50 IVR, we love. But then when it's all around, if everything is kind of low, our bar gets lower. Because if you have too high of a threshold, say it's got to be at least a 40 or I'm not putting a trade on, you will wind up placing very little.
Well, and don't you remember that period of time where it used to be, when IVR, sell premium when IVR is over 50. And then we had such a slow period, then they lowered the bar. Oh, okay, well, it's okay if IVR is over 35, right? And so if we get to a period of months and months and months of low VIX, low IVR, well, we kind of change our trading strategy a little bit.
Yeah, we do. And the bar gets lower and lower. I agree. If you keep that crazy threshold, it's kind of like, this is so mean to say, but it's kind of like when you're dating. If you have too high of a threshold, you're never going on any dates.
Your bar is too high.
You got to lower your bar a bit in order to get out there. But yeah, so then where has the sweet spot for IVR thresholds fallen, and how has it varied year to year?
Okay. All right, so it's an interesting study. Let's take a look at their takeaways. Using IVR thresholds to determine good opportunities for selling premium has been a generally successful approach, but the best thresholds to use have varied substantially over time. And that makes sense. I mean, do you remember when we lived through VIX being 8, 9, 10? We had a long, drawn-out summer one year where we did calendars almost every day.
Jenny Andrews. University of Illinois, the number 17, because that's the average in the VIX, and I can't wait till it gets back there.
Yes. Right.
Yes, there was years and years and years of it being so much lower than that, where you couldn't wait until it got to 17.
Got back up 18. Back up to 18. I was number 18. Did we actually get jerseys? Did they actually put those numbers on our jersey?
I don't know. But yes, I remember there was a long drawn out time
of low VIX. And then and IVR again compares it to itself over a period of time, 6 months, 12 months. So it's not like, that IVR is changing too.
It is.
Once beyond a certain period, like there were days where we would have a huge drop, vol would spike, and then we would say like, oh my gosh, can't wait to get 6 months from today because then the IVR will reset.
True.
That day is off the calculations.
And it rolls off. That is very, very true. Okay. In general, a higher IVR threshold result in safer year-to-year performance. Okay, check.
Okay. And in the best of years, such as 2021, traders did best if they were willing to place trades regardless of IV.
Well, it doesn't say IVR, it says IV. See, that sentence is what throws me off, because we're talking about IVR. So regardless of IV, we don't care where the IV is, we care where the IVR is.
But the problem with 2021, so 2020, you had the COVID meltdown, and then you had the boomerang back, and we had such high vol that I think 2021 was a period of always low IV and low IVR, because it couldn't even compare to 2020.
It couldn't. You're right. Everything looked so low.
So it was still high enough.
I bet that's supposed to say IVR, because you're right. With those 2020 like spikes, it did kind of skew the IVRs. In harder years, waiting for IVR to rise above 15 or 30 was a better approach.
And so many times we say that, oh, we're saved because IVR was low. Oh, we're not selling premium. We just have a lot of calendars, diagonals, defined risk. We don't have a lot of naked positions because IVR is low, vol is low, and we don't have a lot of naked positions on. And then you get a down move, and we say, thank you, IVR, you saved us.
Correct.
Yeah. Okay. And so these specific values are particular to SPY. The strategy and these mechanics, in general, you'll need to decide for yourself how much risk you want to take selling premium and low IVR. But when IVR rises, don't be afraid to get more active. And I don't want to say, because we don't recommend anything, I don't want to say like, go out there and get more active. But with the down move we've had in the last week and the boost in vol we've had, there is opportunity out there. But
there is opportunity, but you know what, Jenny? It's funny. You and I just kind of mechanically will go to, if the IVR is higher, we lean towards, your diagonals, your things like that. And when the IVR pops, we will switch to naked puts, because you can see the premium. And sometimes we'll just look at the premium and make our decisions that way. But it does help to have the decision-making process with the IVR.
SPOO's only up 24. Well, thank you, John, for running that for us.
Yeah, that's perfect.
Now, I will say next Friday, you'll be on with TP. So maybe you talk to Kai and see if you even want that with TP.
I do. I want it with TP. I want to go through this with TP. We're going to do the regular show.
Yeah. All right.
Yeah. And then John can run it again, because he's awesome. But SPOOs are up 25 now. So let's pop back in the platform if we can, John, and kind of take a look and see things. Now, just to kind of put in perspective what we're talking about, only because I have TLT up, I'm just going to kind of just walk through a couple things real quick. When we talk about IVR, this is what we're talking about, IV rank. And this says if TLT's implied volatility, which is over here, is high or low versus itself. So TLT with a 16% implied volatility in the 21-day options gives this product a 45 IVR.
Yes. And so let's go. I want to look for an actual trade that maybe I'll do with the market. Can you go to IWM? Because I have not, I know we looked at the other day. I don't think we placed any trade, but if you go to, and I think at this point you go to April, you go from March to April. So you go to April, we have something pulled up, but we don't.
I cannot clear it because I can't even get to this button. Oh, there we go.
Okay. So per the study, let's say I might have sold 16 Delta Strangles. Instead, I would sell a 30 Delta put here. I would sell a 30 Delta put.
Because, wait, just give your thought process. Because there's a 33 rank?
Because VIX is 20, there's a 33 rank. And I know it's not a 50, but I think the vol in general is high. We've got, and I'm surprised the rank is not higher than a 33.
I think it's hard for ETFs to get very high. Let's just show. Like I'm going to look at. Let's look at the main five. SPYs, triple Qs, IWM, and then we will look at diamonds just for fun. But let's see what has the highest rank. SPY 35, IWM was a 33. Qs is going to have the highest, is my guess, right?
Right, I would think so.
36, not much higher than SPY.
But in my mind, even though these are 35 ranks, What was it yesterday? Was it a 50 yesterday?
No, I don't think it was. That's what I'm saying. I think it's hard for these general market ETFs to get up that high.
Unless we really have a big crash.
Unless you really have a big crash.
And we had, and I don't want to say orderly down move, but down 50, down 70, down. It wasn't like down limit.
No, right. So I'm going to go to April.
And so I might sell the 30 delta put. So there you're getting 350 on the 30 delta put. And then you can go to the 30 delta call, or you can go to the 30 delta call, but I'm going to spread that off, and I'm going to make that spread, I don't know.
Here's $3 wide for 4 or 6.
I'm going to spread that off because what I've lived through in the last 14 years is seeing that usually when we have a down move like this, we bounce back up and we blow through the expected the upside.
100%. And that's why the Jade Lizard was invented, because we were sick and tired of losing to the upside.
Yeah. Right.
Yeah.
Now there's risk, because if we keep falling, I've got that naked put. And that's the risk. And the risk is, do I want to get long 100? I'm getting almost $5. So essentially, do I want to get long 100 shares of IWM at 200? If I'm okay with that, then I can place this trade. If I'm not okay with that, then I shouldn't place this trade.
Right.
Around 200 was the break even. So it's not bad.
No, it's not. I don't mind this trade at all. How much capital is that? I can't see it.
3,600.
That's a bit much for this account.
But for if you want to get into an ETF, IWM is less buying power than SPY or Qs or any of those others.
Watch what I'm doing. I just made, I'm staying with the 30 delta call. How much did we get for this put? $3. So we've gotten a little bit for this call spread. I'm going to just kind of spread this off a little bit. Okay. And I don't mind if we have a little bit of risk to the upside. There we go. So I went $10 wide. You're getting $250. Yeah, this is fine.
You're getting $250, $2 wide, $250 instead of $450.
So what you're giving up, your break even is going to be $202.50 instead of $200.
But the problem is you're in this for way longer. Because the other trade, you're getting $450, and when it gets to $2, $250, you're out of it.
Jenny, I'm telling you, it's hard. Now that we've got these zero DTEs, you and I are. It's very challenging to say I'm going to be in this but this is slow and steady wins the race.
No, but this is why if I like naked options better. I don't like this spread for 250 if this is my account and I'm handcuffed and I can't do this, I'm going to trade a different product. I'm going to trade a smaller product where I could afford to do a Jade Lizard or a Big Lizard or a naked put. I'm going to find different products that I can afford. I'm not going to try to force it in IWM and create a spread.
No, I think naked options are the way to go, especially with this. But especially if you don't mind being long it. So when you have a recourse of what you want to do, meaning, okay, and I do this in my account all the time, but I'm selling mirror terms in IWM, and I kind of like it. I know it sounds crazy right now because we have had this down move right here, and I've been rolling it and keeping it. But I know that the worst case scenario, and this is what I love about understanding options, the worst case scenario is I'm long a general market ETF, and it's kind of the wheel of fortune for me. I'm using puts to create the wheel of fortune because I know that an in the money put is a covered call, and I'm just keeping it very near the at the monies and going every day. The worst case scenario, some people do go out and just buy IWM.
And so that's it. If you would be willing to get long it, then I like the premium selling aspect of it.
Yes.
But to just try to replicate a trade or to take that study and replicate it, to make it fit an account, it's too much buying power for this account.
Wait, which study are you talking about?
Well, when he's talking about selling strangles and SPY and bringing it in and bringing in the deltas, to try to replicate that, I think you have to try to spend very little on your longs to replicate it, and it's still
the hard part is the longs become, and you and I haven't looked at a 48-day trade in so long, where we're used to taking a look at I'll even stay in IWM just for fun, because they have every 3 days. When you stay so close time frame, you can really cut your buying power down because they become so cheap the less time you have. And you and I haven't looked at a 48-day option in a long time, where that's why they're so expensive to go kind of define your risk. Meaning, if you're going to sell premium here, if you're going to go the 30 delta and the 30 delta, the probabilities are the same, but you can completely define your risk easily.
Yeah. But you don't have a lot of room.
You don't have a lot of room. You don't have a lot of room, but it's 3 days. You have the probabilities are the probabilities. If you're at the 30 delta, a 30 delta is a 30 delta is a 30 delta. It's the time frame. Do you know what I mean?
I want you to talk to TP about that. I want you to put that on write that down as a question for TP. When people are looking at probabilities, and we're looking at 45-day options or 20-day options or whatever, and you're looking at the probabilities, when you're trading a 0-day or a 1-day or a 3-day, what is his thought on the probabilities? Like, if you sell that 3-day put with the 19 delta, do you really have an 80% chance of winning on that trade? Is your look at your P50, and that's really eye-opening. Your P50 is only 2%. So there's only 2% chance you're going to keep half of that. I think the volatility has changed. You might have a 86% chance of making 1 penny on that trade at some point in time, but your P50 really drops.
Look at this. I went 7 days out, though, and your P50 is 72 cents. I think it's those. I remember talking to TP about this. I am going to circle back, but I remember talking to TP about this. When you get to the 0 DTE range, the P50 gets thrown off. The 7-day 30 delta, it gives you a P50 of 75, and that's not a long time.
No,
so wait, let's go. I went 30 delta in the 7, just for fun. 30 delta in the 7-day, and it's got a P50 of 75. We're not going to look at the credits. We're only looking at the P50s, okay? And then I'm going to go 30 delta here. It brings it up a little bit. You got 85%.
And when it was interesting, when you pulled up the 7-day, trade, if you could go back to that.
Sure.
The put we were looking at was the 205 in 40 something days. I'd rather sell the 205 in the 7-day. If I'm willing to take the naked option for at 205, you can sell 205, 205, 205, 205. Although if IWM skyrockets up, then you're only making the credit you take in, where if you're doing the 45-day, you've taken in a lot more credit.
You have taken in a lot more credit. Yeah, so that's going to be on my list. So that this week. And honestly, if anybody has any other in-depth conversations they'd like to run by TP, or that being said, Tony from Mexico, send me an email, chat me, anything you want to do, because it's going to be a fun week with him. I want to take a look because it is about time.
We are almost out of time. I just want to see if we have anything that could possibly pop into like a red in the money sign.
And yeah, we'll make sure we push everything out too that we do.
$70. We're down that much with SPOO's up 23.
We were up 37 when we put it on. Look at this. I mean, we have the 5,900, 5,905, and we're trading $10 away.
That stinks.
I know. So we got to close it.
I hope to God we're up back to up 37 by the end of the day. I might not look. I think I'm not going to look in my account until 2:15 and pray that we're up. I was hoping we'd be up 100.
I know. We'll see. I mean, we've gotten two-way swings and all this stuff. I mean, the high of our show, the high was, 5 minutes into our show. So we're filled, we're out. We took a little bit of a loss.
Jajun. Nothing else if you open the side, nothing else to close. Nothing.
The side?
The positions.
Oh, sorry, here you go.
Nothing else to close. I think I have everything out. Let me just double check on my.
You just got to do that last Jajun trade.
The last thing I pushed out was Fubo. And what's after Fubo?
Hold on, I'll go back in here. I want to see what IBIT is doing because.
We were filled on the IBIT and then closed Jajun for the loss.
Yeah.
Okay. Everything is out, and we didn't put on a new Monday oil trade.
Well, it holds up, even though it's only $800 in risk. It holds up over $2,000 in the account.
I put it on in my account this morning. You put it on in your account this morning. It's Friday. The crazy thing is, it's Friday. Put on that Wednesday one. We had it on, and then we had to wait till Thursday and wait till Friday. This one, put it on Friday, come back Monday, and it's over.
Yeah, it's over.
Win or lose.
Yeah. All right, Jenny, I will see you tonight in your maroon. I will take a picture of you and tweet it.
Everybody have a wonderful weekend. Mikey, if you're watching from your underwater snorkeling adventure, I hope you had a wonderful birthday. Happy birthday wishes from the two of us.
Yes. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get spent with my buddy, Mikey Butler. How are you, sir?
I'm doing well, doing well. How you doing?
I'm good. I'm feeling better. I'm back.
Sound better.
I do. I feel better. I think I got like one more day left of just like the, getting it all out of the system, and then I should be good. I'm drinking lots of fluids, lots of soups, lots of teas, just trying to get through it. So I'll be back at it next week, no problem. I'm sad I'm missing today's lunch. It's one of the best, Gigi's Chicken. It's a fantastic chicken sandwich, probably the best in the city. I would go as far to say.
Gigi's Chicken Sandwich.
Yeah.
Where is it?
It's on Southport.
Ah.
Yeah. They do. They got that like the broccoli coleslaw, which is delicious, and they have like a nice little mac and cheese. I remember. But the chicken sandwich is a big, thick piece of fried chicken, just delicious. Brioche bun, special sauce on there. It's just perfect. So I might have to run over to the office to get one after this. Who knows?
Hey, it's not too far away.
Yes.
But yeah, it's a nice little Friday we've got here. We're seeing some rebounding, or at least an attempted rebound from these consecutive sell-off days we've been seeing. It's been pretty wild. I don't remember the last time we've seen 6 days in a row where we're just down catastrophically, outside of the Japanese yen unwind situation from last year.
Yeah, I know Chris posted something that this is the same or just about as bad of a February as it was last year, which was kind of the big move of the year, marked kind of the lower end of where we traded last year. If we look at like SPX here, just to go back a year into March, let's see, into February. So into February last year, I guess that was January. Where did we have our February sell-off? Right here in February. Big move in the middle of February, kind of seeing that again play out this year. Not that is any sort of indication. It's, past performance is not indicative of future returns kind of thing, but it has certainly been a tough start to the year, January and February. I think we're down like 3% or 4% from the start of the year. So definitely been some weakness here. But it's been good two-sided action today. No doubt has been a trader's market. I mean, you got E-mini S&P 500 futures. They're up 15 right now. Got as high as 59.14. We were chopping around the 5,900 mark for the better part of the last hour or so. A little bit of sell-off here in the last 30 minutes. We've had about a 60-ish point intraday range, so definitely some two-sided action there. You got the NASDAQ up 67, the Dow up 184, and the Russell up 11. The Russell making the biggest move of the markets right now, up about 0.5%. All the markets obviously have been moving in tandem. You've been seeing a little bit of chop back and forth today. Oil selling off a bit, /CL 69.71. I legged out of my call spread into this move. I'm just leaning long via the short put spread in the oil futures. Volatility futures have remained steadily bid. We did, I think, get into a 20-something handle today. No, 1995 was the high of the session today, so about 60, 70 ticks higher from here, but did look like it was going to get there with a little bit of weakness in the morning session. Bonds up 13 ticks. You got rates coming down, obviously helping the Russell a little bit there. Gold and silver both taking it on the chin. They've had a tough week as well, but are sitting near highs. Gold down $36, silver down 52 cents. And then Bitcoin bouncing a little bit, but we did get a 79 handle last night. The Bitcoin futures got as low as 78. The spot got as low as 78 too. So definitely some volatility across the risk on trades here. Nvidia catching a little bit of a bid today, up $1.58. Amazon as well was kind of unchanged to up throughout the session. Apple has been relatively steady considering the rest of the moves in the market. Meta was bouncing a little bit. So it's definitely been a two-sided action today.
Yeah.
A lot of it.
I am most pleased with the gold move Gold has basically crumbled from the highs, and we needed that. It's down 100 points in 4 days.
Yes.
And we had the broken wing butterfly on, the call broken wing butterfly, the 29.20, 29.30, 29.60. And today, this morning, into the continued sell-off, I was finally able to convert that to a free butterfly. So all that means is I sold out of the 29.60. I bought the 29.40 to create a 10-point wide symmetrical butterfly. And I did that for a debit of 380, but I collected 445 up front. So I locked in a credit of 60 cents. And
are you in the 26 day?
Yeah.
Okay.
So this was like a $500 loser last week, and now it was a net winner today. I took the opportunity to remove all the risk, free up the buying power, and I now have a 10-point wide butterfly on for a 60-cent credit.
There you go.
Beautiful thing.
A little shot trade for you.
Yeah.
I like that.
So yeah, that's the only adjustment I've made today. This move to the upside in a lot of these names is good for me, but I need more. Spelled M-O-A-R. More.
Certainly. And a lot of my adjustments today speak to that. I scalped out of a micro Bitcoin contract, took a couple bucks out of that. That was a nice little trade, but I took a lick on mine yesterday. So net, still don't, not a profitable. I think I'm out like $50 or something like that, but got some back today. I took advantage of the move in gold. I closed out of the long options that I had in a put diagonal. Not a good trade, but got a couple bucks back today, which is nice. Take advantage of that. UAL, I rolled down to a iron fly, so I have the 95 straddle with 15-point wide wings, just reducing a little bit of delta exposure into the move lower that we've seen. UAL has dropped about like $10 or so since we put this trade on, somewhere around here, so just managing that position a little bit. I also took off some risk, so you had Delta Airlines had a nice little bounce this morning, scratched out of a strangle that I had here, took off a little bit of buying power, freed up some capital that I can use somewhere else. In the oil futures, I closed out of the call spread. That one was trading at like 4 cents. Yes, 4 cents. So I legged out of that call spread, just leaning long now. No point in using any more capital to hold that position, just given that, there's no more, there's only 4 cents, $40 more to make on it. I sold a put in AMD. I saw this one come across in an email this morning. AMD was under 100. It has gone just straight down. I figured I would buy a little dip and sell a little put there. So I sold the April 90 strike put, about a 25-ish delta at the time. It's come in about 30 cents so far. So starts to work there. In Microsoft, I closed out of the short call that I had for 50 some odd cents as part of a call diagonal. Been getting lots of questions, obviously, with the down move. A lot of the positions that you have, if you have like call diagonals, I did some in Google and Microsoft and a couple others. At a certain point, that short option isn't doing you any good. Sure, you could roll it to a calendar if you wanted to, or you could just leg out of that option. You look for an up move, and into an up move, you can sell out an option, turn it back into a call diagonal spread into strength of the position. So if you're long a call and the stock goes up, selling that call will be at a higher price, all else equal. So with those call diagonal spreads and diagonal spreads in general, like that GLD one I had, it went from $1 to $2 or $2.50 or whatever it was trading at, $2 and something, or it went from because I had two of them, it went from like a 50-cent option to a $1.20-ish option. Sometimes you just got to take the lick and take the money and run, right? It was a big move in both directions. I was short Delta. Gold rallies $200. I'm totally wrong on that position, and you get a $100 drop, take the money and run there. The last thing I did, Uber, I bought some wings. So I have a funky Uber position. I had this crab trade that I rolled into a call ratio spread. So I have this at the money call ratio spread. I then sold a put against it to reduce a little bit of delta exposure because we were trading it somewhere around like 80, 82-ish. We've had a nice little move lower, which has certainly helped my total position because I'm wrapped around this like 75 handle, but it was using about $2,000 in buying power. So I went and bought the 60.95 strangle. I did that at like 60 some odd cents, 62 cents. And that cut my buying power down from $2,000 to $1,000. So just massaging some of my buying power usage here into this down move, a little bit of buying power expansion there. So just trying to free up some capital.
Lovely. Yeah, I have an AMD 120 call in April that was left over from a diagonal spread back in the day, a month ago. So still 48 days to go, though. And if we get a rally in AMD, that option will appreciate in value greatly. So I'm just going to hold on to that.
But there's nothing to do with that.
Yeah.
There's when, we get those. Yeah, we get those questions all the time. Like the one that I had today was, should I, for example, to make it into a similar position like this, somebody asking, should I sell, the March 110 strike against it? And if you do that, what happens is you'll now be using more buying power. So you're now embedded. You have this embedded call spread. So you have, with a call diagonal spread, first of all, it's defined risk. So you can only lose so much. Second of all, it's a long premium position. So there's not a lot of management you can do, especially if you're dead wrong on the stock. If you buy a call diagonal spread when the stock's at 120 and the stock goes to 100, that was just not the right trade. It was not a good trade. And that happens all the time. I mean, that's not a uncommon occurrence. But when you're managing a position, and when we manage all of our positions, the whole point is that we're not trying to add more risk to the position. It's always a management to reduce overall exposure, reduce directional exposure, reduce need for the stock to go a certain way. And when you roll into something like this, where you have a short call that's below your long call, it now turns $100 in risk position, where if the stock doesn't rebound, you're going to lose $100, into a position now that if the stock does rebound, you're now at risk of another $900. So this sort of adjustment, I get the thinking, okay, if I sell this at 110 and we get a little bit of a rally, no big deal, but you're putting more capital at risk and tying up more capital in a position that's already dead. Like the position's already over with, it's just a lottery ticket now. The choice is really either to just close the call and take that $100 of risk moving forward off the table, or just sit with it and hope for a little bit of an up move, and then you might be able to manage something.
Yeah. That's both a blessing and a curse of long options and defined risk debits, is that there's not much management, but you can only lose so much, and you can gain back a lot more if you get a reversal.
Yes.
Lovely. Well, we are live on YouTube as well as the website, but if you want to pop in any trade ideas, questions, join us on the YouTube channel. Just go to tastylive. You'll see this video streaming live. Throw in your chat along the right-hand side, and we'll get to it right now. I've got the newsletters link pinned to the top of the YouTube chat. That'll get you cherry picks, cherry bomb, whatever you want. Ready for the SPY rug pull? I mean, it feels like that's like the new norm, right? We see green and then it's just sell, sell, sell. But yeah, I'm interested to see what happens over the weekend. Maybe over the weekend, people chill out a little bit and we see a rebound next week. That'd be nice for my positions, but it'd be a little scary if we see this mini rally reversed and we go further into the red.
Every rally has been sold this week, so it wouldn't be a shock to end the week like that. But I think, generally speaking, I think this has been a nice little down move, much needed down move. I think the individual names themselves have been absolutely destroyed. I mean, the market itself is only down a couple percent, but when you look at some of the big names, you're talking 10, 15, 20, 30% downside moves. That's a nice little haircut. Amazon from 240 to 210, that's a 15, 20% down move. Google hasn't had an uptick in like a month, 2 months. I mean, that's gone from 200 to 168. Nvidia obviously having a huge move. So when you look at the market as a whole, it's relatively strong compared to what you're seeing from the big name stocks, which I think is actually a good thing. It means that there's a little bit of rotation, people moving out of these big name stocks into the smaller stocks and seeing those kind of chop around, maybe float higher. It feels like a orderly, good sort of down move, but who knows if this is the end? I don't pretend to know that, but from a market dynamic standpoint, it has not seemed like a sell everything move. It seems like a sell the high flying tech stocks and rotate into like a little bit more diversified positions. The market as a whole being relatively flat. Tesla,
Agreed.
another name that's gone from 400 to 200. I mean, it's there's a lot of pain underneath the surface, and I think that's good short term.
Yeah. I mean, we saw all those stocks just blow out to the upside. So at a certain point, it's not too surprising to see the opposite happen.
Yes. Can't go up forever.
In theory. John asking about portfolio neutrality. Assume you have $200,000 in applied buying power with beta weighted deltas on SPY. Within what plus or minus delta would you consider neutral? We like to say 1/10 of 1%. So if you have $200,000, really neutral is like plus or minus 200 deltas. You can go up or down as you want to lean long or short, but your deltas are going to change every second. So
yeah,
the wider range you have, like I would say for a $200,000 account, if you have plus or minus 400, 500,000 deltas, like you have other offsetting Greeks that kind of dull that, especially if you're short premium.
Yeah, I think the easiest way to think about it is if you were cash secured. So on a $200,000 account, you'd basically be you'd be at like 300-400 shares of SPY if you were buying cash market. So if your 400 delta is plus or minus, you're basically cash secured. You're in terms of like your option positions, obviously that can move, but for all intents and purposes, if you're looking at your beta weighted delta, 400 deltas would put you basically at what your exposure would be in full cash. A multiple of that is usually like okay. So to what Mikey said, 400, 500, 600, 700. That is probably a reasonable spot to be. I would consider that like relatively neutral. And it also depends on what you're trading, right? Like if you're doing short-term SPX stuff, your deltas and your theta and all your numbers are going to be way skewed. So I would say, $400 or $600 or 600 SPY beta weighted deltas would be relatively flat. Once you get past that, I would say you're leaning a little bit directional. And I would kind of just go off that.
Yep. Any adjustment to your IBIT strangle? Nope. What
do you got? Your April 55, 50?
Yeah, I have the April 55.70. But the problem is rolling down, I think, really only hurts me in this scenario. Like, yes.
Here's what I know what you should do right here.
Okay, what?
You do what I just did with my short put. My short put I put on this week, but at the 48 strike. But you're leaning long, and you want to be long.
Mm-hmm.
So you've basically got a covered call right now.
Yeah.
So you close out of your 70, and then you roll into a call ratio spread closer at the money. So you do, like I did the 50-55. If you wanted to lean a little bit like, you could do like the 52-56 call ratio spread. won't use additional buying power. Obviously brings your risk closer to at the money, but you got, $5 plus of intrinsic value to the upside, plus another $4 or $5 of intrinsic value on the call ratio spread. If you get that move to like 56, that would be, your risk is really like a move to 70.
Yeah.
Considering all the premium you've collected.
Well, I mean, closing and rolling into a call ratio would be, or are you saying like take the shares, like buy the shares and do a call ratio on top of it?
Oh, I was saying you would keep the 55 strike put because you still got $1 and change of extrinsic value. It's not that bad.
Yeah. Oh, you're saying add on.
Yeah, I was saying close out of your short call because your 70 strike is at like nothing. And then roll into a call ratio spread like you could do even the 50-55 for a small debit on that. It'll cost you, let's see, like 33 cents. But if you get a move to 55, you'd make back, $1,000. Like your total net premium on this position is what, like 1,000?
Mm-hmm.
So your break evens here with this to the upside would be 70 because you have $1,000 in premium plus the $5 intrinsic value of that long call spread. So your break even to the upside is 70 in the April expiration. If you get a move to 55, you'll make back $1,200 or more. And your risk to the downside is still the same as what you have here because you're basically doing this for a scratch.
It is interesting. Yeah, my break even to the upside would be actually more like 75 because this ratio would bring me to 65 and I've got $10 in premium still.
Oh no, it would put you at 60 if you did the 50-55. So it'd be 60 plus the 10.
Well, the break even on the ratio spread, yes.
Oh, yeah.
Yeah.
Oh, and then you're talking about the premium you have in the put. Yeah.
Yeah. Huh. I could do some.
I think it's a no-brainer.
It's a little spicy.
It's very spicy.
Yeah.
I guess it kind of messes things up it'll be fine for the
It doesn't
anatomy.
It doesn't really though. It's just adding on a vertical spread. I mean, it's giving up the credit if I were to just roll to a straddle.
Yeah.
And converting it to a vertical spread.
Yeah. No, I meant it messes it up for my math skills when I put together our anatomy of a trade at the end of the year. This will add a curveball for me in my Microsoft Excel skills. But I think we'll be okay. I'll figure it out.
I mean, even with a debit and credit, it wouldn't do much. But yeah, I can do something like this. Basically, it just turns me into a psycho bull.
Yeah.
Position.
Well, that's what you are.
Yeah.
So this is what it would look like from your risk profile. So let me move my position out of here.
Yeah. So I've got, after I was just filled on that adjustment, I have $10 exactly almost of premium with the 50-55 ratio.
Yeah. So your break even now is 45 and you'll have another $5 of potential value up to 55. Like this is exactly what your risk profile would look like. Here, I'll move this out of here. There you go. I got to move this to $10. So this is what you would look like. And you get that extra boost from 50 up to 55.
Yeah. Fun.
Yeah. That's a nice little adjustment.
I like it. So yeah, what I would do in this scenario is if we move up to 55 quickly, I would see what the value of that spread is. But yeah, there's plenty of premium to work with here, but I still want to maintain not too much risk to the upside. And the ratio helps with that for sure. But this can be manipulated too. Like, let's say we get a quick move to 55. What I could do is I could buy back the embedded straddle, leave the vertical spread on. If it's still trading for 250, roll out to May and move it out of the money for a scratch. So I could disconnect
problems.
the vertical spreads. Yeah.
You got no
That's
problems.
That's basically it. I got no problems.
You got no problems, pal. You're fine.
That could be fun.
Yeah.
All right, you've convinced me. I went from a hard no to a full adjustment.
I mean, I'm a convincing guy sometimes. Sometimes I bring the heat.
Yeah. Agreed. But yeah, we've done well with this position so far, and we've collected a lot of premium. So we're basically in a really good spot, unless IBIT goes way lower or just skyrockets higher in too short of time. But even then, we could still manipulate it.
Yeah, the 80 handle. So I wrote this in the cherry picks this week. $80 on, or not $80. 80,000 on Bitcoin is 45 on IBIT. So just to give you like some context into where we are.
Love to see it. Love to see it.
Yes.
All right. Microsoft down 15% the past year. This doesn't seem like a normal correction. I would disagree. I mean it's at the end of the day, it's an equity. 15% is nothing for an equity. But yeah, it's been very volatile.
Yeah.
It's been very volatile relative to its implied volatility. But looking at Microsoft through the end of this year, it's got a plus minus 70 point range. So 15% is well within that.
Yeah. I mean, I just look at this and I say, you haven't had a better time to buy this for over a year. You know, like when you put some context to it, yeah, it's had a rough patch here, but you know, if you've been watching this thing go nuts to the upside and you're not thinking about adding a little bit of upside delta, that's kind of the wrong thinking, in my opinion. Obviously, it can go lower.
Too soon for next week's earnings plays? No. Just depends on what you're doing. If you're selling strangles, I would say yes, because strangle is vol collapse, time decay, extrinsic value decay, not going to happen until the announcement. If you're directionally trading it, like with diagonal spreads or calendar spreads or vertical spreads, that's totally fine because you get paid on delta. So AVGO, CrowdStrike, Costco, Target, yeah, I think we'll participate in a lot of those. AVGO, $200 stock. Costco is more expensive, but we can stick defined risk there. Target, back down to lows at 120.
Mm-hmm.
I already have on a Target trade.
Me too.
Called diagonal spread.
I did a short put spread that's right at the money. So I got that one on.
I've got the 130, 140 call diagonal spread in Target.
CrowdStrike is one that really interests me. Back in the pandemic when things were going nuts, one of my buddies that works at CDW texted me and was like, I want to get into like all these stocks. And he threw out PanW and CrowdStrike, AMD, NVIDIA. He does like, you know, tech and software sales. I was like, yeah, you should like buy some calls or buy some stock or do all these things. And like CrowdStrike was trading at that time at like 100. Now it's at 400. So shout out to Dave, my buddy. Rich man now.
Yeah, I'd say.
PanW. I mean, like in 2020, PanW was 40. It's 190.
So good.
I don't think he did any of my, because I was trying to tell him to do like leap calls and he like just could not wrap his brain around it. So I think he just like bought stock.
Well, now you can go back to him and be like, if you would have done this.
No. Hell no, dude. Because then I'll get calls again. Phone calls. You know,
trying to avoid the calls.
Like, yeah, like, okay, like do this for me. Like, here's my login info.
And then if it's down like 10% the next day, then it's like, what did you do?
Yes, dude.
Yeah.
Yes, there is no upside. There's no upside to friends or family management. None. I've told the story of my sister 1,000 times. Of her little Johnny account that her $200 swings were, the biggest problem of her day, while I was having a lot bigger swings.
Yes. It's always no good.
Yeah.
Let's see. Decided to throw in a bear ratio spread for Tesla. 287.5, 290 call ratio spread. Expires today. Figured we would get another fake out rally, but seems sticky at 290.
87.5?
Yeah, 287.5, 290.
Yeah, I mean, you're right. You're right there. This thing isn't going to move until the last, hour of the day. When you have 147% implied volatility, you got $4 expected move. This is expected to be, a loser or fully out of the money at expiration. So you got to kind of hold this if that's your thinking. But you want to close it at the end of the day because you will have expiration risk. One of the problems with single name stocks is that they trade for 30 minutes after the close. So if the market were to sell off, let's say into the close, or rally into the close, either way, let's say rally into the close because that's a bigger problem here. And the stock's at, let's say, 289, and you're holding this. If it were to rally into the close and Tesla goes up $2, you can get assigned short shares, and you'd come in Monday with 100 short shares of Tesla, and you'd be subject to whatever that movement is on Tesla on Monday. If Tesla was up $10, you're out $1,000 on that position. So you got to close your position prior to expiration, assuming you don't want to be long or short stock.
Yep. But yeah, that's why these narrow ones on these higher price stocks are it's really hard to actually do these in practice because you see this now, it's 2.5 points wide, but it's trading for $1.50 on the day of expiration.
Yeah. And that's volatility.
Got whipsawed on Apple Strangle, went inverted, 240, 250 when it ripped up, but now it's back down below the 240 call with 21 days to go. Should I buy the guts and sell the wings in the next cycle or what?
Yeah, I think it's probably time to roll. It's a good move for you.
Yeah. So the nice thing about this is if you have a credit close to like $10, for example, you could stay in this cycle if you wanted to. And really your best case scenario is Apple staying around here, but under 240, because then you could get rid of that call. And then you could, if you're trying to lean long, you could remove that inversion by just letting the short call expire. You still have $1.50 of extrinsic in the put. But yeah, I mean, if you want to buy back the 21 day for $18, you can manipulate it in a bunch of different ways going out to April. Like you could convert it to a 245 straddle. You could actually bring it down to a 5-point wide inversion if you wanted to be more neutral. But I don't, it really depends on what your credit is. Let's see if you can add it. We can take a look, but how much credit you've received is going to be important here.
I assume it has to be $10 or more, just given, the opening trade was probably like $4, $5, $6, and each of the rolls was probably $1 or $2, whatever it was. I would say the conservative thing to do would be to roll it out. You, as Mike said, you can kind of massage the position a little bit. You can be, if you want to be bullish, you can keep the strikes that you have. If you want to reduce your delta exposure, you can roll even to like the 240 straddle for $1-ish debit. That takes off $10 of intrinsic value. If we chop around the 240 handle, your position will be much, much better. I mean, the rolling for a debit of $1 and change is not really what you're doing here. You're actually adding $9 of extrinsic value because you're taking $10 off, and it's only costing you $1 to do that. And so you're getting $9 of decay, of value that will decay over time if the stock stays where we're at.
Yeah. Coin 215 put. Sure.
Yeah, I got an at the money put spread. It's part of the Iron Condor that I put on at a not so great time because the stock dropped to like $60. But
yeah, I have a call diagonal on 250, 260. Long April, short March. It's only down $200 considering how far out of the money it is, but yeah, I'm in there as well. I don't mind a short put here at 215. You just had to have the capital to do so. And if you're at 215, you're probably in the 21 day, which is a little more short term, but it's basically a covered call at 215.
Yes.
Does everyone at Tasty follow the capital allocation outline? Meaning if the VIX is between 20 and 30, only 35% of NetLick is used. Yes and no.
Yeah.
I mean,
everything's
VIX,
a spectrum.
Yeah. I would say if you're trading, let's say if you're just trading ETFs, then yeah, I think waiting until a VIX pop makes a lot of sense to throw on new positions. But if you're trading equities, the VIX is less important because equities are their own beasts. It's their own implied volatilities. And even if the VIX is popping, yes, you could have a broad stroke and say that that's going to affect a lot of the equities, but a lot of these equities just live and breathe on their own regardless of what the VIX is.
Yeah, I think it's all good to consider everything. I mean, that's why we put out all this content and why, not everybody has the same exact trade. Like we don't, Mike and I even don't even trade the exact same way every time. I mean, you have to kind of have a spectrum of your own sort of mechanics. Obviously, the stuff that we put out is how we generally try to attack markets, but it's okay to take a little bit more risk if you're comfortable with it, or take a little bit less risk if you're not comfortable with it. Don't try to, I think it's tough to bucket yourself into these really strict rules when you're trying to trade uncertainty, because that's what we're all trading is uncertainty with regards to implied volatility, price, all those things are things that we cannot control.
Yeah. But the one thing we can control is trade size.
Yes.
So that is the one static thing that you'll see us. Like I haven't placed a trade with over $1,000 in risk or over, let's say, $1,500 in risk, like at all for the last 2 years. So everything's under $1,500, under $1,000 is where I'm most comfortable. Because then you can just absorb anything, like even the craziest moves. It's not the end of the day. It's not the end of the world in the account.
Check out my Shopify trade airing on Sunday, life cycle of a trade on the Tasty Live YouTube and Tasty Live site for a trade that I managed through a 50%, 60, 70, 80% up move in the stock. It was a crazy move. So a testament to position sizing.
Yes. We did an in-depth analysis on this show.
Yes.
For that one.
Yes.
Leonardo Teixeira. I had a put spread on VXX and got the profit off my short leg today. Now I just have a VXX put for April at an 85-cent average price. Should I use it to hedge some SPX or spy more aggressive trades? So you closed your short put, and you just have the 44 long now, it appears. Is that what happened? I mean, I don't see. Yeah. I think we need more info here because this is a $400 option, and there's no way that your put spread was worth more than that.
Yeah. You can't look at option, like if you put on a spread, it is a spread. You can't look at each of the pieces and say, oh, I made $50 on this option, closed it. Your position as a whole is together. I mean, they're separate options, but you put it on together. If you sell something for $2 and buy a wing for $1, your net position is $1. If your $2 option goes to $1.50, yes, that option has made quote unquote 50 cents, but you probably lost, some value on your long option. So you got to kind of look at it as the sum of the parts, or the sum, not the parts.
Yeah.
E-minis down 2, we're crashing. Shit.
Oh man, here we go. What's funny is I put in some more money into my personal account, but it hasn't cleared yet. And I've been trying. I would have bought the dip 2 days ago if it had cleared. So this is
Thank
nice.
God for banking.
Yeah, banking is preventing me from losses. Will you be rolling my March Amazon diagonal position, the short option?
What do you got?
I have the 225, 235 call diagonal. So, yeah, I mean, I wish I would have done it yesterday, but the only thing I would do here is convert it to a calendar spread. Mm-hmm. So moving the 235 down to the 225 is the furthest I'd go. So that would give me 85 cents. Yeah, I mean, that's certainly possible, but then I would be left with a 225 calendar spread for $600. And that's going to be really, I'd have to perfectly pin expiration in 21 days plus being at 225. So I think what I'm going to do is just wait for a rally.
Yeah.
If we get it, because if we get a rally of $5 or $6, then I can buy back my current position and roll to or the 35 day and keep it diagonalized, which is what I prefer to do. So I think I'm going to wait.
Okay.
I'm going to believe in the markets to actually rally, for better or worse.
Are you beginning to be proven otherwise?
I think so.
Wow.
I think we're being proven otherwise right now.
It's a big day. This is big.
Yeah. And really, the only thing I'm looking at when I say that is the volatility curve. Because 2 days ago, we were in a steep contango, and now the entire volatility curve is flat. Yeah. So we are very the backwardation, which we have not seen in how long? Probably since the Japanese yen. All of these contracts are at 1950 or 20, which is basically. So that tells you if we get another 100-point sell-off here, the volatility will probably go way up, if I were to guess. Question about delta neutrality. Another question, does your answer change if you're trading in an IRA account? Well, if you're trading in an IRA account, you're probably defined risk, and it matters less because all of your positions are spreads, which means they can't go from 20 delta to 100 delta. They're just
you'll have a lot less delta.
Yeah,
they wouldn't be in a $200,000 account to get 400 or 500 or 600 deltas either direction in a margin account is really easy. In an IRA account, it's going to be much harder because of what Mike said. Everything is basically cash secured. Even if you're buying wings, to get the leverage that we get in a margin account, you just don't have as much capital to do that, to do that in an IRA account, even if it's, because you just don't get that same leverage.
Yeah.
So I would say the overall delta on that same sort of metric should be like half of what you can get in a margin account.
Yeah. You'll naturally be more neutral in a IRA account, especially if you're defining risk.
Yeah.
Let's see. Please explain how a ratio put is better than a strangle on end phase in relation to end phase having earnings, and having a directional trade is more effective than a strangle.
We don't know if it's better. It's just
it's just that if you have a put ratio, if you have a put ratio, you can make more on a directional move than a strangle. Just because to make money on a strangle, you have to, well, I guess in end phase, if you have a 50-80 strangle, that's different because you have 3 times more premium in your put than your call. So you could make a little bit on a rally, but if the rally's too much, you're seeing losses or you're seeing a scratch and you're just holding this risk. So a skewed strangle is a little bit different if you intend to close it for like a 10% or 20% winner. But a put ratio, if you did a put ratio and you had a big rally in end phase before earnings, you could buy a wing and turn it into a free butterfly, or you could close it. Like, you're going to have more profit potential opportunities with a directional trade with no risk to one side than a neutral trade with risk on both sides if you're selling premium or you have premium in the earnings cycle.
Yeah, whether one thing is better than the other is a hindsight discussion, because we don't know what's going to happen with the stock. In terms of like if you were to tell me, should I do a strangle or a put ratio in M phase, I have a put ratio on, and I would rather have the put ratio just because the stock is down, 70, 80, 90% from the highs, and I don't want to have the upside risk into earnings. If you don't feel the same way, the strangle would be a better trade. So it's just an approach to trading.
Yeah. I guess another way to put it is, can you get to 50% profit before earnings with a strangle on end phase? And I would say probably not. Because first of all, you would need a move. If you did the 50-80 strangle for $2.50, you'd have to have end phase rally to 65, and then you'd have to have implied volatility come down from where it is now before earnings. So it's asking a lot, where if you just have the put, if you just had the 50 put, for a more clean example, you can absolutely get 50% profit on a 50 put if you get a $5 rally, because you can see the 45 is trading for $1. So that's what we're talking about.
And I'm not selling a 10 delta option. That's not how I roll.
There you go. When would you guys use a reverse Jade Lizard? I have a few leftover calls from a diagonal and not sure what else to do since the call's so far out of the money. I just don't like having undefined risk on equities to the upside. So, but a reverse Jade Lizard is a short naked call with a short put spread, versus a regular Jade Lizard is a short put with a short call spread. So you could do that. Like, if you have a long call and you want to turn it into a Jade Lizard, you could do that, but you're adding downside risk.
Yeah. And just if you're going to I pulled it up in Microsoft here. with a call that I have left over. If you make this adjustment, it's now a jade lizard. You can't look at it like, oh, if the stock rallies, I'm going to close out of the call. Like, you got to look at it as the whole position. Again, if you're going to use the call as just a wing now, totally fine with that. But don't try and look at this like it's now two different positions. It's one position.
Yep. I've sold 2 puts on Credo at 65 and 70.
Credo?
CRDO. 65 and 70 for March.
Puts? Okay.
So seeing some losses. They're both deep in the money. Any recommendations? Well, they have earnings next week with a 13-point expected move. So if you're comfortable holding the risk of 200 shares of stock, you basically have 200 shares at a basis of 67.5 with $670 left of extrinsic value. And these could go out of the money if you get a rally from earnings. But outside of that, I mean, I wouldn't adjust this at all if you're comfortable with this position, because there's nothing to really do. Like, I wouldn't roll this to April because you have a much lower implied volatility exposure from earnings. And you can see for 21 days, you have a 13-point expected move. For 48 days, you only have a 16-point expected move, but it's more than twice the amount of time. So I would stay in March, and worst case scenario, you take the shares and you have a basis around 67 less the credit received. So I wouldn't really do much with this position if you're comfortable with the shares.
You could sell up to 2 calls without using additional buying power. And I don't know anything about this stock, so take my word with a grain of salt. But you could sell up to 2 of them. If you sold the 70 strikes, you basically turn your position into like a 60-ish straddle in terms of where you need the stock to go. You could sell one of the 60s or one of the 65s if you don't want to be, adding too much short delta, but that is also an option for you.
Yeah.
Life cycle of intestinal fortitude trades. It's true. But it doesn't take, the point is, in all those trades, a lot of the big takeaway I wish people had was that as long as you stay small enough, you can do this sort of thing. Like, you can withstand these big moves in either direction. And if you don't stay small enough, you can't, you'll get screwed out of these positions and live with the hindsight trade pain.
I've been selling strangles in Tesla. It was my most profitable, biggest loser, and then most profitable trade in the span of a few months. How would you go about managing huge swings?
Size down.
Yeah, size down. I like the idea of double ratios instead of strangles.
Sure.
It just widens your break even. You give up some of that neutral premium, but yeah, just size down. Size down to where you're not emotional.
Yeah, it's the biggest.
Bring 3 contracts or 2 contracts, bring it down to 1. And you'll be fine. But yeah, I mean, these stocks are insane.
Yeah, they move.
They do. Rapid fire TTD put vertical. What do you do at 21 days? Put vertical spreads. You got to roll before they go in the money. So as long as it's out of the money, I would rather roll at 28 days than wait till 21 days and then have an in the money spread where you can't roll it for a credit.
Yeah, I have the 80-70. I'm going to lean long here and see what happens. I'm not going to roll this. It's going to be a debit roll, I think. So I would rather just lean a little bit directional, get a $4 or $5 up move. You probably scratch this trade or roll it out, etc.
Yeah. 2 more quick ones. What's the best place to look for VIX front back month contango versus backwardation? We have our own watch lists here.
You can just do this yourself.
Yeah, so you just type in the codes, make your own watch list, and just sort it by symbol, which will be sorted by time. And then you can see the numbers. there's visualizations online. If you just type in like volatility curve visualized on the Googles, you'll find the visualization. Last one. How do you stick under $1,500 with undefined risk? Is it always defined risk? Mostly defined risk, but undefined risk trades, we just use the buying power requirement. So like Strangle and IBIT is more expensive. It's like right up there, but a Strangle and IBIT I can maintain because it's a $50 stock. So even if the buying power is higher, I know it's a $50 stock and I can absorb a move to 0 or 150 and be fine.
Yes. Done.
That's it.
Beautiful.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the Tasty Live channel on YouTube, as well as tastylive.com. Have a great weekend, everyone. If you're watching golf, I need Ben Griffin to win. And we will see you on Monday, same time, same place with Ryan, and we'll get a overview of what's going on with the crypto spaces. Don't miss that. And sign up for Tasty Crypto. The newsletter on tastycrypto.com comes out on Saturday. I just saw your balloons. It's so funny. All right, we're getting out of here. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. And I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Sadnov, can you show him your Valentine's Day present? Please. This is the moment when Sadnov was happiest. There you go. That's Sadnov when he was eating his Barnaby's pizza. I made him a pillow.
Oh, nice.
I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sadnov. That's soon to be in the store. Your wife wants you to bring it home for the grandson. Hand to God. That's what she I have it here. You want me to send you a screenshot? And I said, would you like me to take this home for you? And I said, no, not me, the pillow. And she's like, oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it. I go, I don't know if Casey's going to enjoy it, but the baby will enjoy it. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap.
People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow.
Can you see this?
Yeah. What is it?
I made this. We went glass blowing over the weekend. I made this.
Oh my God.
Oh my God, are we at show and tell now? What am I, back in third grade?
Beth, thank you. See, I'm very proud of it. It sits on my desk.
You went glass blowing?
Yeah. When was the last time you did that, sir?
I would never do that.
Guarantee you, if the missus said to you,
oh yeah. Tasty Nation, good morning.
We are back. It is Friday, February 28th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. And boy, what a day so far, Ilya.
It has been a very interesting end to a very interesting week here. There's just all kinds of pain and mayhem around these markets, and it seems like the thrust behind it is building.
There weren't many significant catalysts this week on the macro calendar, and perhaps the one interesting note came out today from the Atlanta Fed. We've been talking about this update that was due out for the first time since February 19th. It wasn't a good one. Why wasn't a good one is a question that we need to unravel. It raises the question that we're asking here today on Futures Power Hour: is recession imminent? So let's talk about that. But first, we take a brief look at the calendar, because I suppose the GDP tracker carries a little bit more weight than the calendars for the moment. So we'll use that as a transition into the equity section, Ilya. But this calendar next week is quite stacked. If this week was quiet on the macro front, next week is the exact opposite. We see a calendar here for Monday, Tuesday, Wednesday that does not even bring in perhaps the two big events of the week that we're paying most attention to: the ECB rate decision Thursday, and then, of course, arguably a very important on-farm payrolls report on Friday, which maybe you see it differently. I think this might be in a similar sort of setup to where we were in late July, early August. And if we get a bad number, the market's primed.
Yeah, we really don't want to be in a place where the economic data is going to be any more negative, and the path of least resistance is, in fact, for it to become more negative. There's an interesting thing that I look at. Obviously, we both look at the Citi Economic Surprise Index. It's a good indicator. There's an interesting thing that happens when you put a 20-day moving average on it. And of course, we're not doing technical analysis. All we're saying is, here is the monthly trend. There's about 20 days in a month, business days. You can get cute and do 21 days. It doesn't matter. But there you go. And so what you see is most economic data is on a monthly reporting cycle. So you get CPI for 1 month, 2 months, 3. There's some data, of course, like GDP that comes out quarterly. There's some data like jobless claims that comes out weekly. But generally, economic data, for the most part, the important ones are on a monthly rotation. And so when you look at this surprise index and you say, okay, when it breaks through whatever the monthly average was, you start to get the sense that either the economy is veering from where the consensus forecasts are, sort of where analysts' models are set, or you start to see that you have rollover because those analysts are starting to readjust their models. They've seen a run of about a month of data and they go, okay, the model was off, or we need to adjust, and they start to turn the knobs. So when the index goes through its 1 month moving average, 20-day, 21-day, it tends to have follow through. And we saw this roll over back in mid-November in the direction of negativity. And this has been a snowball that's been increasingly gaining momentum. At this point, the index is in negative territory, suggesting U.S. economic data is tending to underperform relative to forecasts. And it's a similar story to what we saw mid-April through about August of last year, where the markets were getting so very, very vocal about the Fed needs to cut more. There seems to be a lot more room for this to continue at this point. And if the data is tending toward disappointment, with ISM numbers on the board next week, with the NFP numbers on the board next week, and also a Powell speech to cap it all off, it really sounds like we're getting to a place where for most of the week, we're going to be watching data that's going to be screaming at the Fed to do more. And if Powell doesn't endorse it on Friday, you come together to something of a perfect storm. And of course, Powell has been saying for months now, we're in wait and see mode. We're not going to do a lot this year. We're watching the data. We're not going to overreact. Well, if that's still the message after the kind of data we've been seeing, I think the markets are going to get mighty spooked.
Well, you mentioned the data that we've seen. Some of the data that have come out recently have not been that great. After recent releases from the U.S. Bureau of Economic Analysis, the Census Bureau, and the nowcast of the contribution of net exports to first quarter real GDP, we're looking at an economy that is rapidly deteriorating, apparently. The Atlanta Fed GDP Now growth tracker was at a high of 3.9% in the first quarter at the start of February. We're crashing out here at the end of February at minus 1.5%. Now, the question is, did they kill the golden goose? The golden goose being an economy that's growing between 2 and 3% with an unemployment rate around 4, CPI moving closer to the Fed's target. At first blush, you may say yes. That's the golden goose, Goldilocks condition for equity markets to keep rallying and whistle past whatever other concerns there are. We see here in the actual subcomponents to GDP Now, which I think is important whenever there are these releases to look at what's changing beneath the surface. It's basically all net exports. I would make the argument that the decline in net exports here are people that are pulling forward consumption, buying more things from abroad ahead of tariffs, businesses as well, front-loading inventory ahead of tariffs that they expect to come down the pipeline. And so naturally, if we're importing
PMIs
more,
would support that assessment.
And given the commentary we've seen from consumer confidence and the PMI surveys, there's a few dots that you can connect together to begin to draw a line that gives you the contours of what is a legitimate concern. Now it's not just talk from woke commie libs; it's actually something that business owners are taking into consideration.
Business owners, consumers, it's showing up in the internals of the CPI report.
Investment managers. Yeah, Ken Griffin's out. Steve Cohen's out talking about how this is it's difficult. We're sitting on our hands. The CEO of Franklin Templeton out this week saying we can't really do much of anything right now. There's too much uncertainty. So businesses are dragging.
Not exactly fellow travelers with Che Guevara, these folks.
No. So we can look at this big decline, right? If this is really imputed because of what's happening with net exports, are we immediately going into a recession? Oh, yeah, I think a big spike in imports, because that's what this is. That's not something that typically happens before recession sets in. So we do need to, kind of distinguish this a little bit. But I would also impute that if consumers and businesses are dragging forward their spending because they are afraid of what tariffs may come down the pipeline, so they're inventory stuffing now, then it would mean that this is an attitude that they're carrying over to other aspects of life. if I think that I need to pull forward my spending because tariffs are coming, it also would stand a reason that I think prices are going to rise broadly in the future. So I may curtail my spending right now and everywhere else. I do my bulk purchases and then I kind of stop because I want to wait.
What the University of Michigan and the Conference Board consumer confidence numbers tell us. It is precisely the story you are painting. So while importers, because let's be clear, it is U.S. importers that pay tariffs. A country cannot make another country over which it has absolutely no jurisdiction pay it a tariff. That's not how that works. So if U.S. importers, in anticipation of tariffs, and this is a story that doesn't necessarily just start here, it goes back to late last year, if this is where we are for them and they're trying to front run and get in as much inventory as they can, you run into an issue if then they can't clear that inventory because nobody actually wants to buy the stuff, and to the kind of extent that they've stockpiled it. Because the indications on the consumer are anything but great. The last retail sales report was a big disappointment. The consumer confidence numbers were big disappointments. So it's not just that there's inventory stuffing. It's also that at the other end of it, at the demand end, to your point, might not be much there.
So this is this is obviously something to put into your quiver, right? If you're concerned about economic growth, we clearly see that people are beginning to shift where their dollars are spent and how money is moving through the economy. And this is not something that stocks like. When we see the Atlanta Fed GDP Now growth tracker release, stocks actually take a hit right when it comes out. And I think it's pretty clear when we think about the dynamics between growth and inflation right now, as we've been arguing, I think pretty clearly since last Friday when the switch flipped, that the market right now is kind of bared up, as it were, because the narrative's working against it. Fed rate cut odds coming back onto the equation because of growth concerns are wholly different than them coming back because inflation is disappearing. You're shifting from a maintenance rate cut mindset to a recession rate cut mindset. And so stocks here, they try to bounce. It was feeble. Couldn't even get to the 1 week moving average. S&P hits a high of 59.14. We're 50 points off that right now, 58.66. There was no flush in equities overnight to the extent that there was in crypto. Crypto saw a pretty bad set of circumstances. Ultimately, I think Bitcoin dropped to its lowest level since Sunday, November 10th. But it's a new monthly low. It's a new yearly low here for the NASDAQ Ilya. Yeah. Can we call it yet? Can we say that this double top is in play right now, given the progress that we've made below all relevant recent swing lows, no matter how liberal or conservative we use our technical analysis, to the utmost extreme low or the initial low in recent months?
Yeah, I think while you couldn't say that perhaps for the S&P, you could still quibble about levels. The situation in the NASDAQ is looking dire. In the sense that if you think that you're taking out any kind of sort of last remnants of support, you kind of have to start cherry picking now, and that's never where you want to be. You never want to be in a situation where you're saying, oh, well, there's another little swing low nearby. Maybe that's the one. No, you are seeing clear signs here, unmistakable signs that don't really require one to be a proponent of technical analysis or tape reading or anything of the sort. You can very clearly see in early December, there was a high. We then consolidated for a few months in a range. The bounds of that range are unmistakably clear, and now you are through them. And you're through them on a closing basis. And that's not anything that people can just look at a chart. Anybody that's a market participant, whether they're technicians, tape readers or not, they are not going to miss this looking at a NASDAQ chart. And that's really the best of technical analysis. Whether it works empirically or doesn't is irrelevant. If people look at a chart and go, whoa, this is a reason to sell, and then they sell, well, then it works.
I mean, that's been the argument I made with you this week on Overtime about Bitcoin and why it was so treacherous looking, if only because you can't use traditional fundamental analysis, you have to resort to a whole host of things that people don't agree upon, if it's tokenomics or on-chain analysis, transaction count. So you're kind of shoehorned into technical analysis as the prime driving force in crypto. And then when you see a chart that looks so toppy like Bitcoin did, everyone is more or less in agreement, or enough people believe in it because you don't really have another tool to guide you. In this case, I think we should take a step back and look at the monthly chart, because by great fortune, today is the last trading day of the month as well. That's a bearish outside engulfing bar on the monthly time frame. We set a new high relative to January here in the NASDAQ. We're set to close below the January low. In the S&P 500, it's a very similar type of story. We're not there quite yet, but it looks like we did set a new, again, all-time high here in February, only to get close to last month's low. On a daily chart, weekly chart, monthly chart, it doesn't really matter. That type of candlestick action would be toppish, and so far it does signal a key reversal. And that is problematic. If you are a technical analyst looking at the charts this weekend, you wake up on March 1st, we spring forward, so we lose an hour, but you still find some time this weekend, ultimately, right? Is that this weekend? I don't know. We just got an email about it. I got to check that email. Either way, though, you have a nice weekend coming up ahead of you. It's March 9th is daylight saving, by the way. So it's not this weekend. So you do have your hour to review technical analysis. So you look at your charts, and a technician is going to say, this looks like a top.
Yeah.
And so CTAs, I think about those short-term technical traders, which CTAs are mostly trend followers. This is now a trend that it's coming into support. I personally still intend on taking a lick at 5,800, if only because the boss put me on the spot. But we haven't gotten down there yet. And right now, I'll tell you, I'm not going to feel real good about when I do it. But if there's an area to try to catch a knife, I mean, I guess that would be the place where we've seen numerous swing lows carved out since October. But if the S&P fails below 57.75, then you really have nothing to hang your hat on technically for support.
Yeah.
And individually, you can look at Amazon, Meta, Apple, right? And none of those names look like they're near significant support right now either. Maybe Tesla with the 200-day, but that's really about it.
Yeah, I mean, that the NASDAQ is leading losses, that you're getting the breakout in the NASDAQ first, should be an ominous sign. Because obviously this has been where the strength in this rally, really going all the way back to the post-2022 slide, this is where the strength has been. The story has been AI. The story has been what you and Dylan and I have gotten to calling the super glide. And it looks like maybe we've glided into a wall here. Because if it's the NASDAQ that's coming apart, then there is so much market cap that's hinging on this, that if this rolls over, the influence on broader markets is almost inescapable.
I'm drawing a trend line from the lows that we have here at the end of 2022 that intersects with the low in October 23, and the low that we have here in August 24. If we were to hold that uptrend, that could potentially mean deeper selling down towards 19,700 in the NASDAQ before we find any sort of support, which curiously, if we think about the lows in early October, you could see how that would intersect on our chart here.
Yeah.
Sometime by mid-March.
Pivot area in there.
And what's interesting about that point where time and price intersect on the chart, if we think about, the long-standing commentary of what does the market do seasonally in the first few months of the year, it chops until the Ides of March and then it chooses a direction. Where does March 15th lie in our chart? Right over here, right? 14th, 16th. Okay, so 15th is a Saturday. So if we could see a continued sell-off over the next few weeks, and by the middle of the March, we're near the October swing low, that multi-year trend line becomes a very, very critical area of support. And it wouldn't surprise me if the market's going to reach down there now, given the fact that the head and shoulder, the double top here would actually call for an extension closer to the swing lows in the continuous contract where we were in September. So this becomes a very important stopping point where if we think about the NASDAQ having more room to fall and the S&P getting close to support, I would posit that if the S&P is able to hold the 57.75 area while the NASDAQ is able to hold this 18,850 level or so through the middle of March, we then could think about becoming a little bit more constructive. But until then, technically, you're kind of just stuck in the middle of a range or falling out of one. So why be bullish?
I mean, I agree, needless to say. I've been holding and nursing short exposure in both NASDAQ and the S&P since those early December highs. In fact, I just recently rolled them out with lots of duration. It was 55 days when I rolled them last week. So I'm looking at this thing sort of slowly, begrudgingly finding its way lower. Russell has done a lot more technical damage, and of course that's the one that's a little bit more cyclically sensitive. It's tough to say that the AI superglide should be really doing a whole lot here, and indeed with growth concerns front and center, you can see that. Lots of duration in my short here, and so I'm holding it as well. And at this point, I think it's going to take some time. We'll see most particularly how Powell impacts the market. Because if Powell comes out and tries to calm some nerves on Friday, then indeed mid-March starts getting more and more interesting because, of course, there's a Fed meeting in March. And so if Powell starts to signal, maybe as recently as this week, that the Fed is open-minded to acting on this data, that it's not going to be stubborn, much as it was on the way up in inflation when it said, "Oh, this is a transitory inflation," which, by the way, kind of, yes, but only in part. So the argument that the Fed was making wasn't incorrect; it was incomplete. They just missed a part of the inflation that was sticky, which was what we're dealing with now, this sort of stubborn service sector inflation that won't go away. If the perspective from the Fed is going to continue to be we're sitting on our hands, we're not doing anything, and that carries over into mid-March as you're testing some of these key levels and the Fed isn't giving signs that more stimulus is growing more imminent, well, there's your catalyst. And if Powell starts to shift the narrative maybe as recently as next week, could be a catalyst the other way, could be a catalyst for bottoming and for signs of a turn. The markets do love it, regardless of economic circumstance, when the Fed raises its flag and rides to the rescue, because it thinks that the Fed is a tremendously credible set of tools and policymaking apparatus to really make a difference. I mean, we saw this during COVID, when the Fed came out in late March of 2020 and said there will be open-ended QE. That was it. The panic was over. It took them a few months to actually lay the QE out there, but by August, they were already like, okay, we're done. So the market clearly believes that the Fed knows what it's doing when it really leans in, that it's capable, that it's powerful. And if you wanted the case for this to be something that finds the bottom eventually, if Powell starts to shift his discourse next week, then mid-March becomes ground zero.
It's fascinating that he schedules a press conference hours after non-farm payrolls.
Yeah.
So intentional.
Yeah, he's prepared to talk about whatever comes out. I mean, not even the Fed has seen these numbers yet, but clearly they've seen everything else we've seen.
That, I think, is the important point. The Fed will find out about the numbers next Thursday evening, right around 5 p.m. So Powell and co. schedule a press conference a week out for the non-farm payrolls report, if only, and almost in like my eyes, that if it's really bad, they can provide a lens and framework so the market doesn't panic over the weekend. Because last time we had a non-farm payrolls report that came amidst a growth scare of sorts, and we can argue about that because credit markets aren't really cracking yet, but the PMI data, the consumer confidence, say enough to push me in that direction. That was the August 2nd release. And then, of course, we have the August 5th open where the yen's going crazy, the Nikkei crashes, right? S&P, NASDAQ wipe out, basically. So it's almost like the Fed recognizes the potential for this jobs report to cause that kind of, frustration. And I say that because when Asian traders wake up, they're not only going to have the non-farm payrolls numbers in front of them, they're going to have a Fed official, the Fed official, telling them what to think and what to feel about that jobs data. So there's no reason to speculate, oh my gosh, this is going to cause the Fed to do X, Y, Z. The Fed's going to tell us what they're going to do next. So it almost serves as a dampener. The jobs report is obviously very, very important. It's the most important event next week. But Powell seems like he's coming out to put a lid on a potential overreaction. And he recognizes that the market is prone to overreactions right now, which is why he's coming out to speak next Friday.
It certainly seems that way. It seems like the Fed is going to be preparing basically two speeches for him. One if the number is bad, one if the number is good. And he's just going to have them ready so that whatever comes out, because again, it'll be coming out after a week of other big data. So he'll have lots of fodder. He'll be coming in and saying, well, you saw the ISMs did this. He's not going to name check them, but you'll know what he's talking about when he starts to say, well, some data have shown this and other data have shown that. And you'll be very clearly know what it is because you will have just had a week of it. And in particular, the service sector ISM number next week is going to be tremendously important because, of course, we just saw what the S&P Global numbers gave us. And they have actually been a little bit better than the ISMs. If ISMs lock in, which, by the way, happened in January, the ISMs were bad in January. And S&P Global numbers, which come out earlier, were bad in January. So this is not new. This isn't a 1 month thing. We're starting to carve a line in the data. And if the ISMs start to confirm what S&P Global is saying, whatever the stage is set going into NFP is going to be big. And it's almost like he's going to be there after the data with two speeches hastily rehearsed and do one of them to try to judo move the markets into whatever opposite direction they might have overreacted into. Or, alternatively, if the markets don't overreact, this may be where the policy mistake risk is. If the markets don't overreact, it might be because they're waiting for him, not because they find the data digestible. So if the Fed misreads this, looks at an NFP report that might be frothy, that might be ugly, and the market doesn't do anything big, and the Fed says, oh, they're discounting it. No problem. Comes out with the message we've heard since November, December, and of course at the FOMC in January, which is, hey, there's no hurry here. If the Fed misreads it and keeps that dance going, and all of a sudden the market says, no, it's not that we misread it. It's that we wanted you to say what you think. And that you think this is not what we want to hear. Then you could get into all kinds of dicey situations.
Statement out here from Donald Trump. S&P is up 20 points, 30 points off the low, 25 points off the low. Quote, we had a very meaningful meeting in the White House today. Much was learned that could never be understood without conversation under such fire and pressure. It's amazing what comes out through emotion. I have determined that President Zelensky is not ready for peace if America is involved because he feels our involvement gives him a big advantage in negotiations. I don't want an advantage. I want peace. He disrespected the United States of America in his terrorist Oval Office. He can come back when he's ready for peace. Not sure what's going on with the S&P bounce here after the statement release, but the S&P is bouncing after the release, Ilya.
Interesting.
Interesting reaction. Nevertheless, we find ourselves looking at a market that still gyrates. Overall, as we head into next week, March can be better. We're ending one of the worst seasonal stretches of the year. The second half of February is typically bad, but I don't think anyone had in their bingo card a complete wipeout like this. Maybe a pullback, certainly not me. But now picking up the pieces, volatility is high. We're getting close to some significant support in both NQ, NES on those longer term charts. And if vol stays elevated and there's just, we're looking for like another percent lower basically in the S&P, 1.5% to 2% in the NASDAQ. And given how the NASDAQ has been outpacing everything else to the downside, is that unforeseen? Maybe not. So, stand at the ready. If you were there ready on August 5th, 6th, 7th and bought the lows, right? You faded the vol spike. It was worthwhile. Yeah. This time may be different. Maybe. Do we overreact to the GDP Now data? The market certainly reacted to it. We can't deny that. But when you peel it back a layer, it just seems like it's another part of the tariff story right now. People pulling forward consumption, pulling forward imports because they're afraid of what tariffs will be erected in the future. Bonds have been whippy today, though. And I say bonds lose gains because I have seen them go back and forth over the course of the session. We're now back on the up. So keeping the gains. ZN up at 111 and 2 ticks. Talk about something that's finally working here, Ilya. The long 111, 113 call spread is finally printing after what was been a rough and tumble period of a few days there. But finally, there's breakouts gathering pace both in ZN and in ZB. ZB did bump up to a new yearly high today before pulling back in. Overall, rates remain on the trend lower. We did set a new low in 10-year yields here today, which no surprise given the action in ZN. Ilya, it almost feels like there's a floor for the growth concerns too in the rate space. Where are we looking for ZN? When we had the breakdown on the 5th, we said perhaps the swing level's right around 4.15. Yeah. And sure enough, another 9 basis points to the downside here, given the relationship between stocks and bonds recently, probably coincides with ES and NQ selling off a little bit more. So I would posit that maybe the long end of the curve trade, at least in the short term, is getting a little bit long in the tooth. So for me, I'm looking at ZN. If we can get another 8-9 basis points to the downside, I'm probably going to clip the ZN long trade right now. Yeah, because that's been an area where the market's turned in the past. And if it coincides with ES and NQ hitting support near 57.75 or, where have you at NQ, then you know what? You have some pieces together where short term you could see a rally and maybe it's those growth fears falling back. If only to put a caper on this, if we're down below 4.15%, there's almost no doubt in my mind that the S&P is breaking 57.75. So these are two very much hand in glove, one in the same trade right now.
It seems like it. And if you look at ZB, you'll see that the longer end of the curve seems to have more space. So you're starting to gather steam here, but it's not quite as pronounced. And if you were to take out these highs, you have easily room into the 120 handle and change. So back to the highs that we saw in early December, which of course we know is a telltale spot for Fed policy expectations and for stocks. All of them, the Fed outlook, the major indices, they all kind of find their range bounds right around then. And so when you look at this, this is a critical moment. If you can break higher here, then you could be looking at something much more spicy. And if you can't, then perhaps you could get a little bit of relief. I'm still long the long end after the break through the high that we see here on ZB, 4 days ago, that big long candle higher on Friday. So I'm still long here. It's with a call vertical, so it's very risk defined. But for now, I am not convinced that this rally is over.
White House says that the rare earth minerals deal with Ukraine that was expected to be signed today has now been canceled. So we'll keep an eye on that as a potential headline for the commodities space over the course of today's session and obviously through the weekend. Is this a negotiating
strange outturn?
Yeah, I had to have it on the bingo card for today, right? The second that Zelensky opened the motorcade door and Trump insulted what he was wearing, it's like, okay, that's a tone to set before we go into negotiations, right? ZB still has a 46.9 IVR though. And, to that end, there are potential trades where we could look at perhaps a pivot right around 116. I point that out because we've seen, but for that overshoot on February 12th with the those nasty CPI data, Ilya. We can see that the market has, roughly speaking, ever since we turned higher through the middle of January, we've been respecting that 1 month moving average, the yellow line here on the chart.
Yeah.
And so given that we have the initial closing high up on February 5th at 116, I could see this 116 down to 115.5 area providing some support on initial retest. And so if we do get some sort of pullback, right, because I don't have any ZB exposure, I'm all in ZN right now, I would like to sell a put spread underneath those levels, like the 115, 113, to get that bullish exposure. Hopefully vol sticks around if we can get back there. But, we're talking about the Fed rate cuts and how many have been pumped into this market in such a short period of time. We're talking about now 50 basis points of cuts have come through in the past 2 weeks. That's another one of those, this moved a little bit too fast in the short-term kind of situations.
Yeah, I mean, when you look at sort of the makings of this, you really now are at the deciding line, but the markets clearly are starting to shift, and you're seeing it in both this year's pricing and next, which is really the key difference in what's going on now and why it's such a growth concern appearance to all of this versus what we've seen before. The sort of jostling in Fed policy expectations, we just mentioned they kind of settled into a range in early December, much as stocks did, has been, okay, well, if the data is a little bit softer, then we'll add some rate cuts into 2025 and take them out of 2026. If the data is a little firmer, we'll take some rate cuts out of 2025 and put them into 2026. But on the whole, the sort of jostling through the window of forecastable Fed policy didn't really give you a net difference or much of one this way or that. What we're seeing since last Friday is different. You're seeing more rate cuts enter in both for this year and next year. The market is becoming more convincingly dovish in the direction of travel for Fed policy expectations, and it's doing it across the spectrum here in the forecast window. That's very telling of the kind of environment that we're in. And if you look at what the SR3Z5 here is telling us, it, of course, is tracking. Something different is occurring. We're getting out of the consolidation. We're going to something of a point of directional conviction. And that directional conviction is pointing toward lower rates, clearly.
Yeah, it kind of reminds me again of what's happening in July. Why are rates moving the way they're moving? Well, cut odds are going up against this backdrop of poor data.
Yeah.
So, we've crossed the threshold. It's hard to believe that if you, again, just here, February 13th, we're going into the weekend. We're talking about, a 4% Fed funds rate. Since then, we've tacked on another, all net, basically 2 cuts. The aggregation for the CME Fed cuts or CME Fed funds futures tool right now has 4 cuts priced in through December 2026, first arriving in June this year, then in September, then in December. That's a 96.7% chance of one in June, another 97.43% chance of one in September, and a 74.11% chance of one in December. Those are not small odds. It's not like we're teetering at 50% or so. This is very much like the market is convinced that the economy is going to get lower rates, and the rationale has been provided to us. It's because recession's coming, and the Fed is going to have to change their tune soon. And Powell next week will be afforded the opportunity to change that tune moving forward, as he speaks right after the non-farm payrolls report. Well, not right on after, 4 hours later, next Friday. But the vol's coming back a little bit. 22.7 IVR in ZN, which sets up a different situation than where we were a week ago when we were seeing a negative IVR flash on our screen. At that point in time, if you wanted to express a long delta view, buying out of the money calls or at the money calls was relatively cheap. Now, because volatility is coming back, you could take a more standard tasty trader approach, which is, short put spreads in this situation. But again, we see where the former swing high comes on the 5th. The close is 109 and 24 ticks. We have a 1 month moving average right now at 109 and 27 ticks. 207 ticks. And so I would posit that if we're working for a place to trade a bias around, that kind of becomes a swing zone where, going out to ZN in 56 days, if I wasn't already in it, but something like go here, automatically up top, where are we? 56 days. All right, short put vertical. Like the 109, 108, maybe even a little bit tighter. And working around something like that would allow us to have some exposure. It's a little thin on the risk to reward. It's not quite where I like it, which is why I've been playing this through the calls instead. But there is a way to approach this through this typical Tasty Trader methodology while using some of the key technical levels that we see on our screens here. As bonds have behaved quite well, treasuries have behaved quite well here over the past 2 weeks as this equity market meltdown has begun.
Yeah, I mean, granted, not a lot of IV here. But if the level of consternation in markets builds, well, then IV will build as well. And so it'll be interesting to see how this develops going forward. I mean, obviously, I tend to take more of a directional approach, and I already have some exposure on the table. I'm already looking at a call vertical that made sense as the vehicle for exposure last week when it got put on. So we'll see how this goes, but I don't really see how, whichever way the winds of macro data and Powell commentary ultimately lead us next week, what I don't see happening is the market being quiet.
No, I don't see the market being quiet. 47 IVR and TLT, so it's a little bit higher in ZN. Of course, TLT is tracking those 20-year plus bonds. So something to keep an eye on here, Ilya, depending upon where you sit, right? ZB itself is a big product, but it's a little bit juicier. Yes, this is a futures show, but TLT may be more appropriate for scaling and sizing than ZB for the average trader. It's twice the size of ZN, after all. Metal struggles continue.
It's a big contract, and you do have to be very careful there.
Metals are struggling here. They're a little bit off the lows, but heck, there is a line in the sand, my goodness, Ilya. If there is a place for gold to find support, I suppose this would be it, because it is actually behaving very ugly right now. The tell a few days ago, which I did not take advantage of, but noted for hindsight, consistent with what we have seen over the course of the past year, gold likes to rally when vol is going up. When vol starts to come down, gold tends to suffer. Initially, it looked like vol was coming in and gold was just chopping sideways. That's great. But now vol's cracking to a new low. The low today in the IVR was 36.1, and gold is off 1.36%. Yikes. So this begs the question, what do you do? There is some support here. It is the former swing high that you have in October, which was the former all-time high. So one might surmise that this becomes a point of interest. It is a horizontal line. But even so, you're picking up a small piece because you have to get back to the 1 month, which held yesterday, but not today, clearly. Then we'd have to get back into the uptrend. So this is a really ugly spot. I'm not happy with how I've handled this trade whatsoever. Jamal got out of it a few days ago, right near the high, back on Monday. So kudos to him. We both got in on the same day. He handled it well. I did not. And so this is a place where the market doesn't hold. I just got to take my chips and go home and then find a new place to then potentially re-enter. And that could mean we think about the longer term uptrend, the June, the September, the December lows. That could be closer to 2750 here. So patience would be required on re-entering long gold, long silver, as we look at what could possibly be a short-term flush. I'm still bullish. We haven't hit the target near 3039, 3040, 3045, depending upon what contract you're looking at. But this is just a technically real reality check. This is a reality check right now. Support's here or the rally's finished.
When you look at what's going on in spot gold as an indicator, and consider sort of how that echoes back. I mean, obviously, that's the underlying for the futures, but the futures have more things in the price than just the underlying. They have carry costs. They have all these things built in. when you look at what's going on with spot, you see that you're not quite at the same level. You still have about 2% to go to get to the same retest of the October highs that you're already seeing, at least in the J5 contract here. So maybe that's indicating, because of course spot gold is the larger market, maybe what you're seeing here then is an indication that you have about 2% more to go. So maybe the futures find a bottom somewhere around 27.50, that kind of pivot area down the middle of the chart. But it's not looking good almost any way you slice it. And this is really very interesting in an environment where you have the kind of risk aversion that we've seen, not because, of course, gold is a haven, because it's not. And I will continue to bang that drum forever and ever. But because what happens during risk aversion, as we've, of course, seen, is bond yields come in. And when bond yields come in, gold tends to like it because gold yields nothing. And so it's a bit odd if gold were powered by its more traditional catalysts that gold is down here, which could speak to two things. It could speak to the markets looking at the breadth of China data and their gold uptake and saying, well, official sources are buying more, but ETF holdings are getting shed. Maybe we're not going to get a one-way move higher in gold here just because the PBOC is buying. And the other thing is, of course, that people are selling everything that's not nailed down and going to cash, which would be much more of a panicky interpretation. If people are selling down everything that they can, anything that's liquid enough to get sold, because what they want is they want to get their cash out of harm's way, they want to pull it from the market, they want to liquidate, then we're seeing a much more troubling dynamic than just, oh, we've seen a recession scare, let's see if it pans out. If the markets are this kind of concerned, and we won't know at this point, but if this gold sell-off is about cashing out, then what we're looking at over the next several weeks might be explosive indeed.
Hopefully we can see some sort of a balance. This is the closing price in gold futures, but as the trade continues to go on, what's marked at 28.48, we're up at 28.57.50 right now. So this is a place where the market is. You see those wicks. Those are the wicks that we like. We can't go far enough back. Let's go to the 8-hour. Yeah, those are the wicks that we'd want to see right near those highs. Ilya, that short-term chart, though, that momentum, right? It's of an 8-hour time frame. It's a 5, so what's a 30-hour moving average, effectively? But
yeah,
40-hour moving average. But it just shows how the momentum is so negative. There's no place for bulls to grasp on. We try to hold the trend line here, and then once we fail, that supply is exhausted quickly. We breach the evening star or morning star candlestick cluster swing lows here, right around 28.85.
The stacking of the moving averages is ominous. So the shortest term is the steepest down. Everything is positioned to where higher frequency averages are breaking through lower frequency averages. Forget the meaningfulness of the numbers. These are three averages of increasing frequency. And just intuitively consider what happens when the shorter term averages start to roll over through the longer term ones. The longer term ones are more smoothed. So when you see this, you get a sense of near term momentum is increasingly tipping negative, and that's how you get this kind of a stacking. So this is not what you'd want to see. I mean, obviously you'd want to be careful not to go throwing around death cross assessments from an 8-hour chart. But nevertheless, this is not the kind of arrangement price action wise that tells you everything's okay.
No, it doesn't. It doesn't seem like that right now. That's for sure. Ilya, let's quickly turn our attention to what's happening in the energy markets, then hop over into FX and a brief thing on crypto quickly. Energy bounce is fading. Yesterday we had the OPEC Plus headlines that came out. Ultimately, we saw the move back up to 70. We're now down by 0.11% on the day. Okay, so that's a nice little rebound here over the course of the session. Inside day still, can we scale back above 70? We're still pinned to the midpoint of what's basically the 52-week range.
Yeah.
So if we can get a little bit more vol, again, just need more vol. You can get a 3-to-1 risk to reward if you're interested in trading around the 78 high or the 63.5 low. For me, it hasn't been something I've executed on. I've tried. I didn't. I felt good that I did it. Now I feel like an idiot that I didn't. I haven't placed a trade in oil in months, in part because I felt like I haven't had a good read on it. And in reality, it's just been choppy. So the read of it being choppy was correct, and the action is to trade it directionally neutral. I still don't feel comfortable doing it because of the lack of vol. Natural gas, on the other hand, still falling here. We outlined this area back near the swing high in January where that 1 month moving average comes in. It's going to be closer to 375 now, 370 range. I'd be interested in picking up some long deltas down there. But absent that, I'm still waiting to see if this can get a little bit more weakness. Natural gas has actually been very good to us this year, and we'd like to continue that with a 4 for 4. So hopefully a little bit more, maybe 10 cents, and then we could try to take a swing. But sitting on our hands right now, Ilya, at least I am, because the market's not behaving the way that I like for it to behave, the way that I trade. And, maybe there's a discount soon.
One interesting thing to consider in natural gas, and full disclosure, I don't have any exposure in it, so this is not something that I have enough conviction in to do anything with at this stage. But notice, just as an indicator, we're down today against the backdrop of this Zelensky-Trump spat. And that's interesting because if you thought that there was no minerals deal and everything's off the table and everything's falling apart, then you might expect more supply disruption risk to come into natural gas, because then the war continues and the consternation around key delivery choke points remains. That's obviously not what the market's doing. Now, does that mean the market doesn't care? Maybe. This is not something I'm necessarily saying means that what we're seeing come out of the White House is smoke and mirrors. No. But it is worth watching, because if the market thought that the Ukraine theater was about to get a lot more dicey, this probably would look very different.
Let's look at FX real quick and talk about crypto. Crypto had a really bad night overnight. It has rebounded here. Bitcoin, believe it or not, is back positive on the day. It hit its lowest level since Sunday, November 10th, earlier overnight, as it looked like a big whale was liquidated. About, I think, $540 million a position went underwater. Either way, though, we talk about this potentially being a topping pattern and it giving us an opportunity to look for a move closer to the 2024 early swing high that comes in March. That'd be near 75K if this is indeed a double top. We didn't quite get there yet, so maybe we undershot the move and that's the low. So I don't have anything here. I'm waiting for a little bit more patience in terms of taking a stab down there. But I bring this up because we've seen that there's actually going to be more offerings coming forward for crypto on Tasty Crypto now. Just got word that the team's currently working to add 5 more tokens to the Tasty Trade crypto offering: Cardano, ADA, Chainlink, Link, Avalanche, AVAX, AAVE, and Shiba Inu SHIB. The team's targeting Monday for release, but they may be live on Tuesday. Either way, keep an eye out for that. Thanks to Ryan Grace and Tasty Crypto for bringing all that forward. But this is perhaps if you're looking for equity markets the rest of the day and you're looking for something to hang your hat on here, Bitcoin rebounding perhaps is a welcome sign. But there's still not much to like in the crypto space, given everything that we're seeing, where it feels like people are reaching for liquidity right now.
Yes.
I bring all of that up, if only to transition into actual fiat currency and say, what the heck is going on with the yen throughout all of this? Oil's weaker, yields are down, the stock market's down. this to me should be the trifecta of things that help lift the yen. Why isn't the Japanese yen rallying as we end this futures power hour?
I think it really comes down to the indecision you're still seeing in the bonds. The yen is ultimately a creature of the long end of the treasury yield curve, because what tends to be the motivating factor for the yen is how much of a return on capital at benchmark you can get outside of Japan over a longer term hold, which of course is the essence of the carry trade, where people borrow cheaply in yen, buy assets that yield more with that borrowed yen, and then sit on them and collect the interest rate differential. This is why the yen is so very sensitive to the longer end of the curve, because as we've discussed many times before, it's the longer end of the treasury yield curve that sets longer term interest rates for the whole world, not, at least trajectory wise, not just the US, because of the ubiquity of the dollar. The costs of borrowing dollars, because the dollar is the quintessential currency of commercial exchange globally, is the cost of borrowing, full stop, for all economic activity you could possibly imagine, unless maybe it's taking place in Pyongyang. So when you look at what's going on here, you start to say, okay, are the bonds convinced? And ZB isn't really fully breaking out. ZN is kind of flirting with levels where it could get arrested on its path higher. And I think that's sort of the thrust of what you're seeing with the yen. It's been going up since the beginning of the year. I've been long. It's been good. But it's reached a point of circumspect consideration here. And if you think the bonds are going to keep breaking higher and you stay long, as I am, but you're obviously mindful because there's so much attention on this conversation here that you really have to be very attentive to how this behaves. And it's ZN and ZB that I would be looking at as the main indicator for what this does next.
Right now, the uptrend in the yen that's been off the lows last year into early this year, right? It's been pretty sustainable, kind of just gyrating up and down. So it's been slow and steady wins the race. One may presume the swing highs that we had in early February, lining up right near that 1 month moving average, that becomes a zone of support, and it's holding today. So despite some weakness, the macro bona fides are kind of there. I see that we have some momentum sell signal that's trying to determine whether or not today is the trigger day. I don't know if I believe that. But the dollar overall holding back up, the new tariff talk, those expedited tariffs, they're now coming in March, not April. Apparently, we'll find out more over the weekend, I suppose. That's reinvigorated the U.S. dollar, which had been getting used to the boy who cried wolf mantra and mindset. And instead, it's now back on the up and up. So a new problem for stocks and bonds, or rather for stocks at least, and risk generally speaking, is the dollar resurgent. What's next on the calendar for at least Monday? There is a Chinese PMI release Sunday night, so keep an eye on that. Caixin manufacturing PMI, I believe. Other than that, we're keeping an eye on Eurozone inflation and the U.S. ISM manufacturing PMI report. Obviously, PMIs are in focus now because of what just has transpired among the various growth trackers in recent weeks. So we have services PMI, we're going to have GDP, we're going to have the non-farm payrolls report.
And official Chinese PMI numbers and NBS numbers come out over the weekend as well. So as with the U.S., there's two sets, and the official ones come out, and then Caixin over the course of next week.
So already the whole week is busy. Monday starts off with a bang. As we typically do, you know what? We're not going to do that. We're running late here, Ilya. We have to wind this up. Go to tastylive.com, top banner, learn beginner futures. Click the link here on the bottom of the slide to go there directly. We're going to take a quick break. Dr. Jim's coming up next with From Theory to Practice. We'll see you there. Thanks, everyone. Have a good weekend.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were gonna kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is we're trying to do. Welcome to the post-CPI or PCE edition, whichever one it was this morning, of what it is that we are trying to do. I still cannot believe that we are here. This is indeed real life, and we did survive the most important PCE print of our lifetimes this morning at 8:30. But, man, this isn't your grandmother's market. Like, this isn't just a green every Friday, although I think it's been a couple of Fridays since we've been green, man. The market is having a very, very difficult time getting its legs underneath it. So we're going to take a look at all of that here in just a couple of minutes. But if you're watching over on the Tasty Live network, I would actually bounce on over to YouTube. Bounce over to YouTube if it's live, if it's real time, if it's 2 o'clock Eastern, February 28th, 2025, then you can join the conversation and you can join the discussion and you can communicate with your own PCE brethren that are also indeed watching the show, because it is only because of you all that we can do what it is indeed that we do. So thank you guys so much. John, bring us into the market here. Do we still have a market? Do we? I don't know. Would you guys call this a market? Even S&P is down 7 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk instrument. Some even might say not risk-free. Down 35 on there. You got the boomers up 13, and then you've got the Russell 2000 futures down 4 on the day. Got bonds up about 21. You got gold. Wow, look at gold, man. Man, that's a couple days in a row, is it not? Like, that's a couple days in a row. Somebody check on Peter Schiff and all of his shifties. This is not good, guys. This is not good at all. But the Bitcoin bros, your local Bitcoin bro, he's going to be celebrating today, up 4,500, up to 84,000. So that means Bitcoin was under 80,000. Wow, that's some crazy stuff. If we take a look at the old volatility indices, we've got volatility futures are up 62 cents, up to 1985. And then you have the old VIX, the old irrelevant, sometimes imaginary VIX. You've got the old VIX up 94 cents, up to 2207. So the VIX is now up to 22, and that's pretty crazy. That's pretty wild. If you've been watching the market at all today, It's been very back and forth. Like, it makes sense to me that the VIX would be up $1 because there's been incredible whippiness in the market. There's been incredible volatility in the market, even with the market only down slightly today. I mean, at one point we were down 20 or 30, and then at another point we were up 20 or 30, on the E-mini S&Ps, and then of course the Nasdaq was even whippier than that guy. If we take a look at some of the major indexes here, you've got E-mini S&Ps are now almost unched on the day. But man, it really, guys, look at this. This is not good. I mean, look at that, man. This thing was all the way down to, so on the lows today, we were at 58.48. That's some wild stuff. That's some wild stuff because just yesterday, we're going to look at our SPX butterfly here in a couple of minutes. We're even going to have a moment of silence for our SPX butterfly here in a couple of minutes that we put on yesterday coming into today's PCE action. That thing never stood a chance. Like, that thing was dead on arrival because the market just took an absolute nosedive yesterday after the show. And that basically kind of rendered the butterfly, moot. That kind of rendered the butterfly obsolete in a hurry. We were just at 59.49 just yesterday, I think it was. And now we're down to 58.49 on the lows here this morning. You had E-mini S&Ps up to 59.14 on the highs. I think that happened. I'm pretty sure that happened after the PCE print. Isn't that right? I think that's right. Let me grab like a 15-minute chart and let's just do like a 2-day. Yeah, so if you look at the highs of the day, this is the E-mini S&Ps, obviously. If you look at the highs of the day, you're right around 11 o'clock. So this is after the PCE print. So the PCE print is right here, right around this area. And you had kind of a sell-off on the number, and then they rallied them, and then they just couldn't keep them up. I mean, looking at the market around this time, I was like, I really felt like, this is where we were headed. And I think a lot of people probably felt that way too. I still think that this is way overdone. I went ahead and put this on record on Twitter last night. I think March is going to be an absolute banger to the upside. Let me go ahead and make sure I'm on record on the show. This thing is going to rip everybody's faces off to the upside. That is my trade. So that means you, sir or madam, should be buying as many 5 Delta puts as you possibly can, given my historical track record. But I digress. I really felt like earlier this morning it was going to take off and it was just preparing for liftoff, but it just was not the case, man. It just absolutely was not the case. And you can see, it just kind of, it's been on the struggle bus ever since. And so E-mini S&Ps now down 9. And so if we go to the NASDAQ index, you're going to see a pretty similar story, of course. They're going to track with each other to about a 90-95% correlation, I would say. You had, there's your number right there, a little bit of a sell-off into the number. And then you had a high on the NASDAQ right after the number, right around 11 o'clock, same time frame as ES. You had a high of, they were all the way up to 778 on the highs. And so we're down to 572 now. And so they were 200 points higher on the old NASDAQ. And so the market is struggling. And, is this, are we entering a new regime? Like, are we entering, you're selling every rally? Are we entering like a, lower highs, lower lows type of deal? I don't know, man. I'll let all my technical bros, you guys help me out. Like all of my Elliott Wave experts that might be watching the show, you guys let me know. Let me know where we're at in the old sequence, the old cycle here. Like, what should we be on the lookout for? And so there's ES, there's NQ. And then, let's take a look at gold really quick. Man, this thing's just like, I don't want to see that. I want to see a daily chart. Hold on. Daily chart. Go back let's go back like a few months here. Man, that's bad. It feels worse than it actually is, I guess. I guess these few days, you had this day and then these 2 days and then that little like nothing day kind of sandwiched in the middle there. But you had gold up to almost 3,000. Like there's your 3,000 marker right there. And gold topped off right out of steam right at about, looks like about 29.80. Or thereabouts, 29.75, something like that. And then, man, we're all the way back down to 28.56. That's a pretty big drop. Like, that's a pretty big drop indeed. And, it's so funny. It's so funny. Gold is such an interesting thing because you don't know what hat it's going to wear. Like, you have no idea ex ante, like before the fact, what hat is gold going to wear today? Like, is gold going to be the risk-on play where it just kind of follows the market? It just kind of follows the S&P 500, just kind of follows the NASDAQ and follows the Russell. It seems to be wearing that hat right now. Or at other times, gold will be a flight to quality play. Like, gold will be a safe haven play. Like, on a day like today where it's like, man, I don't know. Like, you got Trump tariffs, you got other more Trump tariffs. You got all these things happening. It's like all this uncertainty in the world as reflected by the VIX now being 22. It's like, man, you would think people would be piling into gold. You would think that people would be lined up outside of Costco to get their hands on that Costco gold, and it would show up in the gold futures price. But that is not what we're seeing. That is not what we're seeing at all. We're actually seeing gold selling off pretty hard here, now down, 120 points from the high. And so very interesting. Gold's a very, very unusual thing from the standpoint of it's not always the flight to quality that it's kind of, written up to be in the textbooks. It's not always going to be the safe haven play that everybody kind of thinks it is. That, all the boomer commercials that are run at 11 a.m., like noon, whatever, they've been awake for 11 hours at noon. So it's like, man, let's hit them with these gold commercials, for safe havens and blah, 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 blah. And let's try to round up, some demand for some of this bullion. And so it's not working though. You got gold down 39 points today. It's not good, man. It's not good at all. So, all right. So there's some market commentary. I don't know it's going to help you a ton, but it's on par with commentary that you would find anywhere else in the market. I want to talk about the SPX butterfly in just a minute, but man, I see you guys in the chat. I see Lance Britton's in the house, RC's in the house, James Bond's in the house, man, RC in the house, Martin's in the house, Frank, Finn West, Ruben C. I see Jim, Samuel, Ordenu. Man, I'm gonna get to all you guys in just a couple of minutes. And by all, of course, I mean maybe 2, possibly 3. But let's take a look at a couple of positions. So number 1, SPX. This is the butterfly. The stack of cash, it is now just officially now burnt to smithereens. It's over. It's done. It's not coming back. There's nothing we have to do. It's completely out of the money. It's just going to go out to pasture and just kind of be done. Apparently, they're trying to tell me I can close this for 10 cents right now. I don't think that's true. I don't believe that for a second. I'm actually going to try to close it for 10 cents right now. There's no way. There's no way. We're 120 points away from the middle of the butterfly. You see that center right there that I just circled, the 59.85. I'm no math genius, but the index is at 58.65. That's a 120 point difference. And they're trying to tell me that I can get out of this butterfly for anything other than 0. I don't believe it. I don't believe it for a second. So I actually want to test it right now. I don't think we're going to get out for anything. Maybe we get a penny. I don't even think we're going to get a penny, to be honest with you guys. And so, but if we do get out for more than, a penny, or we get out for 10 cents, that will be a testament to the volatility in this market, to where the market still sees some iota of a positive probability that this butterfly could go live in the next, couple of hours, which is pretty crazy given the fact that we only have 2 hours left in the trading day. But let me go in here. Let me see what happens. So let's go close the full. Do you guys see what I'm seeing? Look at this. Let me just pause on the screen for 10 seconds for station identification. That's a 10 second. That's a 10 cent credit on that butterfly. This thing isn't worth anything. This thing is not worth that, that 4-year-old Arby's coupon that you have in your wallet. That thing is worth nothing. This thing is worth nothing too. And so it's crazy, man. They're going to give us 10 cents. Man, that'd be $10. That would get me a few Arby's sandwiches. Probably give me 8 or 10 of them. Arby's sandwiches plus a case of Natty Light Ice. Now we're talking, man. Now we are talking the meal of champions. Let's go in here and let's see. Y'all hating on some Arby's, but you love it, man. You absolutely love it with the curly fries. Man, come on now. Let's go in here. I'm going to try 10 cents. There's no way. They're not going to get me out for 10 cents. Yeah, I didn't think so. All right, so I couldn't get out for 10 cents. Let me try 5 cents. I don't think I'm getting out for anything. Like I said, I don't think they're going to give me anything. Let me try 5 cents. Yeah, see, I'm not even getting out for 5 cents. Let me try a penny. I don't even think they're going to get me out for a penny. They may not even let me do a penny. There you go. A penny. A 1 penny credit. Again, I don't think this is going to get filled. Maybe it gets filled, but I was pretty sure we weren't getting 10 cents. We didn't get 10 cents. We didn't get 5 cents. I don't even think we're going to get a penny because this spread is not worth anything. It's so far away from the action. Nobody should give me a penny. Nobody in their right mind should be on the other. Yeah, see, they get you right there. That's where they get you, right? You think Sosnoff's not going to have the last laugh? Oh, he's got the last laugh. You think the Sheridan Estate's going to let you get away with a 1 penny order on an SPX butterfly? You thought wrong. 5 cent increments on this order only. And so we can't even try a penny. We can't even do it. They won't even let us do it. And so there you go. So we're going to have to let the SPX butterfly go out to pasture, which is essentially what I thought was the case. But I was a little bit surprised by the imaginary 10 cent mark that was on this butterfly. It's very similar to the imaginary PCE print this morning. I don't even know what it was, but it doesn't matter. Does it really matter? Come on. But anyway, I digress. All right, SPX. We had to talk about that. That one didn't quite work out. But let's talk about GLD. So this is a trade that actually did work out, where I mean, you guys, we were laughed at, man. We were laughed at in the chat. Like, we were made fun of. We were mocked. We were jeered in the chat when we put this trade on. People like, Jim, you're crazy. You're short gold. You got to be buying some gold, man. I've seen the line at Costco. Everybody's buying gold. You got to be buying some gold too. And so I decided, this was only maybe a week ago or so, to go ahead and let's fade the the masses. Let's kind of, let's not take the Johnny Public, Tom Sosnow play. Let's kind of go against the tide here. And we did a little short call spread here in GLD, and it worked out. So we're going to be able to take this guy off for over 50% of max profit, about 75% of max profit or thereabouts. And, man, that's a lot of RB sandwiches. I mean, that's like a year's worth of RB sandwiches. $1.40, $1.35. So $135. I mean, man, I don't know what an Arby's roast beef sandwich goes for these days, but it can't be more than 89, 99 cents. And so let's go ahead and let's close this guy down. And 53 cents, that's fine. We can do that. I want to do that. And then I want to talk about our diamond spread. That's the other thing that I'm getting rid of that SPX trade. That's the other one I want to talk about, because we made a mistake on the diamonds trade, and it's a good little learning tool for us, a nice little teachable moment that we've discovered. All right, so GLD, we're out, we're over, we're done with. So there you go. So DIA. So when I was looking at my portfolio today, and I was like, wait a minute, something about this does not look right. Right? Like, you've got the DIA, you've got the price of 432. Okay, fine. You've got, the trade price, also 432, nice and feng shui. You've got a mark price of 537. Okay, everything looks fine. But then I looked at the actual spread, and I'm like, wait a minute. I don't think that's right. I mean, it's right in the sense that it's what we have on, but I'm like, I don't think that's what I had on originally. A $12 wide spread, 433, 445. I mean, without using janky strikes, it doesn't get less feng shui than this type of spread. I'm like, I don't think I did a $12 wide spread in DIA. And when I did a bit of digging, which we're going to do here together as we bring up the chains, you're going to see I certainly did not do a $12 wide spread. I did a $10 wide spread on January 16th. So I did this guy about a month and a half ago. We did it for 434. Now, I remember the show on 220 because it was last week, and I was very excited about being able to roll for a 2-cent debit, kind of saying, oh, it's even money. We're not really risking any more in the trade, whatever. But it totally slipped under the radar, which is surprising, because I normally try to look for these things, kind of on the front end, and make sure that the strikes aren't being shifted around on me because of, strike availability or whatever the case may be. But you can see it right here. The 433, 443 got rolled into, let's grab our diet strawberry, a 433, 445. And so the reason why I want to bring this up is you have to be very careful when you are rolling really any spread, but especially a defined risk spread. If you start tinkering with the width of the strikes, even if you can roll for a credit or even money or whatever, that does not mean that you have not added risk to the strategy. In other words, when I put this strategy on to begin with, let me clear away these circles here. When I put this strategy on back on January 16th, I sold a $10 wide spread for 434, right? Okay, it's good to go. Like, I sell the $10 wide spread for $4. Let's say I'm risking $6. Like, everybody's happy because the maximum value of the spread is $10, right? I collect 4 on the front end. The most I can lose is the difference, which is 6. Okay, come time February 20th, when I rolled the spread, I didn't change my credit collected. Obviously, I paid an extra 2 cents, but just for the sake of simplicity, let's assume it was a wash. I still have the same $4 in credit, but now I have a $12 wide spread. Now, again, I got super lucky. Right now, this is working out, and the diamonds have sold off, so I think we might be able to get out of this thing, okay. But I just wanted to point out that you are not in a situation here where you kind of beat the system and, kind of cheated the Reaper, and like you got away with, something super special where you haven't changed your risk parameters. No. We now have $2 more of risk in the trade because we have a $2 wider spread. We have a spread that is now $12 as opposed to being $10. And so that was totally a mistake on my part. I didn't mean to do this, but I wanted to point it out because it is an interesting little teachable moment. Now, we're at 21 days to go. We're right at about, We're right at about $1 loss on the trade. I'm going to hang in this guy for right now. Famous last words, of course. Because, I mean, your 21-day marker, it's important, don't get me wrong. But it's a lot more important for undefined risk strategies, in my view, at least. And so I don't feel as, I'm not as, like, on edge or uneasy about carrying this guy into, 18 days to go or 17 days to go, 14 days to go, 11 days to go, like 8 days to go. You get down to 4 days to go, it's going to be okay. Like, it's going to be fine. It's a spread. It's not that big of a deal. Now, it is a $12 wide spread now instead of a $10 wide spread. And so I'm going to sit tight. Now, I could roll it again into April. But for right now, let's sit tight. Maybe we'll go ahead and roll it next week. But, if the boomers fall out of bed, pun intended, or maybe not intended, if they fall out of bed next week, then, which is a high likelihood, let's be honest. I mean, that's a 70, 80, 85 delta. Then this thing could print some money come time Monday, Tuesday. So that'd be kind of nice. All right. That's all I really want to talk about, though, in the portfolio. We have other things, of course, going on, but nothing, that's crucial for us. We'll talk about Starbucks at some point, and obviously Bank of America, Chipotle, Apple. We'll talk about all these things and more. But because yesterday's show was so kind of janky with the technical issues in the middle that the production team did an amazing job, kind of fixing and getting us back up and running. I want to get to you guys now that we're right at the halfway mark of the show. And man, let's see where you guys are at. Go all the way to the top. And there's Orgdenu. What's going on there, Orgdenu? Greetings from Italy, Dr. Jim. Hope you're feeling better. Yes, I'm like 100% now. We are all good to go. Love all your webinars. Have a wonderful weekend, man. I appreciate you so much, my friend. Thank you for being here, and thanks for being part of the team, man. I really appreciate you. We got to start having like a From Theory to Practice dividend. Right? Like when you buy shares in like Walmart, right? Like just for being part of the team, you get a dividend. Like when you buy shares in McDonald's, like just for being part of the team, you get a dividend. Like we got to start sending out some From Theory to Practice dividends, man. We got to start talking to, the finance team or somebody to start getting you all compensated. Because I know there are way better things you could be doing with your time than this. And so I appreciate you guys so much. Sam L. Dr. Jim is in the house. Are we still in the Matrix, man? I don't know. Did we all take the red pill today, or is the market just stuck in the red? Man, this market is crazy. It just cannot get its feet underneath. I don't know, Sam L. I really do not know. But it's going to be, the last hour and a half. I mean, this is the most important hour and a half of my trading career, and there is no close second. Like the next 95 minutes in the market, your financial future depends on the next 95 minutes in the market. Like, is ES going to go down another 11, or are they going to go up 8? Like, that's what you really need to be focused on right now. Like, your financial future, your retirement plans, your children's education, all these things depend on, the next 20-point swing in ES. And so it's going to be crazy, though. It is going to be crazy to see what happens. Sam L goes on to say, Doc, it's feeling like leg day on a Friday. Man, that'll really that'll shake some things up. Time to embrace the pain. No shortcuts, just growth through the struggle. Yeah, man. Sometimes you just got to go through it. You can't go around it. You can't go over it. You just got to go through it. And that is indeed leg day, especially leg day on a Friday. I mean, that takes some cojones. I got to be honest, to just voluntarily ruin your weekend like that. Like, man, that's some good stuff, man. I'm very proud of you. And so YouTube Jim's in the house because greetings, Dr. Jim. Happy Friday to all. What's going on there, YouTube Jim? Appreciate you, my friend. Thank you for being here. I really appreciate you. You're here every day now. And so it's just, it means the world to me. It really does. Space Explorer says, is API down? I don't know. If you mean the Tasty Trade API, I would email support@tastytrade.com and ask them. I don't know. I don't know if the API is down. And I know we've got a bunch of new things like backtest and stuff that I haven't even played around with yet. And it's like, man, we should do that. Maybe we'll do it on the show sometime. Maybe we'll do some backtesting on the show. That might be kind of fun. And so don't hold me to that. But maybe we'll poke around with that. Let's see. Junior Mac, good morning from March 1st, Australia. That's correct. It's already March in Australia. How crazy is that? So happy month anniversary to you there, Junior Mac. Right now, it's only month anniversary eve for me here in the States. And so, yes, happy month anniversary, my friend. I appreciate you there, Junior Mac, and I appreciate all that you have done for us and all the support that you give us. So thank you so much, my friend. Let's see. Martin's in the house. Says hello from Indiana, Dr. Jim. Happy Friday, man. What's going on? Indiana, Australia, they're pretty much the same. And so, Martin, I appreciate you, my friend. Thank you for being here. I don't recall you having been in the chat before, so thank you. If there's ever anything I can help you with, please let me know. It is my absolute pleasure to help you in any way that I possibly can. And so let me know. No questions off limits. I can't promise I'll have the answer. In fact, there's a really good likelihood that I won't. But hopefully I can give you some kind of thoughts and insights that might help you out. And so RC says, this is not the risk-free asset I've grown so accustomed to. I know, man. I know. But give it time. Like, look, here you go. It's turning green now. Like, I think enough of you guys did the Control-Alt-Delete, Control-Alt-Delete. We get the computer restarts, and that's it, man. That's what you do to make a red day unched, to make a green day more green. And so it seems like you guys did that to kind of make this red day unched. And here we are sitting on unched right now, pretty much across the board in all the major indexes. And so, RC, I think we're good. I think we might not necessarily be staring down the chutes at total collapse just yet. Frank says, "Hey, Dr. Jim, I'm appreciating the content, man. I appreciate you for appreciating the content, my friend. Thank you so much. I really, really appreciate you, Frank, for being here." Finwest says, "Aloha and good morning, Dr. Jim. I'm back in the U.S. for a spell, and so it's great to tune into your program when the sun is out." Yes, I'm sure it is, because you are usually gallivanting the globe, and that is gonna kind of jank up your time zones and whatnot. So yes, thank you for being here there, Finwest. I appreciate you so much. Ruben C, Dr. Jim, it's so good to have you back, man. The world is ending, and you went MIA on us. Yes, I did. I told you. I totally ghosted y'all. Like, I straight up Good Will Hunting you guys, and it's funny because I've told you guys many times that if I ever figure it out, quote unquote, and I just figure out the secret sauce that we're all looking for, I'm not telling you guys. I'm just gone. Man, I'm just gone. And I'm gonna Good Will Hunting you guys, like, for reals. Like, I'm just gonna be gone. Like, no goodbyes, like, no farewells. I may give you a broken heart emoji on Twitter, but that's pretty much it. That's all you're gonna get out of me, and then I'm just gone. Like, you guys are gonna wonder. And I was gone for a couple of days. I didn't make no mention of it. And so some people were like, on Twitter, or people emailing me, people coming by the house, like, is he really gone? Like, looking in the windows, like, where is he? But no, it's just I was having a bunch of eye issues, and so I'm all cleaned up now, though, pretty much 100%. And so we should be good to go. I actually am going to be out. So, quick little housekeeping. I am going to be out next Friday, just because I want to go to my kids. My kids have this little co-op deal. We homeschool our kids, so mostly they do their schooling at home with Autumn. Thankfully, it's not me. That's definitely for the better, I can assure you. But every Friday they go to this little co-op deal with all the little friends and all these other homeschool moms and whatever. It's amazing. It's an amazing community. It's incredible, whatever. And they have just been on me like, "Dad, you've got to come, check out our co-op deal." So next Friday, March 7th, I will be out, which is really crazy, because I am going to miss the most important NFP print of our lifetimes. Like, I don't know how I possibly scheduled this. Like, with the most critical NFP print, like, we've had a lot of NFP prints, but none like this. And I am not going to be in the office for that. So you guys are going to have to make it without me. But I'm just letting you guys know ahead of time. That is a scheduled day off. And so let's see. Theta Trader says, "Dr. Jim, Theta Trader, I owe you an email, by the way. I know I'm getting caught up from being out for a couple of days there. I did see your email, and I owe you a response for sure. Dr. Jim, as I'm sure you're aware, the inverse double rainbow hammer candle has formed in Bitcoin, getting long when it breaks 69,000. Looking at IBIT put ratio. Man, there you go. I mean, that's it. Put ratio is a great strategy. I mean, with or without the inverse double rainbow hammer candle. Like, if you're looking for a way to generate stable, reliable income in your portfolio, put ratios on Bitcoin, I mean, that would be the first thing that comes to my mind. I mean, I don't know what the first thing that might come to your mind is, but that's the first thing that comes to my mind. Which, by the way, for the record, for people that are brand new, that is totally sarcastic. And so I don't want to be answering a bunch of emails later like, "Wait a minute, is that what I've been missing?" Like, no, that's definitely not what you're missing. But it is how you trade options for income. But Paul Heyman says, "Did your studio get a new roof?" No, not the studio, but the house did. The house got a new roof, but the studio's got the same old clunky roof that we've had from the beginning. And so, yes, the roof situation is pretty much all done now. Like, the work's all done, the permitting's all done, the inspections are all done. Now they just want me to pay him, which I don't feel great about that. And so, we'll see. We'll see how it goes. Let's see. Martin says, "Would you sell SQQQ puts for these type of days?" That's one of those leveraged guys, right? I think so. Let me take a look at it really quick, Martin. Probably not, if that's what it is. SQQQ. It's an ultra pro short QQQ. Okay, so this is, I can't tell from just this little line. I haven't traded this stock or this index before. I know a lot of these guys, like I think SPOX is one of them, and there's a bunch of other ones, but I don't really like the 2X and 3Xs and those kinds of things, because they have these hidden taxes that are kind of I call them volatility taxes. And the way the funds are set up, they have to reset every single day so that they don't go to zero. And this is another reason why you always see these funds like UVXY would be another good example. You always see these funds just get whittled down over time, and then they have to do a reverse split to boost the price. Otherwise, they'll just fade off into oblivion, right? And it's like, man, that can be a really difficult thing to trade against, where it's like if you don't get the move that you're looking for quickly, you can just get chewed to pieces on the price. And so I personally, Martin, I would stay away from these. Because the reality is this, all of these funds that give you all this extra leverage at 2x or 3x, whatever, they're completely unnecessary in my opinion, because you can go in using things like options, using things like futures. Man, you can dial up whatever leverage point you want, my friend. Like you want crazy leverage, like it's one click away. Like you want 1.5x leverage, like it's one click away. It's not hard for you to dial in whatever type of exposure you want, in the NASDAQ, the S&P 500, bonds, gold, whatever is to your liking. Like you can dial that up just using the normal products, QQQ, SPY, GLD, TLT, kind of using the more traditional strategies that we like that aren't going to have those hidden costs that are kind of baked in there with the daily resets and things like that. So I personally would kind of steer you away from that and maybe onto something a little bit more traditional. Hopefully that helps a little bit. Tiago's in the house. What's going on there, Tiago? Tiago says, Dr. Jim, we're going to need your butterfly expertise for a trade idea today for some financial gains. Man, I got nothing for you. I'm still reeling from this SPX butterfly, which we were on a nice little hot streak there, but then, maybe the eye thing threw me off and I'm just not seeing things as clearly as I was before. But yeah, we're gonna pause on SPX, and then next week, I don't think we have too much going on next week. Obviously, we've got NFP on Friday, but I'm gonna miss Friday, so I'm not gonna be doing any Thursday trades going into Friday when I won't even be able to manage it on Friday. Like I'm gonna be watching, like Penelope in science class, and I'm gonna be watching like Amelia and like her. I don't even know what they do. Like what do they do as 5-year-olds? They just like sit around and like, still like learn words and stuff, right? Like that. I don't know what they're going to do, but I'm going to figure it out. Like I'm excited. Now I'm going to go to Eli. I think he's in like a tree climbing class. Like it's awesome. Like it's amazing. So I'm going to get to see all that kind of stuff. I'm not going to be looking at or thinking about NFP. And so I won't be doing any butterflies anytime soon, I don't think, which almost guarantees we'll have one on Monday for you. So if you watch Monday's show, then there you go. Money Wandering in the house says, we're all bouncing here on YouTube, Dr. Jim. Oh, man, bouncing. Like leaving? That's not good. Thankfully, a few 600 of you guys are staying, so that's good. But hopefully you're not leaving there, Money Wandering. But I appreciate you. Let's see. Lance Britton, check on Peter. Yes, I mean, it's not a joke, though, man. You got to check on him. You got gold down 39. It's like, hopefully his shifties are there for some solace and some comfort. And so, yeah, give him a look there on the old Twitter. RC says it's been nuts. It has been nuts. I agree with that. 100%. James Bond, number 4, says, happy Friday, Dr. Jim. Thoughts on Tesla? How would you trade it in this current market? Yes. Yeah. So Tesla obviously has seen better days. You have an IV rank of 76. The stock has been absolutely just taken out to the woodshed as of late. I don't know the reason why. Nobody really knows the reason why, by the way. I mean, they can tell you after the fact, but you don't really know, what the stock is going to respond to. Is it going to shrug off that report? Is it going to latch onto that report? Like you never really know. Not in the short term. Absolutely not. All that to say, I still think that Tesla, in terms of like, its command over its space in the electric car industry and all the other things, that Elon is doing, via Tesla. Now, I'm not even talking about like Doge and like other stuff, but I still think that Tesla has a command and, kind of a footprint in the market that really cannot be matched. So personally, I think the next 50 points in Tesla are definitely going to the upside. I would definitely play this thing to the upside. I think the next 100 points in Tesla are probably going to the upside. And so that's how I would view this. And obviously with an IV rank at 75, 76, I mean, you could go in here, you could sell put spreads if you want to be defined risk. You could sell puts if you have enough capital for it. Like here, I'll even show you, like, just to kind of give you, because you have earnings coming up on April 22nd. So if you went in like April 17th and you wanted to sell like a 30 delta put at like the 260 level, the buying power on that's going to be about 9,000. So, what kind of account would you need to do this, correctly? Probably 100,000, I would say 100,000 or more. 100,000 be the bare minimum. If you have 100 grand, you put this trade on, it's about 8.5% of your account. It's a little bit on the high end, but it's, it's reasonable. I think it's within reason. You've got 50, 60, 70 grand. You don't have enough capital to do that. And so you can't do that. But 100,000 or more, you could sell puts in Tesla, no problem. Now, if you have less capital, you still want to play to the upside, you can sell put spreads. If you want to do at-the-money call spreads, you could buy those too. There's a number of ways that you could play this. They're all going to be far more capital efficient than just like buying the stock and holding it. With express apologies paid to my father-in-law, who has been doing that for many, many years. And he has the last laugh because he is up a ton of money, even given the huge recent collapse in Tesla. And so let's see. John Jones. Oh, no. John Jones says, I was in tears yesterday. Trade small, folks, man. I'm sorry to hear that, John. I'm sorry to hear that the market kind of gave you a wallop yesterday. Hopefully that today's a little bit better. Hopefully you've been able to sidestep today or get on the right side today or whatever, or shrink your size down and use it as a learning experience. But I'm sorry to hear that, John. We've all been there, though, myself included. We've all been there many, many times. So you are not alone. You are absolutely in good company. RC says some gold bugs. Yes. And then let's see. RC says Costco gold sells out instantly. And then CJ says Costco sells silver too. Really? Wow, that's crazy, man. They're selling gold and silver. Like, all right, okay, man. I mean, that makes sense. I wonder if you can get some gold and silver samples. Like, can I go around the store and find the gold sample station? Can I find the silver sample station? Like, that would be kind of cool. Just give you like just a little speck of dust, right? Just a little something to see if if you might be interested in buying some more. Like, I mean, I think that's kind of the whole business model at Costco, is it not? And so that would be kind of cool. But let's see. A. Xander says bearish divergence on the weekly chart, Jim. Yeah, I don't know what that means. So I'm going to leave that to the experts. But yeah, I mean, a lot of people are saying, and these are the same people, they haven't missed a trade in 3.5 years. Like, they've bought every bottom and they've sold every top, right? These are all the internet trading wizards. They're all saying that we're going to 5,000, 5,100. I think we could get there too, possibly, but I don't think it's going to be a straight line lower. Definitely not. I think that there is a face ripper or two or three in the making to just, kind of make you believe that, man, we are back. Just to kind of make you believe that it's over, all is clear, the dust has settled, and that's when they absolutely just, take your face off. And so I would say, again, I'm on record as having said this, but just to give you more specifics, like if you've got the NASDAQ right here at 20,000. So the NASDAQ right now is 20,000. I'm just going to say 20,700 to round it up a little bit. And you can see, look at that risk-free now, up 65 points. Man, was there ever a doubt? Maybe a couple, but it's looking pretty good right now. 20,700. I'm going to say, if you had to force me to choose between it going to 21,000 or 21.4, I would definitely choose 21.4. And then you've got like EMI S&Ps at 5,900, basically on the nose. If you're going to tell me, is this thing going to 5,800 or is this thing going to 6,000? I mean, 6,000, seems like a slam dunk to me. And by slam dunk, I mean, it's a pretty distant 3 at this point. But I think that is how I would trade it. And that is how I'm going to trade it. And so that's kind of what I see. But let's see. CJ says Piker's ping pong dream market. Yeah, it's definitely a ping pong market. There's no doubt about that. Ron Johnson says, I have 3 put credit spreads in SPX, 58.30, 58.20. September 17th expiration, 47. September 17th expiration, 47 DTE. Should I roll out or just hold for now? That can't be a September expiration. There must be something else. 47. Hold on. Let me look at this. 47 DTE in SPX. That's going to be right. Oh, okay. I think you meant April expiration. That's going to be right here. So I'll just assume that that's what you meant. You have SPX at 58.83. No, I mean, right now I would not do anything, my friend. Like right now, I would sit tight. You still have 47 days to go. So you're right at the spot on the decay curve where we normally like to live. So that's all good. Right now, SPX, they're still out of the money, so there's no reason to roll it, in my opinion. I know it feels bumpy, and I know it feels like, man, this thing's going to be tested, maybe even fully in the money, like any minute now, of course. But I would just sit tight. I would sit tight, because if you roll out from here, the problem you're going to run into, Ron, is yes, you can roll for a credit, you can reduce risk, you can bring in more premium and all those kinds of things. But if you roll from April to like May and add another 30 days, now you're at like 75 days in terms of the duration of the trade. The decay is going to slow down significantly from where it is right now. So this is why we like to get in around 45 days, because that decay really begins to pick up steam. So I would actually sit tight. I would not do a single thing for quite a while. I mean, it's a defined risk strategy. So, the risk is controlled and your position sizing should be in check. And assuming that that's all the case and that's all, kind of up to snuff, I would sit tight. There's no reason to do anything other than that, in my opinion. And so let's see here. That is, all right, that's Ron. And then we've got Flower Powers in the house. Time for the Chinese dragon to roar. Yeah, I don't know what that means either. Is that a Chinese calendar thing? I don't know what that means either. But Junior Max says, gold is a see you next Tuesday. Oof, you got me there. Yikes. Grumpy Mike says, missed it. Did Vanetta cover the new rideshare service? Basically Uber with guns. Yeah, I heard about that. That's crazy. That does sound like something that Vanetta would cover. That 100% sounds like something that Vanetta would and should cover. So if she hasn't covered it yet, I'm sure that she will. Let's see. Ranch Rhythm says, howdy, Dr. Jim. What's going on there, Ranch Rhythm? I appreciate you, my friend. Colonel says, hello, Dr. Jim. I'm near the house. My house. That would be great, man. Like, let's hang out. Like, let's do it. Autumn will make us some stuff. She'll make us some peanut butter oatmeal, maybe warm up a little daddy's chicken, and she'll set it up. Don't even worry about it. So CJ says, new China vacuum mag Lev train, 1,000 kilometers an hour. Man, that'd be pretty crazy if that's true. And I didn't hear that either. But Brad Glazier's in the house. What's going on there, Brad? I appreciate you. I wrote back to your thank you for your email earlier. I appreciate you so much and your thoughts. But I'm like 100% now, doing great. And so thank you, my friend. RC is back in the house. And RC says, and rightfully so, their curly fries are top notch. They are top notch. Like, y'all, if you're saying anything different, you're just lying to yourself. You're lying to all of us. We know you don't really feel that way. We know that you wouldn't devour an entire bag. And I'm not talking about like the little bag that the fries come in. I'm talking about the whole Arby's bag of Arby's fries right now. Doesn't matter if you're hungry. Doesn't matter if you're full to the brim. Like, you will crush that Arby's fries. You know that that's true. That's 100% true. Now, Benjamin says Arby's trash. It's not trash, man. The fries are unbelievable, and you know that's true. Let's see. John Jones, USA Super says, I will buy it from you. Maybe that was my gold trade that I was taking off. I can't remember. John Jones says Arby's meat is fake. Okay, I mean, like they're doing anything different that anybody else isn't doing. Like, you think you're going to McDonald's and getting grass-fed, grass-finished beef? Like, no, man, you're getting the cardboard that was in the back alley 45 minutes ago. Like, you're not getting the grade A stuff. You're not getting USDA Prime. So Arby's is right there with everybody else, man. So, it's all good. And so let's see. CJ says Arby's meat is made in the lab. It's just genetically engineered to be superior. Like, you guys are saying this like it's a bad thing. Like, it's superior meat, man. I don't know what to tell you. So Steve's digging in. I appreciate you, Steve. And then let's see. Jack. This will be our last comment because I got to roll. Show's over, which is unbelievable. I can't believe it. Says, I'm getting burnt on an SMCI put credit spread. I'm short the 48.35 DT. Cannot roll for a credit. Do I eat the loss or wait another 2 weeks for 21 days to go? I don't think SMCI will recover. I'm short the 45. I'm short the 48. Oh, it's a put credit spread. You don't do anything. You eat the loss. If it's defined risk, you hold it till the end. It's very simple. It's not fun, and it might be a lot of pain, but you don't do anything. You don't have to eat the loss. You can if you want to, but you don't have to. I would sit tight personally because crazy things happen, and those spreads come back all the time. So that's what I would do. But, man, I appreciate you guys. I got to roll and get you guys over to Jamal, but I appreciate you guys so much. If I can ever help you guys, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and eat some Arby's. We'll see you guys on Monday.
much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and my Friday guest is the one, the only Josh Fabian. Josh, what's happening, man?
I'm watching the world melt. Watching the whole world implode.
I was watching. I was looking at Twitter, as you know. That's one of the things I pay attention to a lot during the day, and it started blowing up with this situation that happened in the Oval Office between Trump and Zelensky and Vance. Basically, dude was outnumbered 2-1. I mean, that was something else to see, especially in the Oval Office. Almost came to fisticuffs. I mean, I don't know if that's the case, but
yeah. I mean, I told you yesterday that I'd hurt myself at the gym with what you called a 50-plus-year-old injury, which
well, how else would you describe it? When you hurt yourself without barely doing anything, I was lifting a
35-pound plate up and turning, and I felt a pinch in my back, and that's gonna be a problem. Well, this morning I woke up and I couldn't move, so I got in to see somebody, a massage therapist that I've been seeing for years. I'm like, you got to help me out here. I'm in bad shape. And I mean, she abused me basically. I'm driving home and all of a sudden my phone starts blowing up and I'm like bolting to get into my place, turn on the TV, and I got to watch this from the beginning. And I just yep. So this is the world we live in.
This is the world we live in. Yeah, for sure.
I'm just,
sure.
Yeah, it's
Marcus reacted to it. I saw as soon as that's what actually brought me into it, because I saw Twitter just kind of heating up, and it was all, again, the way that I look at Twitter, I see a lot of different things at once. It's almost like the Matrix in a way. And as soon as that happened, I saw markets turn around. Markets were actually heading up. They turned around for a little bit, although it's been doing that throughout the day. But I'm telling you, there was a high correlation between what happened and the way markets turned around for a little bit.
Yeah, for a little bit. Now we're up 27.5. Is that right? Am I reading that right?
Yeah. It would seem so.
It's I just don't think. Tom called me about an hour ago or maybe a half hour ago, and the market just doesn't care about this situation at all. That's my take on it. I just don't think the market. It's like whatever. I mean, it initially sold off, but then it rallied back. It's just like.
Oh, about the situation that happened in Oval Office?
About the war in Ukraine, honestly.
Oh yeah, no.
It's just like
no. Not the way it was a couple years ago.
I mean, this could have been a defining moment in this war. It probably is a defining moment in the war, and the fact that the market just doesn't seem to have much of a response to it tells me that it's just like done with. I don't know what the market's looking at, but I do know what it's not looking at, and war in Europe is one of those things.
Well, one of the things we always talk about is uncertainty, right? And I think that's the thing that freaks the market out. There was this large amount of uncertainty when this whole war, if you will, started. Was that 2 years ago? It's 2023, right? Beginning of 2023, I think it was. And there was a lot of uncertainty, obviously. And now the only uncertainty is, will RSX ever leave your account? If you traded it, it's going to be there forever. I don't think you can ever expect that to leave. Jesus Christ.
So actually, we do get a lot of questions. It's worth mentioning. You can sell that if you call the trade desk and it's in your account. It trades on the pink sheets. And so if you call the trade desk, they can get you out of it if you want. I don't know. I think the last quote I saw for it was like 50 something cents. So I don't know why you would, unless...
I'll pay 10 cents to get out of it. Maybe. I mean, just
maybe at the end of the year to take the tax if you were taking a tax loss or something on it, I guess. But at this point, what's your downside?
I mean, yeah, not much at all. I mean, I've never seen an expired ticker like that hang around for that long. And I've definitely seen my fair share of expired tickers. I certainly haven't. Before I got a couple of slides for you. We're going to look through in a second. Before we even get there, man, what do you think about? We talked about it early in the week. How are your sentiments now on Friday compared to Monday of this week?
I still think we're going to sell off.
You do?
I think that I do. I don't think anybody wants to carry risk into the weekend. And interestingly enough, I do think that the situation in the Oval Office that just happened is an example as to why people don't want to take risk into the weekend. You just don't know. Markets don't like that uncertainty, like you just said. And I think that Fridays are going to be a day in which you see people delever and try and free up some cash prior to heading into the weekend. But, we'll see. What VIX futures are still up, right?
VIX futures are still bid, actually, yeah. When you look at and pretty flat across the front few months. And I actually put a SPX Iron Condor on for the day for the year exact when we were up 30, thinking exactly like you are. We'll see how it ends up playing out. I mean, I would certainly welcome a sell-off into the close. That said, I also put one on for the upside for next Friday. Of course, we have the jobs report coming next Friday. It could be night and day on the week. We'll see. At least that's just my bet anyway. And throughout the week, my strategy has also been sort of these put spreads here and there. I mean, at this point, I think I have every single Mag 7 name, which, again, I mean, maybe that's going to rock me or not. Actually, this is a really good time. John, can we pull up the slides and take a look at those real quick? Because everything that we've just mentioned is within these slides. So give me your thoughts when you see something like this. This is the largest tech firm.
I can't see it. I see your screen.
Pin the window. The window where you see it, pin it. That's how I ended up having to do it. Pin that window and then it'll be bigger. Yeah, exactly. See? Little tricks of the trade you learn. So this is the largest. This is the performance year to date of the largest tech firms. Intel's up top. Of course, a lot of that run was probably more recently in Intel. You got Meta next. At a little over 10%, probably 12%, I think. Netflix at like 8-9%. Cisco was up there. I mean, I don't even trade Cisco. I don't know the last time I traded Cisco. S&P 500, of course, just went in the red today, and obviously everything on the left is in the red. I just chose to color a few things differently. Qs are in the red now. I mean, pretty much every as of this morning anyway. I don't know where everything is as of now, but this morning, SPYs, Qs, IWM were all in the red. Dow was the only one in the positive. But you got Q's in the red, Adobe, Oracle, XLK obviously is another index, if you will. Actually, I forgot about, did I? No, not XLK. What? Oh yeah, I sold some SMH. XLK is another. Let me put that on my list. That's another ETF I'll go after at some point if we go lower. I just like at this point, I'm making lists. I'm making lists just to kind of
twice.
Yeah, and I'm gonna find out who is naughty or nice. But I got to make these lists because I think you got to make lists like in situations like this. Because if we do go lower, we drop another 1 to 2%. You want to, even if you don't do it now, you want to identify the names that you want. You forget, right? And like you want to identify the names.
Yes. Yeah. When it gets chaotic, I totally agree with that. When it gets chaotic, you forget what you wanted to do, and it's very easy to get just sort of discombobulated by the whole situation. So having a plan in place prior it makes sense.
Apple actually is the only one I don't have a short put spread and I have a short call spread in. Where is that?
Apple's been strong. I mean,
dude,
what's it doing today?
How come every time I remind people that I have a short call spread, you're like, Apple's been strong? Like, I mean, I get it. I know. Like, you're right on cue.
It's because we've been talking about it all week. Like, every time the market's down, we're like, but why is it? You said it first, I think, I don't remember what day. Like, the market's not crashing with Apple up 2.5 points or whatever it was that day. Yep. And it just, I've been paying attention to it ever since. It's like, for whatever reason, that stock is just, it's maintained its strength.
I mean, maybe it has to do with the fact that, let's just call it what it is. Apple went and head to the White House and they kowtowed to the White House and they're like, look, we don't want to lose money. We want to get this nice tax rate. So whatever we got to do. And they came in with the $500 billion that they're going to spend over the next 4 years and 20,000 jobs. And that's the price for doing business in America right about now, in case you didn't know. That's the starting price. I'm just saying it is, dude. You know it's true. Everything is negotiable in this current administration. That's the starting.
100%. I agree with that. But I find it interesting, even with the tariffs, they're going to go into effect on Monday. That it's still up $1.30 or whatever today. So it's just that stock seems.
Well, they said, basically they said, look, this is what we're doing ahead of time. We're good, right? Like, I'm good. It's like, I'm good. Okay, I signed this. I did. Okay, I'm good for Monday, right? I'm good for Monday. Cool.
You're right. Anyhow, I don't blame you for being short a call spread in it. I mean, it's the one that's held up. I feel for you because you're short a call spread and it's held up.
Thank you. I mean, look, if things work out as planned, I will gladly lose money in that to make money on the Amazon, I don't have XLK yet, but the SMH, the Amazon, the Nvidia, the Google, Tesla call spreads. CRM is down, and then obviously Tesla's down the most. Do you see any opportunity in here, and you're just kind of like, whatever? Yeah, tech's down. No big deal.
I think there's opportunity. I don't know that we're bottoming out yet, is my concern. I think that, looking at everything, so we all have our own market opinion based on whatever we decide to look at. My personal
John, let's
opinion,
move to the next slide while he's saying this, because I want to show this chart what he's about to say. Go ahead.
My personal opinion is we haven't bottomed out. I think that we have a ways to fall still. And I only say that because we were fully valued on, like, if I do take some fundamental consideration, not a lot, but some, and we were fully valued going into earnings season. There was no wiggle room on that. And earnings, didn't give us a reason to see much of a upwards movement in the market at this point. And looking at, I think that you have this potential looming crisis with the budget. What is that? Is it the 14th? I can't remember the date that they have to have that solved by. But
I'm never worried about those anymore. Those always seem to get solved. And even if they don't, the fact that we can, print money anytime we want and figure out these things, I don't know. They used to seem like a big deal, but I don't know. They don't seem as much of a big deal.
I didn't used to worry about him either. I'm with you. But I think that, this guy he's different. He doesn't care. He'll do what he wants to do. And I'm not saying that's, right or wrong, saying that's how he does it. And so I do think that normally I'd be like, whatever, they'll get a deal done at the last second. In this particular case, I'm not so sure. But aside from that, you just have the, other things that are going on at the moment that I don't see the optimistic argument for the market right now. That could change by Monday. I mean, but today, I'm just not all that enthusiastic.
So you wouldn't be surprised to see, right now we have Dow's up 2%, like I said, the only one in positive. S&P is down small year to date, might be at flat, I'm not sure yet. Q's and then is down 4%. No, Q's are down 2%. IWM down 4%. Mag 7's down, let's just call it 8%. You're telling me you wouldn't be surprised to see the Dow flat on the year, S&P down 2, Q's down 8 and Mag's down. If Q's down 8, Mag's going to be down 15. Would that surprise you?
No. When we did the contest for guess where the SPX will be at the end of each quarter and the end of the year, I think I had the market up higher for the first quarter. I know that. Then I had it down in the second quarter, and I think I had it down for the year. I think I think I had it
down in a couple of quarters.
I mean, it's also hard for me to say after consecutive 20+% gains that this year, okay, if we ended up down a little bit, okay, it's reasonable.
I mean, it's reasonable, certainly.
What about you? I mean, where do you think we'll end when it's all said at the end of the year? If we're alive.
End of the year? I don't know. It's too far for me to think. I can't think that far. I think I would be surprised to see us slightly up this quarter. I do still believe that we're going to bounce. I feel like this tariff thing. I feel as soon as Monday comes, we're going to jump for whatever reason. It's always in this case, it's sell the rumor, buy the news, right? And so I just feel like that's kind of what we've been dealing with for a while now. This tariff, look, might as well put also too on the board. Tariff is the word of the year so far. It's not inflation anymore. Tariff is definitely the word of the year, and it seems as though we're moving on that word every time it comes across the wires. It'll be interesting to see, how much things change all of a sudden as soon as magically Monday comes. I don't know, man.
Well, I do think that. I think one thing that's going to happen for us to have any sort of a meaningful pullback is we'll have to get a bounce of people buying, a small pullback only to get their hand slapped. I mean, I think that, I don't expect it to just be a straight down. I do expect, if I recall correctly, in August when we had that nasty sell-off, didn't we have a bounce in the middle of it? One day where I'd have to go back.
It was three. It was. I mean, if there was a bounce, it could have been intraday, but we ended lower.
Bounce.
3 days in a row, we ended lower. It was like a Thursday and a Friday, and then a Monday.
And Monday. But I want to say there's an intraday bounce in there.
There's definitely an intraday bounce. I'm sure there was.
Yeah, and I think you're going to have some sort of a bounce, just like I said, to get people. If you just go down and people buy it and go back up, then I mean. Huh? Then it
goes down and then
business as usual. Business as usual, I guess. I mean, it's worked. I don't even know where I was going with that. I probably shouldn't have said that. I think you're going to get a bounce and then it's going to get sold off.
It's like real genius. He's like, take a step back. No, I'm sorry. Take a step.
No, take a step forward.
Now take a step back. And take a step forward. And take a step back. And we're cha-cha.
And now we're cha-cha. Nobody knows what we're talking about.
No, they don't. I don't care. I don't care. You know what I'm talking about. I know what you're talking about. That's all that matters. Let's move ahead to the next slide. There's some people on the stream that have seen Real Genius. I promise there have been.
Yeah, but do you know the lines like that?
I know. One of the greatest movies of all time, people. You got to check it out. Flat term structure, dude, across the front 4 months. Now, I will say that should make you a little bit nervous. Yeah, I'm not gonna lie about that. I mean, and it's 19 and change too. We get a waterfall here into the weekend. We're at what 5,900. We get a waterfall here into the weekend, and God forbid if it's 100 points, we're in backwardation, folks. Straight up. Yeah, what the hell's going on in July? That July is so much more elevated than June. That's kind of interesting. In June, July, and August. Is there anything going on in July and August this year? 2025. It's a little weird.
Nothing I can think of off the top of my head, but I will say I did something a little untraditional. I did buy a bunch of VIX calls and sold a bunch against it that are much further out of the money just to reduce basis a little bit. But I'm putting my money where my mouth is, I guess, is what I'm trying to say. I bought, I rarely ever do this. I would usually just buy like a VIX micro or something like that. But I'm like, nah, screw it. I'm gonna take a swing here.
And that's important to do, I would say. You talk about putting your money where your mouth is, but you know how the product works. You understand it. And I think that, somebody asked me the other day, a friend of mine, good kid I'm mentoring, he was asking me questions about right before NVIDIA earnings. And he's like, I'm buying some upside in NVIDIA call spread. And then I'm also buying these VIX calls or whatever. What do you think about that? Is it dumb? I was like, no, that's not dumb, man. Just as long as you understand, like, those are extrinsic value calls and they're pretty far out of the money. You're setting you're hoping a certain set of circumstances happen. Either NVIDIA completely takes off or it tanks and VIX, bounces, and which eventually kind of happened, actually. One of them, yesterday, right? VIX did bounce. It didn't get towards, well, it did get about 21, and he might have at least. Look, the best thing you can ever hope for is that your VIX calls that are far upside retain some type of value. That's the best thing you can hope for.
It's a trade that's going to work kind of quick too. Like, it's a trade that it's going to either work or it's like, I'm not holding this, for a long time. And you have to do it in the front month, because if you're going to get a vol spike, it's going to be in the front month. You can't do this in like April or May or whatever. You had to do it in March, which is where mine is. But right now it's actually working out right now. I probably shouldn't say that out loud because, I'll give it all back before we're done talking here.
I think every trade is worth doing as long as you either make some money on it or you learn something from it. So it is what it is. In this case, you're not. I know. I was about to say, in your case, you're not trying to learn anything. You're trying to make some money.
I can't afford to learn anything more.
Yeah, most of us can't. Let's move to the last slide here. Rolling correlation. I had to put this on here because this is something that's been confusing me recently. Gold and the 30-year treasury really used to move together a lot, and I'm not making that up. You can see it over the last 4 years. Any correlation that's above 0.5 is good. Of course, during late 2021 it was late 2021 for whatever reason, was negative for a bit in the end of 2024, and currently negative now. So there's really not much correlation, which totally makes sense because we've seen ZB start to move, and gold is, especially the last 3 days, that correlation has dropped a lot over the last couple of weeks, in particular the last 3 days. So I don't really know what to make of the gold call. I got lucky. Early in this week, Chris and I had these gold call spreads together a few months out, and I was up 80%, and it was up $1,000, and I decided to close it because I wanted, after the couple of days of correction, I wanted more cash to be able to trade equities. Sure enough, the gold started dropping, so it just worked out well for me. I got lucky in the time that I closed it. I was thinking about getting back in, but I don't know. I don't know what to do at this point, honestly, and I think I'm just not going to trade it at the time right now, but it's been a weird thing to watch that correlation erode.
Absolutely. You had a theory about why bonds are rallying. I don't remember if we talked about it on Monday on the show or if we were talking about it off air. You go ahead and say, I won't speak for you.
You mean as far as what I was saying, it obviously has to do a lot with what's going on fiscally, and they feel that all this stuff that's happening with Doge or whatever is cleaning up the government and freeing up government spending.
Yeah. So, and I think that's as good a theory as any that's out there. When bonds first started rallying, I think gold was still moving slightly higher. I think that it had a little bit of a rally left in it, if I'm not mistaken. And I thought, and I still kind of think, I think right now you're seeing some profit taking in gold. I tend to think that the gold is an inflation hedge, and the rally in bonds is much more about a flight to quality. I don't think it's about a belief in what's happening with the government is going to result in any sort of net positive. I think it's just a flight to safety more than it is anything else. I know Elon's hard at work today because he tweeted out that he just finished up a very long podcast with Joe Rogan. So Elon, definitely. Is that going on his 5 things he did this week email? Do you think? Got stoned with Joe Rogan.
It would have to. It would have to for sure. You know, it is kind of funny that gold is profit taking if we're in a serious situation where the market's going to tank. It makes you wonder, like, if the market does tank more. I mean, again, gold has been falling as the market's been falling. That's the weird part about it, too. So I don't know. I don't necessarily think one has to happen for the other to happen, right? Like, I don't think necessarily like if the markets are going to tank, gold has to get bought. But usually that's what we see when things get really scary. It'll be interesting to see if we do start to get more selling here at these levels. Does gold get bought back?
Yeah, I'm curious to see what happens in the next, call it 50 minutes. I'm not expecting gold's going to come back on the day. It's down, 34? Spoos are really fairly.
Yeah, we can go back to the platform, John.
Yeah, gold's looking.
Yeah, I don't know. Gold's looking pretty strong at this point in time. It's kind of weird. I didn't have that on the bingo card.
No, I didn't either. I really thought that it was. I thought we were gonna see a bit of a pullback here, but this just goes to show you that. I mean, I've been doing this for a long time.
We got a lot of time left. We got a lot of time left in the market.
Yeah. Yeah. I'm curious. Pull up ES for a second. I'm just curious what the volume's like there.
2 million.
It's a lot. It's a heavy day.
Every day.
Yeah. It's interesting.
Markets. VIX did just kind of give it up here as soon as we crossed over 1,500. VIX gave it up. But these are still fairly close. 10 cents apart is pretty close.
That's very close.
Everything has turned positive. Microsoft is the only one of the Mag 7 that's not up as of yet. But man, things are
Apple's up.
Yeah, thanks. Yeah, I didn't see that one. Thanks for noticing for me. Thank God. I don't know what I would have done otherwise. Oh gosh. Yields, are they bouncing? A little bit. They are. So I don't know. Things are changing here. If you look, I got, like I said, I have a trade on for the day. That would be awesome if it gets in the money. But I really don't think any of us want to see it, because if we do, that means things have gotten really ugly. And ending the weekend in the red, that might lead to like a 60-minute special or something like that, which might happen anyway after what just happened today.
Heading into today, we were on pace for the worst month since April. So I don't know. I didn't look at the actual numbers, like how are we up on? Are we no longer the worst month since April? If we're up 35 on the day or 40, whatever we're up right now. But it hasn't been a good month. I'll put it that way.
No, not at all. Not at all. I mean, I'm almost tempted to do another one of these.
Do it.
Do it. Yeah, I don't know. We'll see how much cheaper it gets. We'll see how much further we bounce, and maybe it'll get interesting. I don't know. I might.
I mean, the zero DTs are attractive right now because the volatility is pretty high. So, I mean, there's a good reason to do those trades if you want to do them. I'm just largely, I'm letting my thesis play out. I got my VIX call spreads, like I said, they're basically synthetic long calls. I'm sitting on the sidelines and watching.
There's nothing wrong with that.
Back, I'm jumping in.
There's nothing wrong with that either. Yeah, that's good. Well, man, I'll see you on Monday. Back in the chair.
Right, man.
Yeah, man.
Well, have a good weekend.
You too, my friend. Folks, you guys have a good weekend as well. Thanks for watching us. We appreciate you guys for real. As always, be smart, be patient, trade them small and trade them often. We'll see you.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Hello, everybody. Tim Knight here. Well, what a week this has been. This has been sensational. Fair warning, though. Listen, and if you see me disappear from the screen, it's not because I've decided to run off and join a commune or something like that. Some of you who follow me personally know that the snoring dog that longtime viewers used to enjoy, my beloved Coda, passed away on December 31st at 1:30 in the morning. I was with her at the time. And this week, we got a new puppy in our lives who looks basically like a puppy version of Coda. And the little devil's been sleeping for a few hours. So if I hear a cry, I'm sorry, the puppy outranks you. And I'm going to leave for like 30 seconds. But so if I disappear, don't think I've gone insane, or it's just that's what's going on. Having said that, it won't happen. So you're wondering, why is the guy wasting my time? Anyway, I've got the charts ready. I have lightened up. I have been sensible for a change, and it's been a wonderfully profitable 5 days and 1 hour. And I think for the bears, it's terrific because bulls rally this market, bring it back, because I want to get back in again in a big way. As it is now, I've gone way back, like 40% cash now. And I think I'm out of semiconductors entirely. So, yeah, bring on the rally. I want to get back in, but as it is now, I have taken a lot off the table. Let's get into the charts. Here's the spider. We are below the multi-decade midline, but that ain't meant much in recent times. You can see it's happened like here. It represents either usually support or brief voyage beneath. But it's just, we've been beaten down pretty bad here. Now, mind you, last Wednesday was the highest level in the history of the universe for the stock market. So it's not like we're the tail end of a 3-year bear market. This thing's like the first batter up on the first inning kind of thing. What I'm saying, though, is that I would welcome, celebrate, and embrace a hearty rally for the first, 2 or 3 days of next week. Because I want to get back in, like I said. As it is now, it is no surprise at all that we're, up across the board on the ES, the NQ, and the RTY, even though those were all quite red earlier on. Here's the cubes, and those have fallen mightily from the highest levels ever, and then bang, 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 down, almost sealing the election gap, which I find remarkable that with all the pandering and promises and platitudes that this new administration has, that it's all almost zeroed out. All the gush has led to naught as of now. I fully expect soon enough we'll cut below this, and then we'll begin to see the losses below the election gap. But as it is now, gap is support, and I really last night just told myself it's time to back up, lighten up. The Nifty 50, I just show this because I think it's such a pretty little chart. This is doing great. I don't know if anybody had the means or interest or mechanisms to take advantage of it, but this is breaking down just nice. Always a bear market somewhere, but that's Singapore. It's breaking down nice. But the real winner for me, and this was really off the cuff yesterday, was China. FXI, I haven't touched this in the Kin's age. And yesterday I bought puts on it and shorted it and woke up to a nice fat profit. I took it, got out of the puts, and I'm hanging on to the short, the nice simple short. But it was just weird to me yesterday that FXI was up. So anyway, got bearish on that, and it's had good results. Also, to my regret, My beloved Brazil continues to fall. I've given up on this trade. Shame on me. And why did I do it? I've explained before, because we penetrated into this pattern to some degree, but it's going just great. It's going beautifully, and I'm not in it. But yeah, EWZ Brazil sinking nicely below the head and shoulders. You can see this is, in my defense, Your Honor, this is the sloppy, noisy instrument. It goes through periods, months sometimes, of just whacking out and doing weird things like this. No thanks. But as it is now, it's this violation notwithstanding, this has been a beautiful pattern and beautiful behavior beneath that pattern. Now, the man of the hour this week, of course, was NVIDIA. And that's long out of the way, so another 3 months till we have to deal with that again. But the plunge yesterday and the somewhat follow through today is what it compelled me to really clean out the store of any semiconductor stuff, because in advance of NVIDIA's announcement, I got out of NVIDIA puts and I got out of AMD puts, both at very good profits, and those puts just got richer in the wake of the report. But today, I got rid of everything. I sold SMH puts. I sold my ON puts, which I'll probably regret. But basically, I consider this really oversold. Some of those items, ON in particular, ON, I really want to get back into. They are fantastic long-term patterns. As it is now, don't want to get greedy. There's going to be a bounce, I think, maybe a big one. And I want to get in again at good prices. So, I've gone from I have not a penny to my name to 40% plus cash. Here's AMD, for example. And see, again, I was a little bit upset with myself for getting up, but look at this. It's green now, and it looks poised to bounce. And all right, great, lovely. Where's it going to bounce to? I don't know, but maybe something like that. Something along those lines. Maybe higher. It's gonna hit this wall of overhead supply and start to slow things down. But my target on this was down here. Ultimately, I think it'll get there. I don't know if that's really a target. No, it's not. I recant that. Just look at this lower lows and lower highs, though. It seems to me that's about all she wrote. That's good enough. So I just want to wait for a better price. Broadcom, this is a target on that one, and I think it'll ultimately be met. But I think we're going to undo some of that drop here yesterday before things stall out again. And ON, which is my favorite of these because it's such a well-formed long-term pattern, even with all this green, we're seeing a triple-digit green on the NQ. This is still down over 1%. I want to get back in so badly, but if we could bounce, say, halfway higher, like around there, be much more appealing. So, yeah, nothing to do with semiconductors anymore. And SMH, as I said, I'm out of as well. And this one was wild because this had been support here. Now it's resistance. So we're below that even. So big failure here, and you can see just how dramatic this plunge was. Yikes, I better pick up the pace. We are really not making much progress here. IBM, which I also had just stopped bothering with, this is just ticking down nicely. Look at this. It's like every single day without exception. Every single day, starting here, every day, lower low, lower high. Statistically, that's extraordinary to me. Some old classics here and good illustrations of good classic charting. Illumina, I haven't talked about this in ages, but you can see charts have memories. And, we fell below this pattern. It retraced all the way almost back up to the pattern and then fell hard some more. So even over a period of years, charts do have memories and they behave accordingly. Neighbors Industries, NBR. This is the kind of the fractal we talked about, this being a Pee-wee version of this. That's going really well. Oxford Industries cutting below its own top there. You can see how very nicely this prior top did. I think we're beginning the same situation here. Cognix, tremendous top here. Not so sure. It's never really had a top before, so I don't know what to expect. Although this top is 8 years wide. So that's a big one. Here's a new one, Brunswick. We've got a cut below here. And this one has had tops of the past. The most clean one is right there. So I think it's a shame that the volume's not better on this, but that looks promising as well. Carter's, diamond patterns up here, failure, retrace. Look at this, just collapsing beneath that. So I'm seeing a lot of these sort of egg-shaped distributions, I think is a good way to think of it. And United Healthcare, still in this one. And try though it might, both yesterday and today, this little dashed line that I've drawn, which is simply the low from here, this dashed line, that's the anchor point. It has conked its little head against that and can't seem to get past it. I've still got my puts. I will get right out if it violates that line, but as it is now, it's holding firm. I've mentioned home builders many, many times as a bearish idea, and I have lightened up on this one even more. Still in it, but to much less degree, because this was a beautiful gap seal right here. Here's the gap, and we've sealed it like crazy here. This is just like, nice craftsmanship on that one. And what would I like to do? Let's get this to rally. Let's get back to, say, this line and reload on that, because long term, there's still plenty of downside. Short term, I think this is very prone to rallying higher with the market in general. And I would also note an individual home builder, which I've mentioned, BZH. This is just pitch perfect in terms of its behavior, particularly with respect to what used to be support for a long time has become very clean resistance, like so. So very broadly speaking, here's the ES, the S&P 500 futures going back to their creation. And here's the channel most recently. We have violated the channel, and we did so yesterday, and we've stayed below it most of today. I think that's kind of a big deal. This channel has been intact ever since the October 27, 2023 bottom. And I'm thinking what's probably going to happen, what I would love to see happen, would be early next week, a rally, maybe 3 days, maybe 2, maybe a monster one-on-one. It really doesn't matter. But what we want to look for is how high will it rally? And it seems to me that this confluence of price action is a pretty good guess with respect to what are we going to rally to until we have a shot at this thing exhausting itself. Let's just think very crudely in terms of 6,000, just to put a number on it, something like 5,950, but let's make it 6,000 for a nice, big, round, easy number to remember. I hope not that high, but maybe so. So we'll keep an eye on that. I would also mention the RTY futures did punch a little bit below this Fibonacci. I don't think it's going to go slipping lower from there. Instead, what I think would happen, and this is an exceptionally clean trade, I believe, would be a modest rally back to the bottom of this pattern, and then get some action to the downside of a very serious nature. So I'm even more excited about what's coming than what we've just been through. I would also say adjunct to that, from a psychological standpoint, there's NQ, by the way, before I get into the final farewell. We've fallen all the way to the supporting line on this, as you can see. So this channel here, which goes back to January 2023, also tagged beautifully today, which is another affirmation of how important this support is, I believe. So psychologically, amongst other things, watch crypto. Ethereum found strong support at this line. We're starting to rally. Look for it to exhaust itself somewhere below this broken red trend line. If you have no interest in crypto, that's fine. It's still important. It's an important part of the atmosphere. Same with Bitcoin. We fell really hard, even got down to the 78,000s, which is a good, 40. It's many tens of thousands below the peak on inauguration day. Watch this line. 90,000 as our friend. We want to watch 90,000 or so as a ceiling. Crucially important. I'm going to hammer the table on this some more, even if you have no interest in crypto. It's very important to the zeitgeist of the equity market. And in closing, here's the old CompQ, the NASDAQ composite. And let's just tip our hats to this, because this is a wonderful example of the power of these gaps. There's the election day gap itself. Look at that. Almost a perfect seal. And it makes all the sense in the world. That going to rally from here and poop out somewhere around here, I think. And then we can get nasty again. So anyway, I hope you've had a very good week. And I told you, the puppy wouldn't say a thing because I made this big speech at the beginning. So that's good. I'll go see him now. Anyway, have a good weekend, and I'll see you on Monday. And thanks as always for joining me. Enjoy our time together. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
Sadnov, can you show him your Valentine's Day present? Please, this is the moment when Sadnov was happiest. There you go. That's Sadnov when he was eating his Barnaby's pizza. I made him a pillow.
Oh, nice.
I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sadnov. That's soon to be in the store. Your wife wants you to bring it home for the grandson. Hand to God, that's what she. I have it here. I'll send. You want me to send you a screenshot? And I said, would you like me to take this home for you? And I said, no, not me, the pillow. And she's like, oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it. I go, I don't know if Case is going to enjoy it, but the baby will enjoy it. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap.
People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow.
Can you see this?
Yeah. What is it?
I made this. We went glass blowing over the weekend. I made this.
Oh my God.
Oh my God, are we at show and tell now? What am I, back in third grade?
Beth, thank you. See, I'm very proud of it. It sits on my desk.
You went glass blowing?
Yeah. When was the last time you did that, sir?
I would never do that.
Guarantee you, if the missus said to you, we're going to go glass blowing and then hang out, there you go. You're blowing glass left and right. What do you got? I love glass blowing. Okay?
You become the best glass blower this country's ever seen.
I think we are on the precipice of a new star emerging in the world of influencer culture. I'm talking about Mr. Scott Sheridan. And I'm like, Scott, if you do take a Waymo, I was like, can you film it for me and send me the clips so I can put them on social? Scott is so natural, so just giving commentary. Check this out.
We're in a driverless car, my first time ever. Not really excited about the prospect of nobody sitting behind the wheel, but I'm with people I love. And if this is the way it ends, so be it. Solid A+ for this experience. Shout out to Waymo and to Jaguar.
Thank you from our new Tasty Live correspondent.
How's it light out now?
I'm going to say the word. I'm going to say the word. I'm going to say it. I can't.
Don't say it. No.
Do you have a beeper? Beat me.
Don't
beat
say
me.
it.
You are so freaking sometimes. I mean, honest to God.
I just want to know how you went from darkness to light.
It wasn't me.
The light out is not him. That's just B-roll.
That's a woman. That's like stock.
That's like a stock photo.
Oh my God.
Why are you putting stock photos in there?
Oh gosh, Tom.
This is pathetic.
Stupid. He's so stupid. My Taiwanese sources told me that you sometimes like to watch hockey games with toe spreaders on. Did you have?
Oh, the best. No, but I've got them on now. I do have them on now. It's the greatest thing I've ever done for my back.
Why do you have a toe spreader?
It's just amazing what it has done for my back.
Do you tap dance when you have these toe spreaders on?
I haven't started tap dancing yet. I'm a little upset about that. All right, I'm still working on that one. But no, I haven't done. But I do ride with toe spreaders on. Look at that. Those are good.
My toes are already webbed together.
He has his toes up in the air.
Yeah, your toes are webbed.
Yep.
Right. Do you have webbed toes?
Yeah.
All of them are webbed?
Yeah. So I can swim really good. Yeah, web toes. Yeah.
Yeah, I've seen you swim. Okay, so right, we won't talk about that.
TMI! TMI!
Get the full scoop by checking out the archives at tastylive.com.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. And what a day it has been, Sadnov. Even the S&Ps look like they're up 30 handles. They were just up, flirting with up 40 handles a moment ago. They were down significantly. Large range, I don't know, looks like about 70 handles top to bottoms on the E-mini S&Ps. Big volume, 2.18, and it's only 235 or so. That's volume you don't usually see at the end of the day. NASDAQ up 100, Russell up 6, and the Dow up 250. These numbers are actually small relative, but it seems like we've had a wild day today. Volatility basically unchanged. You don't see that every day with the market up 34 handles or half a percentage point. Volatility basically unchanged. Bonds up 22 ticks at highs. You don't see that every day either. 118.06. Bitcoin, after trading under 80,000, having itself about almost a $7,000 to $8,000 move today. Bitcoin's going to close basically unchanged at 84,000 and change, up $300. Oil down 41 cents. Gold with a big move lower, down 37 cents. That's a 1.25% move to the downside. Silver has an equally weak move, down almost 49 cents there, about a 1.5% move. Net gas down 9.5 cents. That's $2.5% move to the downside. Other stocks to the downside, Dell down $5 and change. PDD down $4. TSM, a lot of Chinese stocks. Baidu down 230. SMCI, the bloom off the rose there. Look at volatility over the last 5 days, and SMCI down 53%. Sadnov, you don't see that every day to the downside with volatility going no earnings or anything like that. Goldman Sachs to the upside by 12. Costco up by 11. Netflix up by 10. The first time Tesla's going to be up, I think, in about 2 weeks, up $8.60. That's all I've got right now, Sadnov. What do you think?
You're right about SMCI. That's a hell of a pullback.
Oh, man, SMCI volatility, you're talking about a suckage contract. Now, the vertical spread's traded cheap. You can only trade, if you were looking to make money, it had to be naked options. And those options was quite hairy with 100% vol or so.
Well, a couple of takeaways from today. Number one, they really haven't taken any premium out today at all for a Friday. They owe me a lot of money right now because
you're gonna have to wait till Monday.
Yeah, they're gonna owe me a lot of money on Monday morning. That's all I'm gonna say, because they pumped a lot of juice back into.
There will be hell to pay if you do not get paid.
There will be hell to pay if that money doesn't come back Monday. Because this morning when they were up 30, we were doing a lot better than this afternoon when they're up 30.
You had a good.
And I didn't do anything, yeah. So I think that somewhere some premium got pumped back in. I will say this: I thought this morning was a pretty easy buy. I thought this afternoon was a really hard buy.
Okay, I'll give you that too, because we had 5 pullbacks, maybe even 6 pullbacks.
Yeah, totally. But the one sell off at, like, let's call it whatever it was, 12:30 or so. That was a tough one. And, well, that's Central Time.
Yes.
It very much a capitulation-like day.
on multiple fronts. Definitely a capitulation in Nvidia this morning. That kind of reversal you don't see, but you also saw, like you mentioned, a huge reversal in digital assets, huge reversal in Tesla, huge reversal in MicroStrategy, huge reversal in Coinbase, Meta, everything. Apple. You just pick it. The Nasdaq had a 300-point reversal today. And with the heavy volume in the NASDAQ futures, heavy volume in the S&P futures, heavy volume all across, I think this is a really good short-term low. It's a capitulation day. It's
10 million SPY options have traded, almost 4 million Tesla, 6.5 million NVIDIA. Big day in the SPU options, 770,000 SPU options. Today was a busy day.
Yeah,
even the S&P's up 44.
10 million SPY contracts is huge. I think the zero DT traders got annihilated today.
You had to be quick. You had to be nimble. You had a bunch of pullbacks.
You had to be long. You had to be long options today to really have a chance. I think the zero DT traders got clipped. I think everybody else did okay, because I think this morning was. Was a little easier. The rest of the day was pretty tough.
The lows were pre-market in a lot of these stocks. I mean, Tesla was down $6 or $7 or $8 pre-market. It's up $9 now.
Yeah, you had to basically buy the opening, but you had another couple of chances during the day to buy it unchanged or down of the day.
Oh yeah, for sure. Everywhere on everything.
Yeah. It was a tough one. It was a tough one. Because at one point during the day, it looked like they were giving it up. It looked like yesterday all over again. And, at one point yesterday, they were up 40, then they were down. And then when they were down 20 or 30, you thought, okay, maybe they're going to rally. You and I both did. And then they closed down 100.
Yep.
So you couldn't take the risk today that you're going to have the same thing. So you had to kind of roll down and then, yakety yak right back up to new highs. But with the heavy volume, with the vol not going anywhere today, I kind of think they made a little bit of a capitulation type action. I don't know how long it'll hold. Maybe you got a day or two. Monday, Tuesday of next week, maybe you got a little bit of a, back over 5,900 in the S&Ps. Maybe you got a couple of safe days here, Monday, Tuesday, and then we'll see. I don't think we're completely out of the water. That's for sure. I don't think the down move's over. But a good save, a kick save and a beauty for the Bulls today. We didn't get hurt. We didn't get chopped up. We just got
up 47. I would have been happy with that. But as the day wore on, up 47. I would have been happy with that. But as the day wore on, no, I was not thinking up 47 at all.
No freaking way. When they sold off,
if we could make a 25 handle move to the upside, I would have said, okay, that's great. Thank you.
When they were down 25 or down 22, whatever they were, and they were down 25, I'm like, all right, I just need you to go back to unchanged and I'll be happy.
Yeah.
Because I wanted just to get some delta off, and I wanted to, I just needed them to go back to unchanged. And they did better than that. They went up 47.
Yeah. When you least expect
that I didn't need. But anyway, this is why we play this game, because every day, A, nobody has a clue, and B, every day is different, and every day they move around. It's never a dull moment. And the amount of liquidity in there, oh boy, it's pretty wild.
No doubt. Yes, sir.
Yeah. So I don't have. It was a crappy day for commodities today, and it was a pretty good day for most stocks. On the ugly side, I'm just trying to see if I have anything that kind of stands out. You mentioned the Chinese stocks. I think they were all pretty weak today.
Chinese stocks have been weak all day.
Any earnings plays for Monday? I doubt it. But
No earnings plays at all.
Okay. Earnings have been very good to us. Dell was another good one today. So, we'll continue along the same path if something pops up. I see no reason not to expect more of the same next week. I see no reason not to think that next week is going to be. I mean, maybe vol comes in a little because it didn't really come in at all this week. So, like I said, I'm sitting here saying the market owes me some money because I think it does. But
Sadnov, let's go one step further back in time. You remember the beginning of the year before it even started, we talked about maybe just jumping around a little bit and going absolutely nowhere. I mean, that's what you have here. Even the S&Ps basically unchanged for the year. I don't care what side of the aisle you're on, long or short. Nasdaq's doing the same, maybe a little bit weaker as of late. I mean, the Russell doing the same. The Dow, is the opposite of the Russell and the Nasdaq. I mean, we really have, these are year-to-date charts. These really haven't gone anywhere with the overall market.
Yeah, you're exactly right. But that's kind of the fun, traders love the slop. We love the chunkiness and the kind of end up going nowhere. Occasionally, we get whipsawed, and maybe more than occasionally, you get a little whipsaw here and there. People ask us all the time. They say, "Why don't you sell premium on Friday?" And
today might be that day, Sadnov. If you didn't have a position on, and I could ring a bell and say, "All right, traders, come to the table. I think it's time to eat." This would be it. If you're looking to sell premium going into Monday, if you like that risk.
It's funny because I'm sitting here thinking I didn't sell any index premium, but I'm kind of thinking, and all the indexes are very similar in IBR. Actually, I think
SPY's got a 34 IBR. Q's got a 36. IWM might be the 34 also. You're not going into the diamonds, so diamonds are 34 also. But anyway, they're all the same. Ooh, bunch of dividends today too. Check it out. TLT has a dividend also. Public service announcement.
Yeah, I think I'm going to sell a little. I hadn't sold any premium at all, and I think I'm going to sell a little of the. I think I'm going to sell a little premium.
SPY.
Qs.
Crude.
I think the Qs have a little. I think it's the Q worthy. I don't know. I haven't sold any at all, and I think what I'm sitting here talking my book. Like I'm sitting here saying, I think today's the day you got to sell a little something in the close, maybe a little delta neutral play. I'm not going to go crazy. I'm just going to sell a little juice in the close, and hopefully we can squeeze some stuff out of it next week.
You're just selling both sides, 445, 540 in the Qs.
Yeah, pretty delta neutral. Just put a little Q position on. Don't have any short premium in there. Just laid out a couple of tranches. Yeah, what the hell?
Why not? Man of your means. Even the S&P's up 52, so enough.
Yeah, that's okay.
Yep.
Didn't expect it, but not hurting us, so it's good. I mean, I would rather. I think Tasty Nation, based on the emails I received, needed a little bit of a rally today. So,
yeah, I would say we were in need of a rally. I was in need of a rally for sure.
So the fact that we were in need of a rally and we got a little bit of a rally, I would say that's good for everybody. So sure. So we'll take it. So sell a little premium here on the close. I like it, and I think the market owes us a little juice coming in Monday morning. So we'll see how much. We'll see if they take the weekend out. They didn't take it out today. Don't forget, you can join us on Sunday night at 4:55. Myself and Victor Jones. It's an all market discussion on Sunday night. So myself, Victor Jones, and then it's not a debate. And then we have Pete Molmat, our futures and Forex expert, and then Ilya, our, as we affectionately call him, our macro monkey. So it's a good title,
I gotta say you coined that phrase a long time ago. I gotta give you props. I've used it with my children. I've used it with my friends.
You called your children macro monkeys?
No, not macro monkeys, just monkeys in particular. Sometimes
no, I know.
Different adjectives
we've used the term
macro.
monkeys, but macro monkeys is a true term of endearment. Yeah, SPU's up 60 now. We like to say when you see this kind of move late in the day, one, heavy volume today. Probably, we got a little oversold the last couple of days, and also you probably had some scalpers get caught on the short side, given this run up this afternoon. So I'm saying, and given the huge volume in the S&Ps, there's definitely some flattening out. Also on Fridays, you tend to get, people trying to A, adjust for the weekend, and B, adjust for exercise and assignments if they're trading on some of the weekly stuff. So I think it's
not often you see indices up 1% like the mini S&Ps and the NASDAQ, and you see volatility unchanged. I mean, down 18 cents is nothing. I mean, this is the lows for the day right here. I know they got down to 1880, but so far this afternoon, this is the lows.
If you look at your P&L, actually, it just came in a little bit. Like my P&L just went up because they finally took maybe like a percentage, not a percentage point, a fraction of a percentage point out.
Mm-hmm. Instead of trading on Friday, you're trading on Saturday or something like that. Sure.
No, we're still trading Friday, I think. I don't think they took anything out earlier. I think they pumped it in. I think they may be taking Friday out right now, but they got Saturday and Sunday to come out on Monday. And by the way, this is the world we live in. It's a very weird world. I said it this morning. It's not normal, but it's normal for Tasty. It's not normal for the rest of the world. So bear with us on this.
Well,
go ahead.
No, I was gonna switch gears here for a quick second, Sadnov. You know what's not normal too? Sometimes Vanetta goes around the office and she she has you do compromising things, and you're a good sport about it. This time she had the whole office do a little something. Oh, can I play it? It's about 1 minute and 45 seconds long.
No, you cannot play it now.
No. I have to set up. I'm going to play it, John. We're going to play it.
But you can play it after the close. I don't want to play it before the close.
The music is just so spot on. Please go.
Here's a new challenge. Can you sit down on the floor without bending your knees?
What do you mean without bending your knees?
Try.
Well, how does anybody do it?
Okay, go ahead. What is happening?
When your legs don't work like they used to.
Oh no!
And I can't sweep you up.
It is Hitman.
There you go.
Bam. Take that.
We're doing a TikTok challenge. Can you sit down on the floor without bending your knees? Yeah. No, sit on the floor.
How the hell do you do that?
There you go. Yeah. Wow. All right, so you're live. All right, that's pretty good.
These guys are younger. It shouldn't count.
I'll back up.
Too young.
It's going down. I'm yelling to
Okay, send it.
This is the way I thought you were going to do it. Good job out of you, Sadnov. My man, the music that she played for you, I almost peed my pants when she first played it. That was so good. Even the S&Ps took a little run to upside here, up 67, Sadnov. Didn't see that coming.
I didn't think it was very good at all.
The Ed Sheeran song? Come on. That was great.
No, I didn't think it was very funny.
Well, I wanted you to trade some 0-day options on the close here, so good thing you didn't, Sadnov. Even the S&Ps
That's truly why I don't listen to you. I would have lost 20 handles.
Oh, you would have lost the whole nest egg. You'd actually be out on the street right now. I mean,
when you wanted me to do it, they were up 30, and now they're up 70.
You'd be living in your car. I wanted you to buy them.
You definitely did not. And you wanted me to lose a lot of money, which I didn't because I didn't listen to you. But
you did it all on your own instead.
Oh my God. This is not
even the S&P's up 72, Sadnov. Thanks, Donald. Thanks, Donald. Don't take no crap. Thanks, Donald.
Oh my God. I cannot believe they're going to be up 80. This is a squeeze. We haven't seen a little squeeze like this in a long time.
This is a squeeze of biblical proportions. This last hour of trade here, you're not no doubt about it.
And I don't care what
81.
anybody says. If you think you had this, you didn't have this. This is a squeeze-orama.
Yeah, you're not
So
kidding.
if you're wondering why this type of thing happens, it's not like all of a sudden everybody wakes up and decides, oh my God, we got to get long with 5 minutes to go on a Friday. It's really more of, there's a lot of people that were waiting to buy some stuff back to get flat over the weekend, that kind of stuff, and they just never had a chance. This is what they call market on close.
Yeah, this is called. You don't want to be in this position. Is what this is called.
This is
you don't
what
want to have
happens-
to be.
This is what happens when you don't manage early. Is really what you're seeing right now. This is in a accelerated state. So it's the same thing that happens over 45 days if you wait till the last week. But what you're seeing is all accelerated into one day. This is what we call the portion of the curve where you basically have no control. And it's that last, couple of minutes, hours, days, whatever it is. In this case, it's minutes. And, there's nothing you can do. There's just limited number of offers and way more bids.
It's the end of the month, too, just to put it out there.
Yeah, people trying to get flat. This doesn't mean anything to me, by the way, for next week. This could be, they were down 100 yesterday. Now they're going to be up 80 today. And they could be down 100 on Monday. It doesn't mean anything.
Sure. But you know where we are, right? We're 59.60, basically. I mean, we're right there at 6,000 again, going nowhere fast.
Yeah.
We were flirting with 5,700 this morning. 58.50 was our low. I mean, you're 100 handles above that now on the E-mini S&Ps.
Oh yeah, we're way. Yeah. No, this was a tough one. This is why even if you trade in the zeros, we don't like when you traded late in the day because you have no control over those last. Like Tony really wanted me to sell some premium 55 handles ago.
I wanted you to sell some put spreads in the 0 day. Don't lie.
No,
Thomas.
you didn't. You for sure did not. Absolutely, 1,000% did not.
I was just looking for something to do because I know you like the action.
You are such a liar.
Do you want me to come up with some other reason?
No, it's okay.
All right, okay. Apple came back today, up almost 2%, $4. Tesla came back today, up almost 2%. I'm sorry, Tesla came back today, almost 4%. That's $10. Even Google, which hasn't had a bid forever, is up $1.80, so off a 1% move.
Yeah, Google, we got a little lucky and we sold some puts in there today. But yeah, it's a crazy move late in the day.
Oh, come on. Day one, these stocks have gotten, decimated.
Yeah, they goosed them, man. They goosed them.
Yeah.
I don't care what. They just rallied 60 handles since we came on the show.
Yes, they did. And I was worried they'd be unchanged on the day.
That's what I didn't think. I thought at one point I thought when they got to the last half hour, they were pretty safe.
Yeah, but pretty safe. Maybe from up 30, 35 to up, 25, 20, maybe 40, but not up 192 right now.
No, this is like crazy numbers.
I think Trump probably tweeted out that he was only kidding about tariffs. That's what it must be. I have no idea.
Yeah, only kidding about tariffs, and he didn't mean he kissed and made up with Zelensky. Probably.
Oh, come on, Zelensky, get back in here. Don't be such a sissy.
Yeah.
Oh my God, he's got your negotiating power, Sadnop. I'll give him that.
Yeah. All right, well, let's see where they close them. I mean, they only got a minute left. They're not going to go.
You got less than a minute. Even the S&P's up 87. The 5K checks are in the mail, my Taiwanese sources just told me. That's what it is, from Doge.
Oh, yeah.
You're getting $6,000, Sadnov, because they've watched how you've traded over the years. Hey, we're going to take a quick 90-second break. That's a rally. Even the S&P's up 87, NASDAQ up 300 and change, the Russell up 21, the Dow up 575 on a percentage basis. I don't know. The leaders of the clubhouse are even the S&P, NASDAQ, and the Dow. I guess the Russell's the weakest of the group. Volatility only in by 38 cents. We'll take a quick 90-second break and come back. We got more Tasty Live with more programming. I'll see you on Sunday and then following on Monday. Peace. Enough. Good job out of you.
Right, very good morning to you. It is February the 28th. That's the last day, Mini Cooper.
Last day of February.
That's right. So how you feeling, sir?
I'm good.
Bit under the weather?
Bit under the weather today, yeah. And also a bit tired from last night because I was on the late shift and it was quite busy,
And so what was happening? Because it was a fairly lively market last night, wasn't it?
Yeah, so it was mainly due to Trump. So Trump, of course, announced on the 4th of March that the tariffs on Canada and Mexico